Hello everyone, good evening to all of you. आज है 16th of January 2025. वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे नेचुरल गैस को फ्लैट ओपनिंग हुई है। ऊपर रेजिस्टेंस जोन है, दो दो रेजिस्टेंस जोन साथ साथ में है, तो इसमें मैंने एक ही रेजिस्टेंस कर दिया यहाँ पे। ठीक है। 360 और 364 दोनों रेजिस्टेंस बने हुए हैं, तो एक ही कर चुका हूँ। हाई लेवल से सेलिंग का प्लान रखना, लोअर एंड से क्वांटिटी थोड़ी कम रखियो। नीचे देखोगे तो फिर प्राइस हमारे पास नीचे 344 के अराउंड कल वाला जो आपका एफईजी बना हुआ था वही एफईजी है अभी भी। एंड उसके नीचे देखोगे तो कल का एक सपोर्ट आप कह सकते हो, थोड़ा वीक मानना अब इसको। सबसे मेजर जो सपोर्ट है वो सीधा 326 के आसपास देखने के लिए मिलेगा। रेजिस्टेंस बता ही दिया, अच्छा रेजिस्टेंस है। 6:30 न्यूयॉर्क सेशन की ओपनिंग, यूएस मार्केट 8 बजे ओपन और 9 बजे नेचुरल गैस की इन्वेंट्री रहेगी। बाकी क्रूड ऑयल गैप अप ओपन हुआ है, ऊपर कोई लेवल है नहीं इसमें। मार्केट 15 मिनट टाइम फ्रेम पे इतने पीछे लेवल दिखा नहीं रहा, या तो फॉरेक्स का चार्ट यूज कर लो, नहीं तो एमसीएक्स में कोई नए लेवल बनेंगे तो विल सी दैट। नीचे सपोर्ट अगर देखोगे तो 6560 के अराउंड एक सपोर्ट है। कल का जो रेजिस्टेंस था वो ब्रेकआउट हो चुका है, तो वो एक रीटेस्ट की तरह काम कर सकता है 6770। यहाँ पर एक एफईजी है मार्केट के पास। एंड ऊपर कोई लेवल है नहीं, बनेगा तो विल सी। फिलहाल के लिए वॉल्यूम भी कम है। 130 हो गया तो लंदन सेशन ओपन है, थोड़ा बहुत मोमेंटम एक्सपेक्ट कर सकते हो। बाकी 7 पीएम पे रिटेल सेल्स, को रिटेल सेल्स और अनएम्प्लॉयमेंट क्लेम्स का डेटा रहेगा, गोल्ड और सिल्वर को इम्पैक्ट करेगा। गोल्ड और सिल्वर के लेवल अगर देखोगे, इफ यू लुक एट द गोल्ड एंड सिल्वर लेवल, तो फिलहाल के लिए अपने एक एफईजी पर है, ऊपर एक रेजिस्टेंस है 2711-12 के अराउंड। वहां पर एक सेलिंग देख सकते हैं। उसके ऊपर भी एक मेजर रेजिस्टेंस है, बट वो मल्टीपल टाइम टेस्ट हो चुका है, तो मेरे अकॉर्डिंग यही मेजर लेवल होना चाहिए। नीचे सपोर्ट आपके पास 2680 और 87। सेम फॉर सिल्वर, इफ यू लुक एट द सिल्वर, रेजिस्टेंस थोड़ा सा दूर है आई थिंक, इफ आई एम नॉट रॉन्ग। ठीक है, ऊपर एक रिटेस्ट जोन है $31 के अराउंड, एंड रेजिस्टेंस 31.50। नीचे सपोर्ट 30.35 और 30.66। यहाँ पर भी एक एफईजी है शायद बीच में, इसलिए रुक रहा है। लगाया नहीं है, देख लेना थोड़ा सा। यहाँ पर एक छोटा सा एफईजी बना हुआ है, ये बहुत ही स्मॉल सा है दिस वन। तो 30 मिनट टाइम फ्रेम यूज कर सकते हो क्रूड में, उसमें लेवल दिख जाएंगे आपको। 15 मिनट में ऊपर उतना पीछे चार्ट जाएगा नहीं एमसीएक्स में।
seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
A year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Asia is at the forefront. Knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me. But we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought. But I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg.
Morning from our world headquarters in New York. I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
This is the opening trade. Welcome back. With 30 minutes into today's session, you are seeing risk on across the equity markets. Gains of 0.5% across the European benchmark. France performing very strongly indeed. The CAC up 1.4%, lifted by what's happening in the luxury space. But we will focus now on autos, Guy, because we have some numbers coming through from Renault.
We've got the Renault numbers. We've got a broad... There's a little bit of good news coming through from Renault, but it's very hard to find good news when it comes to European auto stocks at the moment. As you can see, we are getting some outperformance there on the back of that. Feels like a very choppy trade this morning in terms of what we're getting. The headlines obviously are coming out of the luxury space, but it's nice to see maybe some good news being delivered for European autos. Horst Schneider, head of European Automotive Research at Bank of America Global Research, joining us in London around the table this morning. Nice to see you.
Good morning.
How tough a year do European auto stocks face this year?
Well,
how much bad news is priced in? Is all the bad news priced in?
It's always the same, like as in the last 2 years. Performance in 24 was terrible. One of the worst performing sectors.
Yep.
It's cheap now. Beginning of the year, the people think, well, maybe everything is priced in now. Can only get up, and therefore the start to the year, in all fairness, it wasn't too bad, right, in terms of share prices.
So what happens to the rest of the year? Do I want to carry on with this trade?
Again, as in the last 2 years, then probably I think in Q1, Q2, we should be not too bad. And then people feel reminded about the challenges that we face on CO2, on trade. And then towards end of the year, we probably come off again. We have got lots of CMDs coming up this year. So we have got Mercedes, later on Porsche. Nearly every German company is hosting a CMD in H1. And as always, ahead of the
Capital
CMD...
Markets Day, just for those that don't...
Yeah, exactly, a Capital Markets Day. And as always, ahead of a Capital Markets Day, people believe, well, they tell us something, how it gets better, and therefore the sector lives from hope at the moment.
You think winter is coming to the German auto market? That doesn't fill me with a great deal of confidence.
Hasn't it come already?
Yeah.
I would say winter is there. I would agree to that. Winter is there, right?
So what happens? Do you get mergers? Do you get more factory shutdowns? VW's avoided some of that. They've come to some agreements with union and with Labour. Does Labour have to make more concessions? What gives to get the German auto sector back?
But the key problem for all car makers, not just for the Germans, is there is a killer model is missing. Like Tesla had that with the Model Y, BYD had a few strong models. The Chinese have got strong models. Then you have got the impression there's a long-term future. The problem is at the moment that nearly every EV model has flopped. So what the car makers need is convincing product. And here the hope is a little bit on 2026 when BMW launches a Neue Klasse, Mercedes launches 2 new platforms, which get closer to the techniques that also the Chinese are using, and that's a hope that the product sells, right? And if the product doesn't sell, then of course you need restructuring, and next to the restructuring, then maybe you need government support, but that's something that the market does not really value, right?
But that's really interesting. You don't think this isn't necessarily an energy story, it's not necessarily a competition with China. Well, that's part of it, but the key thing comes down to actually producing a model that people actually want to buy. This is a design question for these.
Exactly.
So as an investor, do you sit out 2025 then until you get more details in 2026?
Think a little bit like that, because, I mean, you have got some product launches this year because we have tighter CO2 rules. Car makers need to sell more EVs, but it's not yet a convincing product. It's all about software in the vehicle. You need to use servers instead of microcontrollers in the car. You need to centralize the data streams in the vehicle. You need to have autonomous driving features. You get that more with the upcoming generations, and they come as of 2026.
You are close to these companies. Are they capable of delivering that kind of a technology? How fast is the ramp up? What's the rate of change here in terms of what you perceive is going on within these businesses?
I think they can manage it, but the problem is they're at the moment 4 or 5 years behind Tesla and the Chinese.
Does that gap close?
They also don't stand still. They keep running.
Yeah. So how do they close that gap? Do you need to make acquisitions? Is it about hiring software engineers? Is it about buying Rivian technology? How do you close that gap?
You name it. That's what they do. Rivian was from Volkswagen very important, but the problem is that the vehicles from this corporation, they come only in 27, 28, 29. It's a little bit late.
Yep.
BMW is maybe the earliest with a Neue Klasse. So that's 26, early 26. For Mercedes is close to BMW, but I think the content that they use is a little bit expensive.
But when was the last time Tesla had a new model?
Well, they have got now the Model Y facelift, but the last new model was basically the Model Y, right?
Yeah.
The Cybertruck, the Cybertruck, I would not really count it as new model because it's not selling in volumes, right? So the last real volume model was the Model Y. They launched now the low-cost car this year. That's why I'm saying H2 could be a little bit more difficult in autos, because Tesla launches maybe then the low-cost car, robotaxi in the US. BYD maybe is importing the BYD Seagull, should be a below 20,000 euro EV in Europe. And that makes, of course, life for European car makers more difficult in Europe.
What is the market share that China takes, ultimately, from BYD, XPeng and others, from European market over a kind of 1 to 2 year period? What are you factoring in terms of the market share that they take?
Well, the problem for the Germans, for example, is in China, the Chinese maybe take everything there. The Germans can just survive on the ICE vehicle. In Europe, it's a different question. Depends also on tariffs. But, of course, in the long run, they can take, I mean, long run means within the next 5 years, they may take 5 to 10% market share.
Does the perception of German luxury persist? There's been this kind of, you've got BMW, you've got Mercedes, you've got Porsche. Do these names have the same cachet in the new world that they had before? Because there must have, that was a huge benefit to them. Mm-hmm. And I'm wondering whether, I look at Porsche and I look at you look at a 911, you look at a Taycan. It feels like a very different set of products and a different idea being represented by these kinds of vehicles. Does German luxury, we spent the morning talking about Hermès and LVMH and Richemont, that persists, but does German luxury in the car sector as an ideal, as a kind of truth that existed for generations, does that persist in this new era?
Well, I would say depends on the product. If you look at the combustion engine vehicles, there is the luxury. They have got great 6-cylinder, 8-cylinder vehicles. It's like with a mechanical watch. There's no mechanical Apple. But when we look about EVs, it's digital. Yeah, there's also no digital Rolex. And if you compare, for example, a Xiaomi SU7 to a Porsche Taycan, I don't know, 3-4 times the price, and the Xiaomi SU7, same specs. Right, accelerates fast, good digital interior. It's probably not the same quality, but of course the price is a lot lower.
But does a market exist? It's nice to have a mechanical watch. Are people going to? There's nobody telling me I can't have one of those on my wrist at the moment, but there are people in Brussels telling me that I can't have a mechanical car going forward. The regulation is very different.
That's a problem. That's why the valuations are low. It's ultimately about DCF, terminal value, how can they compete on these new products. So therefore, it's going to be a difficult journey for them, definitely. And that's reflected in valuation.
Winter is here. Horst, nice to see you.
Thank you.
Guy's animated. Guy Johnson is animated.
I find Porsche just seems emblematic to me of how you make that transition.
Successfully or not?
I think the jury's still out, and it's really interesting to see how. And I think the Rolex comparison is really useful in terms of people drove these cars for what they represented in terms of the mechanical engineering. People have these watches because what they represent in terms of the quality and the craftsmanship. You see it in Richemont this morning, but you're going into a different world. Is the Apple Watch maybe the nearest comparison? I don't know. Of course, great to see you. Thanks very much indeed. Horst Schneider, Head of European Automotive Research at Bank of America Global Research.
OK, we switch focus to another piece of engineering next, because Jeff Bezos' new flagship rocket, Blue Origin, lifted off for the first time and successfully reached orbit in a crucial test of the firm's ability to challenge another one of Musk's businesses, SpaceX. While the New Glenn rocket's upper stage successfully reached orbit, the booster portion was destroyed as it attempted to land on a barge or drone in the Atlantic Ocean. Let's watch in.
Like this candle. Autopilot enabled. T-minus 10, 9, 8, 7, 6, 5, 4, 1. Lift off.
OK, that was the launch of New Glenn, a Blue Origin, of course, about an hour and 20 minutes or so ago. Bloomberg Aerospace reporter Kate Duffy joins us for more. How significant was this launch for Jeff Bezos and for the team at Blue Origin?
I think truly significant. This is the first time that they've ever tried out this particular rocket, the New Glenn rocket, and it's been delayed several times because of the vehicle itself and also because of weather conditions, but finally it reached orbit, and that was their key objective during this launch, to reach orbit. They did experience a sort of malfunction failure with the booster, but that's something that can be worked on. This is the first time they're testing out the whole thing, whereas SpaceX tends to test it out in stages. So it's incredible for them, and they're really pleased.
I'm sure they are really pleased, but this thing was meant to be used 25 times. You need to get that bit right. Do we have any indication as to what went wrong, how significant a failure that was? Is it an easy fix? Is it a difficult fix? Do we have any details?
We don't have any details yet. They haven't released anything about what actually went wrong. We know that it just didn't land on this floating barge in the Atlantic at the moment. They're yet to recover the details. They've been collecting all the data, so that the next launch will hopefully see this data being used and proven, and they can sort of resolve what went wrong. So
if they can get it right, how big is the opportunity?
Huge. I mean, this will make sure that they can stand up against the likes of SpaceX and the Falcon 9 rocket. This means that the Blue Origin can take their business into the satellite division as well. They've already got their space tourism business on the go with the new Shepard rocket, and the New Glenn rocket opens up a host of opportunities for them. They have so many contracts. They have about $10 billion worth of contracts at the moment, whether it be with Amazon, Telesat or AST. They're also on the line for sort of NASA contracts and contracts with the US government as well. So this will open so many doors for them. It is a very lucrative business at the moment, the satellite. There's so many sort of different opportunities to get into. There's so much demand in the market now. So this will really open up the doors for them.
Talk to us about that. So it has more New Glenn has more payload, so it can essentially carry more stuff up into space versus SpaceX's Falcon 9. Does that give them an advantage, and how long can they sustain that advantage if they start commercial operations?
Yeah, it does give them an advantage. But obviously what we're seeing is Falcon 9 is so far ahead of the game. I mean, both companies started working on their rockets at similar times. Falcon 9 is reusable, it's reliable, it's the most frequent rocket that's commercially used.
Is that because they have better engineers? Is it because they are testing and willing to break things? How did you get a 10-year gap in terms of the innovation for two companies that start at the same time with similar resources?
It's hard to know, but Blue Origin takes more of a traditional approach where it just tests everything in one go, whereas SpaceX it comes across as being more competitive, more sort of, let's just try this out, and if it doesn't work, we're going to go back to the drawing board board and just start again. And so what we've seen with them, with their Starship launch, which is hopefully coming up, is that they will test out these sort of dummy satellites that they're going to put into orbit with the Starship rocket, and hopefully they can use the chopsticks again to catch the reusable booster.
That's the technical term, isn't it?
Yes,
chopsticks.
of course, yeah.
It's incredible, though.
Yeah, it is amazing.
See it happening.
Visually amazing,
Yeah, and we didn't see it during the last launch.
No.
So hopefully, the launch that's going to happen in the next day or two, we will see that again.
Great stuff, Kate. Thanks for covering it for us. Bloomberg Aerospace reporter Kate Duffy joining us on what we have seen this morning from Blue Origin and the launch that has taken place there. We'll see another SpaceX launch a little bit later. We'll have some great coverage of that. I just want to break a bit of news that's coming through over the last few minutes. Benjamin Netanyahu's office is indicating that Hamas is creating a last-minute crisis that is halting the Gaza deal. The Israeli cabinet will now not convene to approve the deal until mediators notify Israel that Hamas has accepted all elements of the agreement. So an indication maybe that even phase one is proving difficult to land in terms of what we are seeing in Israel. Hamas, obviously the Qataris have been heavily involved in all of this. The US has been heavily involved in all this. But this is already proving difficult.
We have got so close so many times. We've never been closer than this. Phase one was meant to kick in, to your point, on Sunday. Is this a negotiating tactic to squeeze last-minute concessions out of Hamas by Israel? Is it something more fundamental? Is it a question of the cabinet? Is it a question of getting that support through parliament? We know the extreme right have been opposed to this.
That's not what the Israelis are saying. The Israelis are saying that it is waiting for Hamas to accept all the elements of the agreement. The implication there would seem to be that they're not pushing for anything extra. They just want Hamas to agree to what has been agreed. But as you say, it's not a deal until a deal is signed, and the deal has not been signed and approved, and we've yet to see it coming in. We're expecting this to happen on Sunday, aren't we? So does that deadline now get pushed out until the early part of next week?
Given that all hopes had been that you get this before the inauguration, of course, of incoming President Trump on the 20th. So we continue to monitor this story for you, evolving as we speak. We continue to keep across for you in terms of the details regarding that ceasefire that is looking a little more fragile right now. Coming up, European semiconductor stocks jumping after an upbeat forecast on AI spend from chipmaker TSMC. We dive into the numbers next. This is Bloomberg.
Suppose I want to buy a computer, but I want to have AI in my computer. I want to be really up to date. Do you have AI in your computers yet?
No, not yet, but it's coming soon. And we think this is going to be one of the largest transformations in the PC industry in decades. What will be possible starting this summer is to run large language models in AI PCs, which means that what today all of us are doing in the cloud, where you use any of the applications that you can, you will be able to do it locally. And what this means, which is why we think this is important, is it will be much better from a cost perspective, because running models in the cloud is expensive. It will be better from a security perspective, because you will be able to use the model with your own data locally without having to upload your data to the cloud, and you will be able to do it anywhere in the world. And also for applications where speed speed is important, where latency is important, you will be able to do it locally much faster. For example, in gaming, where the game needs any resource the computer have, it will be a much better model. So it's going to be a big change starting this summer.
At the same price, too.
Slightly higher price, but if we look at the increase of price versus the increase of value, not comparable.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute technology news whenever and wherever you are. I'm Ed Ludlow at CES in Las Vegas, and this is Bloomberg.
Welcome back to the opening trade. We are 48 minutes into the Thursday session. We're seeing further gains across equities. European stocks are up 0.5%. Futures stateside pointing to gains of between 0.4 and 0.6. Over in France, the CAC 40 up 1.5%. Luxury is one of the key drivers on the back of Richemont earnings, but technology as well as a sector also giving Europe a lift. On the tech stocks, you have BE Semiconductor, you have ASM International and ASML, all amongst the leading gainers right now. ASML, the maker of those lithography machines, up 3% so far in the session. That's tied to the earnings and numbers coming out of TSMC, which projected quarterly sales and capex ahead of analyst estimates, up to $42 billion of capex, fueling hopes that the spend on AI hardware will remain strong for this year. Let's get the details of the analysis with Stephen Tung, senior tech analyst for Bloomberg Intelligence. Stephen, what is your making of the results and how they compare to market expectations? Because investors are cheering these results from TSMC. Does it support a stronger outlook for this business?
Yes, I think obviously the company reported a pretty strong set of results for Q4. Pretty much it will come in above expectation in all metrics, revenue margin, earnings, you name it.
नेचुरल गैस सेल कर सकते हैं। हाँ, नेचुरल गैस सेल कर सकते हैं रेजिस्टेंस जोन के अराउंड। दो रेजिस्टेंस एक्चुअली बहुत पास में, इसने एक ही बना दिया मैंने। ठीक है, नीचे एक एफईजी है और फिर आपके पास ये कल वाला एक सपोर्ट है और नीचे एक्चुअल सपोर्ट है। यहाँ पर थोड़ा बहुत रुकेगा ये एफईजी पर और ये सपोर्ट पे। ये वहाँ पे 2 बार सपोर्ट ले चुका है। ये लेवल काफ़ी अच्छा लग रहा है 326 वाला। तो ये सारे लेवल है जहाँ पर थोड़ी बहुत बाइंग एक्सपेक्ट कर सकते हैं। बाकी क्रूड में कोई लेवल है नहीं ऊपर, रेजिस्टेंस 15 मिनट में इसने लगाया नहीं है। एफईजी है, शायद थोड़ा बहुत रुके यहाँ पर, कोई नया रेजिस्टेंस बनेगा तो देखेंगे, नहीं तो 30 मिनट टाइम फ्रेम को यूज़ कर सकते हो। 15 मिनट में तो और कोई रेजिस्टेंस है नहीं।
We're talking about over 30% growth in capex. That's obviously a very strong number. And in terms of demand, the management continue to expect the AI chips to grow. They are looking at a more than double growth this year after triple growth last year. And then in terms of the revenue, they also expect the 5-year CAGR to be at least 20%. So all these metrics suggest the company's confidence, and obviously they are very confident on AI and also the ongoing upgrade in the process technology.
Steve, I'm going to leave it there. Stephen Tung, senior tech analyst at Bloomberg Intelligence, joining us on what we're seeing in TSMC. I urge you, there's a great story on the Bloomberg talking about the gap that exists, the multiple gap that exists between the ADRs and what is listed in Taiwan, and just how big that gap is, and maybe just how that represents, you see it there, how big maybe a gap that represents in terms of the outlook and the euphoria around AI. Let's talk about what we've got coming up for the rest of the day. Bank earnings continue. We'll come back to that story in just a moment. We've got Morgan Stanley earnings. We've got lots of things to talk about in that space, particularly following yesterday. Retail sales are going to be interesting, really interesting. The consumer remains at the heart of this story. How strong could potentially they be? What is happening with the inflationary impulse that's coming out? Maybe of the consumer. We'll learn more later. Claims are obviously going to be in focus.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
We're a few seconds away from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Chung-Wilkins with David Ingles. Now, really, we're starting the day with a lot of political news. Of course, that Biden farewell speech, but also this news of a potential ceasefire in Gaza, as well as these tariffs potentially launched by Canada. Now, both of those things, sort of the gyrations of this pending Trump presidency that's coming in. We're already really so acutely starting to feel that here in Asia.
Yeah, we are, and I mean, it certainly showed up in the form of an oil price, and certainly a conversation to have whether or not the premiums already been priced out in anticipation of this. There's also the inflation story, speaking of energy prices,
right,
that's also playing out across risk assets. And as you can see, at the open, on the onshore markets today, tailwinds are being felt just about across every corner of the region right now. 0.5% on the CSI 300, and as you can see, most of these big, heavily weighted stocks, bottom of your screens, are also feeling those tailwinds coming through. The open in Hong Kong, which is arguably a lot more outside-oriented than the mainland. Very quickly, have a look at that, and there we go. Yep, up about 1.5% in the early goings here on the tech gauge. Flip the boards, please. And the story really across the region is not so much an exclusive one to Hong Kong and mainland China. It's really almost this everything rally, with the exception of the U.S. dollar that's taking place. Relief rally as CPI came in slightly or a touch softer than estimates, and certainly the pricing around the Fed and that future rate cut, and the next rate cut at least, being brought forward now from September to, as you can see, July. Let's have a look, please, at the Asia situation right now across the board here. So lots to consider still. We'll talk about Korea in a moment. Top of the next hour, Jakarta comes online, and we'll be watching that market specifically more closely than usual because of the surprise rate cut coming through out of BI, Bank Indonesia. Everything is on the way up, and as you can see, the yield picture, too, in the U.S., 2 and the 10-year yield reversing some of the, by the way, very steep drop in yields overnight. The U.S. Treasury Index, the Bloomberg gauge of that, had the best week in several weeks overnight. As you can see, the Japanese 10-year yield, Aussie 10-year yield following what we had in the Treasury markets overnight. And just very briefly, speaking of surprises, BOK standing pat for, I think, the first time, really, in 3 meetings. And unexpectedly so, as far as markets go, I think when you look at pricing right now, it seems to be U.S. inflation seems to be the more dominant theme right now, although it's worth noting that we're coming off highs a little bit in the equity market and also the bond market over in South Korea. Okay, let's put everything together for you. And as we go through that, just to mention, we're getting more lines coming through here out of the BOK statement that it'll be examining the pace of rate cuts to ease the downside risk to the economy. Mark Cranfield joins us out of our MLive team in Singapore for us. Yeah, Mark, it's good out there today.
Yeah, everyone's happy. I see lots of green across my equity pages today. I think what you're getting is some huge relief. Although I tried to diss the CPI numbers yesterday, massive relief that they came in on the soft side. Now, you can say a number of things here. Obviously, market positioning is a big factor of that. People went in on the bond market point of view considerably short, so there's a big short squeeze there across the bond market. Equities hadn't had a great start to the year, and there's massive relief that there was even whispers the Federal Reserve may even need to hike by the end of this year. That clearly looks like a very big hurdle now when you consider this CPI number. Of course, everything can change once Donald Trump gets into the White House, because it's a backward-looking indicator. It tells us about what was happening up to the end of last year. Depending on what policies are put in place from next week onwards, of course, the outlook could change considerably. But it will be certainly a factor for people to say at least we're coming from a lower base, and the chances are that the Fed, they're not going to be able to lower interest rates. And once again, the market is going to get ahead of itself. They're going to even start thinking about rate hikes in the third quarter of the year. That's way too early, most likely. But when positioning is so skewed one way, of course, it swings back the other way. Now people will go to the other extreme until we get more clarity on who is going to be hit by trade tariffs, how much taxes are going to be cut, how much stronger the U.S. economy is. Look at the bank earnings yesterday, absolutely incredible. JP Morgan, $50 billion in a year. I mean, that's absolutely amazing. No wonder equities are so happy.
Mark, just to your point on the sort of uncertainty of just how reassuring or how long-lived this calming effect might be for markets, but a couple of surprise pieces of news. The BOK, of course, not cutting as we thought, and then Bank of Indonesia actually now surprised us with a rate cut and this intervention in the FX market. Just break down what some of those surprise moves mean, how investors are digesting that news.
Oh, it's great for foreign exchange traders. We love it when it's unpredictable like that. So it's bringing back the old days, really, in the foreign exchange sense. Clearly, there's a battle here. Central banks in general, Asian central banks especially, are considering what does it mean in terms of allowing their currencies, how far can they be allowed to fall in relation to the major currencies? Well, one of the comforting things for them is that if you look at the G10 space especially, there are so many beaten up currencies there, the pound, the New Zealand dollar, Australian dollar to some extent, that even Asian currencies which are allowed to decline are not going any more extreme than what you're seeing in the G10 space anyway, partly under the cloud of an enormously strong US dollar. So Bank Indonesia is surprised, but allowing their currency to weaken a bit is within the context of a very, very strong dollar dominating the emerging market space anyway. So they can get away with it to some extent. Bank of Korea here is probably only buying a little bit of time. They will surely want to lower the interest rates again. It is probably simply because no matter they're talking about other factors, but this is purely a political decision. They're waiting for the political conditions to settle down, waiting for the president to be charged with whatever it is since he's been impeached. There's going to be some conditions set on him there. They just want that to die down, and then they can get on with lower interest rates. Doing so in the middle of a political crisis is not usually a smart move, and the Bank of Korea have taken that into account. That's really what it's all about. Not much to do with other factors such as currency and inflation, if truth were told. And then you look ahead, you've got Malaysia coming up, Singapore coming up. China still needs to lower interest rates as well. Pretty exciting time to be an Asian foreign exchange trader.
Bloomberg MLive strategist Mark Cranfield in Singapore. Now, another of our top stories today, Israel and Hamas agreeing to a ceasefire deal that includes a 6-week pause in fighting and the release of dozens of Israelis held hostage by Hamas, along with hundreds of Palestinian prisoners. Senior editor Bill Ferries is with us. Bill, just break down what we're seeing in the latest ceasefire agreement. It looks very similar to what we were seeing in August. What's actually changed since then?
Well, not a lot has changed in terms of the outline of the agreement that we're still waiting on Israel to formally accept. It involves a 6-week pause in the fighting. It involves the release of about 36 hostages, about 24 of which are believed to be still alive, according to our reporting. It requires the Israeli military to pull back away from urban areas and allow hundreds of aid trucks a day to start flowing back into Gaza. But what has changed, of course, is the reality on the ground. Hamas's leadership was decimated in that time. It's Hamas's key patrons in Iran and Lebanon have also suffered a lot of damage to their leadership structures. So it's a very different political environment and, frankly, a different military environment. Hamas still exists as a force. Israel hasn't eliminated it as it sought. But it is an important first step in a conflict that's been going on for 15 months. There's still going to be a lot of negotiations over what we're calling the phase 2 of the agreement. That would be basically a permanent end to this conflict, and then a phase 3 that President Joe Biden was just laying out in his farewell speech, which would involve final transfer of remains. This is still very much a tentative deal. It could extend beyond the 6-week agreement we have, but it is, I think, a positive step for everybody involved in what has been a long-running conflict.
Bill, I think you highlight a key nuance there. The risks between where we are currently and phase 2.
Yeah, so this is very much a temporary ceasefire. Hamas and its allies have been pushing to have this basically be a permanent end to the conflict. Israel has pushed back on that. They say their goal is still the elimination of Hamas's political and military power. That has not happened yet. Hamas has been recruiting fighters through this whole conflict. They continue to push back on Israel in certain areas. So the fragility of this agreement is very real. And so the deal is, if negotiations are still continuing at the 6-week mark, then the ceasefire can continue. But if negotiations break down over a final peace, you could have a resumption of conflict at the end of it.
Bill, thank you so much. Bill Ferry's there with the latest on the ceasefire in Singapore for us. Just a look at some of the movers. 9 minutes into the cash market session here. SMIC is a big one to watch. We're looking at a fairly substantial move in the stock. The biggest points contributor right now to the Hang Seng Index, up 6.5%. Might be down to the fact that you had this story around TSMC and maybe limits there to how much it can actually sell into the Chinese market. Perhaps that could be it, but as you can see, of course, it's a broad rally across a lot of these sort of high duration assets on the back of low rates and the prospect of that. TSMC, by the way, want to watch specifically, out with earnings as well. Keep an eye on that. Very quickly, Asian financial stocks, lower rates might mean, we'll see, there we go, slight modest upside to some, not all, in Hong Kong property stocks on the back of a similar story. If we do get lower rates in Hong Kong, if the Fed does, of course, deliver in July, that could be a tailwind. And as you can see, that's playing out in the early goings, Rebecca, of the Thursday session.
Yeah. We're speeding through the week.
Yeah.
And still ahead, we dive into the future of quantum technologies and the recent volatility in some of the sector's stocks. Jack Hidari, CEO of Sandbox AQ, joins us for that conversation next. This is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Right, welcome back. You're watching the China Show. A recap in case you missed this massive rally overnight in quantum stocks. You know, this group has actually delivered quite a bit of alpha if you look at it over, the last 3-4 months or so. Had a bit of a scare recently, that massive drop following comments out of Jensen Huang that quantum computing might be, at least useful quantum computing might be at 2 decades away. And then we had a rally again overnight into where we are right now. Bill.
Yeah, well, that's it. I mean, it's sort of been a bit of a whipsaw, really, and it all comes back to NVIDIA. So, yeah, you said we had Jensen Huang's comments last week. Overnight, they also said at the upcoming GTC conference, which focuses on AI technology, it's going to have its first ever quantum day, and that's why you really saw that big rally off the back. The focus isn't just on the future, it's also on the applications that are already in use today. And so I want to get more on that now, bring in our guest this morning. This is Jack Hittery. He's the CEO of Sandbox AQ. AQ because there's AI and then there's also quantum in the title, and it really speaks to how these two technologies are being used together. So, Jack, thanks so much for joining us. We'll get to Sandbox AQ in just a moment, but first I do want to get your reaction to not only what Jensen Huang said, but also to this now inclusion of quantum in the upcoming conference.
Annabelle, great to see you. Great to be here live on air with you today. It's a very exciting time, both for AI and quantum. First, I should say that when we look at AI, there's really two kinds of AI that are now emerging. And NVIDIA will be speaking about this, I think, in their upcoming conference. There's the language AI, which we all know about, ChatGPTs, Google Gemini, all the wonderful language AIs out there, LLMs as they're called, large language models. But there's also quantitative AI. And quantitative AI, large quantitative models, incorporate quantum equations into the AI, and that's running today on NVIDIA GPUs and on other specialized chips. So that's happening right now. Even before quantum computers arrive, we're doing molecular modeling. The industry is doing molecular modeling on NVIDIA. NVIDIA is very, very focused on this, on scientific and quantitative AI. This is an emerging area that will get big play, we believe, in 25 and 26. On your question about quantum stocks and quantum computing, it's certainly scaling well. The Willow announcement from Google was a major milestone demonstrating that error correction can work. That was just a few months ago and obviously sent a lot of the stocks up. There were some moderating comments by others, but net, if you have a mid to long-term view, you're going to want to have exposure to quantum because of its massive impact on computing and on life sciences, on chemicals, on financial services, on most of the major sectors in the economy today.
Yeah, it really promises a lot of different breakthroughs. But Sandbox AQ, the focus is on sensing technology in particular. So there's a lot of different use cases of that, but how are you applying it and how are you integrating AI as well?
Annabelle, there's so many applications now of quantitative AI, these LQMs, that we just talked about. First off, look at biopharma. Just came from the JP Morgan conference, the big healthcare life sciences conference that they hold every year in San Francisco, and presented there. And what you're seeing happening is that we can change the curve. Right now, before AI, it takes about 5 to 10 years to get a drug ready for phase 1 trial. Then it goes to 5 to 7 years of trials, and most of those fail. We can now bend that curve with quantitative AI. Language models, Annabelle, not really fit for purpose for developing a new medicine for cancer, for Alzheimer's, for others. But AI that's trained on chemistry, AI that's trained on biology and pharmacology, this is the LQMs, not LLMs, but LQMs that really are impacting things right now.
Yeah, that's it. Some people might say that we've sort of over-indexed maybe a little bit on LLMs so far, but LQMs, to your point, just talk us through again more details. I mean, they're quite difficult to train these models. How do you go about doing it?
It's a fundamental question you're asking. So in the case of large language models, we know how they're trained. People hoover in the entire internet. You need a lot of words to train these language models like ChatGPT, like Gemini, and others. In the case of large quantitative models, we do not take anything from the internet. No data coming from the general public out there. Instead, we're using equations. The equations that have been given to us by the greats, Schrodinger and many others, that tell us how electrons and atoms interact with other electrons and atoms. So if you have a drug candidate and you want to see if it's going to bind to that receptor, that target in the body, we can train on a data set developed by the equations themselves. So this is very pristine data. Unlike the language data that's very fuzzy, you get a lot of hallucinations. We don't see that in the quantitative world. We're getting pristine data out of the equations. We're building data sets. This is a big difference, Annabelle, in the LQM side. We have gen data. We generate the data. This is new synthetic data coming out of the pristine equations, training the neural networks, and then coming out with a handful of solutions that then, of course, are validated and tested in the laboratory and then ultimately in trials. This has now been cutting down by 6-7 years the time it takes to get a particular compound to clinic. It's cutting hundreds of millions of dollars off the cost of developing drugs. Ultimately, this leads to lower cost drugs for more people.
Obviously, as well, that there's a huge amount of interest in this from investors, and you just closed your latest fundraising round at a valuation of $5.6 billion. How are you planning to use these latest funds, and what's your company outlook for this year?
Well, great question. We raised over $300 million in this particular round. That brings a total of $800 million that we've raised for Sandbox AQ since our spin out. And we're focused on a number of key areas. First is product development. First use of proceeds is how do we continue to develop our products? This is enterprise software that sits on the cloud, sits on all the major hyperscalers out there. We're utilizing NVIDIA GPUs and making this happen, making this possible. We're going to invest in that product development. I mentioned life sciences already, but that's not the only area that we're involved in. We're also involved in battery chemistry, in catalysts. Catalysts are the lifeblood of industry all over the world. And so be it biology, be it chemistry, be it financial services, we're investing in these enterprise solutions that sit on the cloud, that serve these customers with large quantitative models that complement the language models that there. One way to think about this, Annabelle, is that language models like ChatGPT save you money, they cut your costs, whereas quantitative models are value creation. If you're a drug company, if you're a chemicals company, if you're a car company, if you're a space company, you want to create a lot of value. And that's the product development that quantitative models can give you. The second use of proceeds, of course, is go to market. We've been around the world talking about our different products, just coming back from Europe, now going back to Europe to the Davos World Economic Forum, where we'll be presenting there. So many companies, so many governments there we'll be engaging with. And so this is a global phenomenon, the rise of quantitative AI and A&Q.
There's no specific country leader at this point in time. We see a lot of different companies and different countries, of course, that are investing heavily in this. But I want to get your response as well to what we've seen this week, and that's further restrictions on China's access to cutting-edge AI chips from the US. There are some who would say that China is maybe at least matching the US, maybe it's beaten in quantum sensing technology. What do you make of these restrictions, and how would you look at China's progress in this area as well?
Well, there's no doubt, because the prize is so big, the prize of AI, first with language AI, and now with quantitative AI, and then ultimately also adding quantum into the picture, many countries are going after this. There's going to be a number of key summits on AI coming up in UK and Europe very soon. UK on Feb 7, and in France for many different European countries coming together in Paris for the big AI summit, Feb 10, Feb 11. These will be key summits that global leaders will be coming to. I believe there's more than 80 heads of state coming to the Paris AI conference. So it has caught the world's attention. It's caught the C-suite's attention. And of course, China and other countries are going after it as well. Intense focus of the engineers, of the universities in these areas. And of course, they're looking for the chips to make this all happen, the compute to make this all happen. NVIDIA, certainly the global and dominant leader. China, for its part, having been cut off from that stream, is now developing some local abilities to develop chips on their own. And so there's going to be a very interesting arms race that we'll witness over the next 5 to 7 years as the U.S. and its allies and China begins to focus on its local development of chips. It's going to be fascinating to watch.
All right, Jack, safe travels to Davos. I'm sure you're going to be having a lot of interesting conversations next week. That was Jack Hittery there, CEO of Sandbox AQ, and we'll have plenty more ahead. This is Bloomberg.
Right, so welcome back. You're watching The China Show. So bulls are taking advantage of this extremely brief and hopefully not as brief window to buy in some of the sort of battered stocks. Some of your property, and we cross that with, of course, some of your sort of distressed assets, and we're seeing some gains there. Very quickly, Xiaohongshu or Red Note linked stocks on the back of, I guess, this reports that Donald Trump might use an executive order to save TikTok, limit up India onshore markets. Middle markets are doing this, Hong Kong markets too, 24 minutes into the trade, and really underscored and anchored by this broad risk rally, this everything rally that's seeing the MSCI Asia Pacific Index on track for the biggest gain so far in several weeks. Plenty more ahead. This is Bloomberg.
Welcome back to the China Show. Here's a look at the HSI about half an hour into this session. We are still up. It does look like the sort of everything rally that we saw overnight coming into Asia also playing out in Chinese equities again today, Dave.
Yeah, markets really needed that, almost a circuit breaker from the soft CPI print from the U.S., right? Seeing how, I guess in many ways, extremely crowded these long dollar trades were, these sort of short Treasury trades were. In fact, when you look at the options market, there were people who did manage to clock in quite a bit of profit overnight with those bullish calls coming in a few hours before that CPI print. So good on you. The story across markets, as we were pointing out, is really one that is seeing most risk assets on the way up, including China, Asia X. These Chinese markets are doing very, very well, including, by the way, we'll get to the Korea story in a moment, including still Korea, despite the fact that the BOK maybe chose this meeting to take stock, if you will, given the two successive rate cuts already going into the current or this today's meeting. The other central bank story to tell you about is a market that is coming online right now. We should have pricing already out of markets in Jakarta, and there we go. Yeah, so two things here, right? A pleasant surprise out of US CPI, arguably a even better surprise coming out of their own central bank with that rate cut midweek. I believe not a single economist called that, but I guess such is life, isn't it? There we go. Some of your rate-sensitive sectors are on the way up, including property, which is, by the way, a story we're seeing across the region today. Speaking of central banks, Korean assets doing this. We talked about us coming off highs a little bit on the equity and the bond market, some strength coming through in the currency after that hold out of the BOK, and they'll be unpacking that, and I believe, and I would expect really the central bank governor to really field a lot of difficult questions around why they chose to do what they did. The briefing begins in a couple of minutes, and of course we're looking at oil prices here, Rebecca, on the back of this, all the geopolitical stories, including, of course, the ceasefire.
Yeah, big story for Asian traders waking up, of course, this ceasefire. It is worth highlighting it's sort of a tentative deal and fairly similar to the one that was proposed back in August. But one big difference, of course, is we have Trump coming in, potentially the most, or at least one of the most pro-Israel presidents, and perhaps Israel wanting to start on a very positive footing with Trump. Trump, of course, already in some ways advertising how well and how adept he can be at trying to sort of push forward some of these deals.
Yeah, and we're just coming off the farewell address, too, of President Biden, and I think it's interesting, the context here is President Biden then saying, the reason we're here was because of months-long, very difficult diplomatic conversations. Donald Trump then came out and took credit for this and said, if he hadn't won November, we wouldn't be here right now with these elections. And I think it's also worth noting, what does this mean for the Abraham Accords, which started, of course, in the first Trump White House right now. Okay, by the way,
a little bit of news coming through.
Yes,
more on the central banks, BOJ.
Go ahead, why don't you take it?
Well, so we did have Ueda already hinting at this possibility of a rate hike. We now see that the Bank of Japan saying that there is a good chance of that January rate hike that Ueda had already hinted at. BOJ said to depend partly on no negative Trump surprises. So again, that sort of calibration that perhaps we also saw a little bit of when it came to Bank of Korea, perhaps also calibrating, taking a beat, waiting to see what happens when it comes to those tariffs, Dave.
Yeah, we're looking at the Japanese currency right now is up quite substantially, dollar yen down as you can see on the back of this news. So we're 9 days away from the DOJ decision. I'm looking across my FX board just to give you a bit more context in the move we're seeing across these FX markets. And the Japanese yen, well, here we go. It's currently up against every single one of its major peers, all the way down from the South Korean won through to the Mexican peso. Okay, we'll leave that. We'll table that story for now, and talk about going back to geopolitics here. Politics. That's our other top story today. With President Biden has delivered his farewell address, listing his achievements over the past 4 years, while also voicing his concerns about the future of the United States.
I want to warn the country of some things that give me great concern. This is a dangerous concentration, and that's a dangerous concentration of power in the hands of a very few ultra-wealthy people. And the dangerous consequences if their abuse of power is left unchecked. Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms.
Let's bring in John Harney out of Washington, our Bloomberg editor. John, a pleasure to have you on the show. What were the key takeaways for you from the speech, which I believe ended about 30 minutes back?
It was his valedictory address, if you will, after more than half a century in American public life. But he drew an interesting parallel between the end of his presidency and that of Dwight Eisenhower in 1961, in which Eisenhower warned of something called the military-industrial complex. Biden gave a similar warning and called the tech-industrial complex a threat, and the rise of misinformation and the lack of standards and the lack of fact checks on social media companies. And it was a criticism, I guess, of the incoming Trump administration, President-elect Trump's campaign was supported by many people in Silicon Valley, and he has been welcomed by people like Mark Zuckerberg, and of course the wealthiest man in the world, Elon Musk, is one of his most ardent advocates.
Thanks, John. I mean, I just want to pick up on your point there about some of the warnings that, President Joe Biden offered. He mentioned this dangerous concentration of power of a few ultra-wealthy people and the dangers of an oligarchy in America. I just want to ask how resonant you think that message is with Biden's audience, and is it something that, people will receive at this moment?
It's certainly has a audience, but similar. That some of this was the basis or formed a good part of Biden's campaign for re-election, and then after him, Kamala Harris, and while it resonated, it didn't resonate enough with American voters who were far more concerned about things like inflation and the course of the economy and immigration. So, this may be something that will be remembered going forward. This farewell address as something that was prescient, or maybe not. It was. It was a remarkable speech from someone who's had a remarkable political career. And at the end, he said, "Now it's your turn to stand guard."
Bloomberg News editor Johnny Harney there for us in Washington. Now, we have had news overnight of a possible ceasefire deal in Gaza. It looks potentially similar to what has been discussed over the past 6 or 7 months or so, but of course coming really close on the heels, in fact potentially before incoming President Trump takes up top office there. Both Biden and Trump to some extent claiming credit and their role in bringing this about. But to understand precisely what this deal might mean, some of the challenges and risks around it, let's bring in Ellen Wald, non-resident senior fellow at the Atlantic Council and president at Transversal Consulting. Ellen, just to kick off, can you talk us through a little bit on the timing of this deal and some of the potential limitations?
Sure. So the timing is obviously very interesting, given that it's coming almost immediately before incoming President Trump's inauguration, and just as President Biden is leaving office. It does seem to have been a kind of a joint effort between the two administrations, but you really cannot deny that President Trump's rhetoric and efforts have clearly pushed it to the finish line. It's kind of a long and drawn out affair in which different hostages will be released at various times, with different Palestinian prisoners being released also at varying times. There'll be a ceasefire. There'll be various troop withdrawals. It does seem that some of the details are still being disputed a little bit, but so it's not exactly, signed and sealed here. There's also the matter of, Israel is a democratic country, and so this deal is going to be presented to, to the parliament, and there will be opportunities for dissent. Though I think that there really is an incredible amount of pressure to get hostages released in any way they can. And so the fact that, there will be hostages released is a very strong a motivator for Israel to accept the deal. I think as well, though, there's a lot of concern that, they're kind of going back to square one here in some respects, that, if the deal is largely followed through, or at least if the Palestinians and Hamas in Gaza get what they want, that this just could lead them back to a situation which will precipitate further conflict, and that is absolutely a concern. And I think that the Trump administration, when they come in, is going to have to do a lot to reassure Israel that is either not going to be the case, or take some action to ensure that Hamas is not able to resume or grow to its previous strength.
Ellen, David here. I think to Rebecca's question just now as well, I want to get your thoughts on how this one might be different from a similar sort of agreement we had back in August, and how hopeful and optimistic we can be that this actually moves the needle on this conflict.
So the deal is actually quite similar to previous deals that were discussed. I do think the different factor here is the fact that there was a lot of rhetoric from incoming President Trump about really coming down hard on Gaza and Hamas if they did not return hostages, and that there is a sense that Trump is perhaps more willing to follow through on these kinds of things. Recalling from his first 4 years in office, he did really come down hard. I mean, there was, the Soleimani assassination and other issues. So I think there is a bit of pressure from that has maybe moved the needle for Hamas in some sense. But likewise, I think there's also more pressure on Netanyahu to get on the good side. I think it's pretty clear that Trump is much more, or at least has been, and in rhetoric certainly favors
News when you want it with Bloomberg News Now. I'm Valerie Teitel.
And I'm Stephen Carroll.
Israel says Hamas has reneged on its Gaza ceasefire deal, creating a last-minute crisis that may delay or prevent the pause in fighting. The Israel Prime Minister Netanyahu's office says the country's cabinet will not sign off on the deal until Hamas accepts all parts of the agreement. It is as yet unclear which parts of the ceasefire terms are in contention.
The deal had been hailed as a historic moment by world leaders. It was hoped that the 6-week halt in fighting could lead to a permanent end to the conflict, which has almost totally destroyed the Gaza Strip. Here's US President Joe Biden announcing the agreement.
At long last, I can announce a ceasefire and a hostage deal has been reached between Israel and Hamas. Fighting in Gaza will stop, and soon the hostages will return home to their families.
Both Biden and President-elect Trump claimed credit for the agreement, which would see 33 hostages captured by Hamas released. If agreed, Israel would withdraw from populated areas of the Gaza Strip and release hundreds of Palestinian prisoners.
The UK economy narrowly returned to growth in November, but the pace of expansion fell short of expectations. GDP expanded by 0.1%, following a 0.1% contraction in both September and October. It means the economy is still smaller than it was in June, the month before Labour came to power. CEO of the BGF, Andy Gregory, says the government needs to do more to make good on its promise of kickstarting growth.
To be blunt, I think the jury is definitely out. So we engaged, as I'm sure many other businesses did, before the election. Very strong noises, positive noises, and we have seen that continue post the election. I think the challenge, the sacrifices that are required to really invest and support business, have to be made.
That was Andy Gregory, whose fund was formerly known as the Business Growth Fund and is the most active equity investor in the UK. The figures will reinforce fears that the UK is stuck in a stagflationary trap of rising prices and flatlining growth, despite a slowdown in inflation in December.
US core inflation slowed marginally yesterday in figures published, triggering a significant relief rally. Prices, excluding food and energy costs, rose by 0.2% last month. That was less than analysts had estimated. Austin Goolsbee is one of a trio of Fed policymakers, saying the latest data means a soft landing is in sight.
The trend continues to be improvement in inflation. I'm still optimistic for 2025 that we can continue growing and have a soft landing.
Chicago Fed President Austin Goolsbee there. The optimism around the slowdown in inflation saw the S&P 500 close 1.8% higher yesterday. Futures are pointing higher today as well. 10-year Treasury yields fell 14 basis points yesterday. They're up 1 today at 4.67%.
President Biden is warning that America is in danger of becoming a society ruled by the extremely wealthy. In his farewell address, the outgoing president says the ultra-rich are threatening democracy.
I want to warn the country of some things that give me great concern, and that's the dangerous concentration of power in the hands of a very few ultra-wealthy people, and the dangerous consequences if their abuse of power is left unchecked. Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms.
Biden's message marked the end of his 50 years in politics, as his tenure as the 46th president ends with having lost control of the presidency and both chambers of Congress. Incoming President Donald Trump has tapped some of America's richest men for top roles in an administration, including Elon Musk.
Donald Trump's nominee for Treasury Secretary will tell senators that maintaining the dollar as the world's reserve currency is critical to the US economy. According to remarks prepared for his confirmation hearing, Scott Bessent will say the country must deploy sanctions as part of a whole government approach to national security. The remarks will be his first public comment since he was nominated to lead the Treasury back in November. With Republicans in control of the Senate, it's expected that Bessent will be easily confirmed in the role.
Blue Origin's new flagship rocket successfully reached orbit, putting the company in the ranks of the space industry's big players. Take a listen to the moment the New Glenn rocket took off from Cape Canaveral, Florida, earlier this morning.
4. Lift off. All 7 engines at full thrust. Clear the tower.
The launch was a crucial test of the Jeff Bezos-backed firm's ability to challenge SpaceX's ironclad grip on the launch market. It wasn't completely successful, though. The first stage booster, which was supposed to be reusable, missed its landing in a barge in the Atlantic.
And dangerous winds stoking the fires in Los Angeles are forecast to end today. But a lack of rain and another round of weather warnings from the US National Weather Service for next week means officials are still worried. Deadly blazes in the area have killed at least 25 people and destroyed thousands of structures. Los Angeles Mayor Karen Bass says the situation is still developing.
We're not out of the woods yet. There is a chance that the Santa Anas might spike up again next week. While we're still being vigilant, while we're still in this emergency, we also have to begin the process of recovery and rebuilding.
Los Angeles Mayor Karen Bass speaking there. The recent fires are expected to rank among the costliest in modern US history. Wells Fargo and Goldman Sachs estimate insured losses could reach as much as $30 billion.
Those are your top stories on the market. The Euro Stoxx 600 is up 0.5%. On Wall Street, S&P futures up 0.3%. Euro dollar is trading flat at 102.92, and the 10-year Treasury is up 1 basis point to 4.66. That's news when you want it with Bloomberg News Now. I'm Valerie Teitel.
I'm Stephen.
Globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg. This is the Asia Trade. I'm Sherian in Tokyo.
I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asia markets are set for a positive start after Wall Street's best CPI day in more than a year. Stocks and treasuries surging on bets that a surprise slowdown in US inflation now puts the Fed rate cuts back on the table. The Bank of Korea is expected to cut its key rate today as the economy slows amid ongoing political turmoil at home and geopolitical threats abroad. Plus, Israel and Hamas agree to pause a war that's killed tens of thousands of people with a deal to free hostages and prisoners as Israeli forces pull back.
And hiding the markets is all really to do with that reaction to the softer than expected inflation data that we got out of the U.S. I mean, it's really interesting because we had cooling even housing prices, and that's been really interesting because we're watching the core CPI very closely, the first step down in 6 months. And the fact that the Fed's preferred inflation gauge, the PCE price index, doesn't put as much emphasis on shelter is a reason that we look at CPI very closely. But given the more surprising to the upside data when it comes to the CPI with really surprising markets, we have seen that easing by the Fed being priced in, that amount jumping in the overnight session.
And also being supported by, what we see when it comes to profitability for the big US banks, right? We know that, despite these ongoing concerns about what policies we might see in a Trump 2.0 administration and the implications for the economy on Wall Street, so much excitement, of course, when it comes to some of these big financials for Trump's growth agenda. But we already see these big banks ending the Biden years on a pretty high note, trading revenue surging on some of the swings that we've seen triggered by the jobs numbers, on the election result as well. We've seen deal making ramp up. Executives are predicting more deals and more potential momentum in that space to come as well. So this is now, for the four big banks, the second most profitable year ever in 2024, and that only trails Biden's first year.
Take a look at how futures are trading at the moment. Not a lot of change, but we have seen the S&P 500 now recouping those losses for this year. In fact, we saw those big gains in the banks index gaining more than 4%. And we also saw that big jump in treasuries with the 10-year yield falling by the most since August, given the inflation data that we got. Not to mention the WTI crude is right now at around those 5-month highs. But it's really about that picture when it comes to price trends that we've been watching very closely. Take a listen to what the Fed's Austin Goolsbee had to say.
The trend continues to be improvement in inflation. I'm still optimistic for 2025 that we can continue growing and have a soft landing.
We're watching the strength of the U.S. dollar very closely, which fell to a 1-month low after we got the inflation data, recouping some of those losses, though, through the session. And on the other side of that trade, the Japanese yen at that 156 level, we saw a big jump in the overnight session after we heard from the BOJ Governor Ueda really hinting at a rate hike when they meet next week. Still, Nikkei futures not doing much after 5 sessions of losses already. And, of course, the big central bank decision today is going to come from the Bank of Korea. Expectations are for a cut. But when it comes to the U.S. inflation picture, of course, it really has an impact on global markets. We saw the global bond rally overnight. Let's bring in Bloomberg's global economy correspondent, Enda Curran. Enda, so how important are these CPI numbers in the context that we also are getting mixed messaging from PCE data as well?
I think the main takeaway, Sherry, was the core CPI reading, which showed an increase of 0.2%, touched lower than expected. And in fact, the first step down, as you mentioned earlier, in 6 months. And that suggests that perhaps the core disinflation story is coming back on tap. Within that, there were some cheaper costs for hotel stays and medical services, taking the sting out of that tail. Headline CPI continues to feel some pressure from energy costs, that made up 40% of the gains there, and still some stickiness in like core staples, car insurance and education services and the like. But the big takeaway, the net takeaway from today was that in recent months, the story had been that progress on US inflation had stalled. But these numbers for December suggest that perhaps there is some easing in the system now, especially shelter prices increasing at a slower pace, giving encouragement that the inflation story might be a bit better as we start the year.
And how much of a threat to this disinflationary story could incoming trade tariffs be?
Well, it's certainly one of the big talking points, the big uncertainties, because much depends, Heidi, as you know, on the breadth and the level of the tariffs which the new president will implement. We don't yet have specific details on that. Our colleagues have been reporting some of the proposals that the incoming administration are looking at. But either way, as soon as we start to get a handle on that trade policy, the economists will start to run the number. And at the margins, that for now they say that if you are going to put up tariffs on consumer goods coming to the US, that will add broader inflation pressure into the system at a time when we don't still know if the disinflation story is back on track or not. So there's plenty of uncertainty when it comes to trade policy and how it will impact inflation and, of course, by extension, then interest rates.
Yeah, we have seen the pricing of Fed easing really increasing when it comes to year end and how much the Fed can actually cut rates. It's been really interesting to see the bond market reaction as well, because it's been really outsized in the last few days. How will this really feed into other global economies? We have seen US, UK inflation data also moderating.
Well, we've had a very whipsaw few days on the bond market, as you know. We started the week with yields surging. The story was all about bond vigilantes, and now we had this good US inflation data, and of course it's taken the real sting out of the march up in yields. But there's no doubt that this easing of US inflation has taken pressure off the rest of the world as well, because it does suggest that perhaps maybe the Fed might have some scope to ease again at some point this year. Now, remember, last week, the jobs numbers were so strong that some on Wall Street, like Bank of America, were talking about the Fed having to raise interest rates again. And obviously, it wouldn't be good news for the rest of the world, and especially emerging economies. So this inflation data today suggests some reprieve. And if the Fed has scope to cut, well, then obviously that's going to be good news for emerging economies elsewhere too.
A Bloomberg Global Economy correspondent Enda Karan. There are so many ripple effects from what the Fed might do this year. Well, our next guest says the biggest risk to US stocks is a further upside in yields. Katrina Dudley is a senior public markets investment strategist at Franklin Templeton. Katrina, great to have you with us. And how much sort of reassurance do you get from this CPI reading? And does it potentially kind of still risk being derailed depending on what the fiscal picture is for this new administration?
I think there's a lot going on at the moment. The first thing, as you've identified, is that the CPI data did come in slightly lower than consensus was expecting, and that's a positive, particularly as you balance that across the jobs data that came in, with more encouragement in terms of the signs of economic growth. And so the Fed is kind of walking a tightrope and doing a good job walking that tightrope, ensuring that they, cut rates when needed and do those adjustments. We're not in the camp that they need to do significant adjustments going forward, but yields are the biggest risk. In addition, the other risk that we see to markets going forward is earnings growth. The banks have delivered strong earnings, and that makes us positive as we look at the markets going forward.
And the other part of the equation, or part of the equation, as you said, there's a lot going on when it comes to these factors, is earnings. Obviously, the big banks, did very well at the end of the last 4 years of the current administration. The banks don't kind of, fully reflect what we see elsewhere, right? Do you see a consistent sort of positive picture when it comes to earnings, or is it going to be pretty spotty outside of, banks and obviously tech?
If I look at the Magnificent Seven and going through earnings, the 12-month period ending September, they actually grew earnings 54%, and the rest of the market was down 2%. So, big tech delivered the majority of the heavy lifting as it relates to earnings growth. As we look on a forward 2-year basis, one of the things that we've noticed is how the breadth of earnings growth is going to expand significantly, so that the big tech won't be covering the full weight of the need to lift earnings growth for the entire market. We see earnings growth happening in the small cap space and in the mid cap space. As we look across industries, we actually have all industries on a 2-year basis delivering forward positive earnings growth. And I think that breadth and the expansion of the breadth in the market is positive, because it means that people won't be as focused on those Magnificent Seven and the fact that they are a very concentrated part of the market. I think it's now time for the other 493 stocks that make up the S&P 500 to start delivering.
Very concentrated also in terms of U.S. investing, given the American exceptionalism narrative that we've seen in the past couple of years. But how closely are you watching at, say, emerging economies going into 2025 and next year as well, with an incoming Trump administration that continues to threaten tariffs?
You're right. In 5 days, we have the new president, and at that point, we are looking at his day one policies as it relates particularly to tariffs as well as to immigration. On tariffs, there's the narrative that he's put out in terms of fairly aggressive tariffs on both China and other parts of the world. There's a camp that believes that you should take him at his word and that those tariffs will be implemented. There's also a camp that says that this is a negotiating tactic and that he will implement tariffs that are less significant. The biggest concern as it relates to emerging markets is the impact of those tariffs. I think in terms of China, if we have a look at the percentage of exports that China has into the United States, that's declined by 47% since the first round of tariffs were implemented during the first Trump administration. And so the exposure there is much less significant, and that's something that we think investors are not taking into account. The second side of tariffs as it relates to the inflation, and that obviously has a follow-on effect in terms of what the Fed does in terms of rates, is we don't think that there's any discernible proof that shows that there's a direct connection between tariffs and inflation. And if you have a look at the tariffs that were implemented in his last
This is the Asia Trade. I'm Sherrian in Tokyo.
I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian markets are set for a positive start after Wall Street's best CPI day in more than a year. Stocks and treasuries surging on bets that a surprise slowdown in US inflation now puts the Fed rate cuts back on the table. The Bank of Korea is expected to cut its key rate today as the economy slows amid ongoing political turmoil at home and geopolitical threats abroad. Plus, Israel and Hamas agree to pause a war that's killed tens of thousands of people with a deal to free hostages and prisoners as Israeli forces pull back.
And hiding the markets is all really to do with that reaction to the softer than expected inflation data that we got out of the U.S. I mean, it's really interesting because we had cooling even housing prices, and that's been really interesting because we're watching the core CPI very closely, the first step down in 6 months. And the fact that the Fed's preferred inflation gauge, the PCE price index, doesn't put as much emphasis on shelter is a reason that we look at CPI very closely. But given the more surprising to the upside data when it comes to the CPI with really surprising markets, we have seen that easing by the Fed being priced in, that amount jumping in the overnight session.
And also being supported by, what we see when it comes to profitability for the big US banks, right? We know that, despite of these ongoing concerns about what policies we might see in a Trump 2.0 administration and the implications for the economy and Wall Street, so much excitement, of course, when it comes to some of these big financials for Trump's growth agenda. But we already see these big banks ending the Biden years on a pretty high note, trading revenues surging on some of the swings that we've seen triggered by the jobs numbers, on the election result as well. We've seen deal making ramp up. Executives are predicting more deals and more potential momentum in that space to come as well. So this is now, for the four big banks, the second most profitable year ever in 2024, and that only trails Biden's first year.
Take a look at how futures are trading at the moment. Not a lot of change, but we have seen the S&P 500 now recouping those losses for this year. In fact, we saw those big gains in the banks index gaining more than 4%. And we also saw that big jump in treasuries with the 10-year yield falling by the most since August, given the inflation data that we got. Not to mention the WTI crude is right now around those 5-month highs. But it's really about that picture when it comes to price trends that we've been watching very closely. Take a listen to what the Fed's Austin Goolsbee had to say.
The trend continues to be improvement in inflation. I'm still optimistic for 2025 that we can continue growing and have a soft landing.
We're watching the strength of the U.S. dollar very closely, which fell to a 1-month low after we got the inflation data, recouping some of those losses, though, through the session. And on the other side of that trade, the Japanese yen at that 156 level, we saw a big jump in the overnight session after we heard from the BOJ Governor Ueda really hinting at a rate hike when they meet next week. Still, Nikkei futures not doing much after 5 sessions of losses already. And, of course, the big central bank decision today is going to come from the Bank of Korea. Expectations are for a cut. But when it comes to the U.S. inflation picture, of course, it really has an impact on global markets. We saw the global bond rally overnight. Let's bring in Bloomberg's global economy correspondent, Enda Curran. Enda, so how important are these CPI numbers in the context that we also are getting mixed messaging from PCE data as well?
I think the main takeaway, Sherry, was the core CPI reading, which showed an increase of 0.2%, a touch lower than expected. And in fact, the first step down, as you mentioned earlier, in 6 months. And that suggests that perhaps the core disinflation story is coming back on tap. Within that, there were some cheaper costs for hotel stays and medical services taking the sting out of that tail. Headline CPI continues to feel some pressure from energy costs, made up 40% of the gains there, and still some stickiness in like core staples, car insurance and education services and the like. But the big takeaway, the net takeaway from today was that in recent months, the story had been that progress on US inflation had stalled. But these numbers for December suggest that perhaps there is some easing in the system now, especially shelter prices increasing at a slower pace, giving encouragement that the inflation story might be a bit better as we start the year.
And how much of a threat to this disinflationary story could incoming trade tariffs be?
Well, it's certainly one of the big talking points, the big uncertainties, because much depends, Heidi, as you know, on the breadth and the level of the tariffs which the new president will implement. We don't yet have specific details on that. Our colleagues have been reporting some of the proposals that the incoming administration are looking at. But either way, as soon as we start to get a handle on that trade policy, the economists will start to run the number. And at the margins, that for now they say that if you are going to put up tariffs on consumer goods coming to the US, that will add broader inflation pressure into the system at a time when we don't still know if the disinflation story is back on track or not. So there's plenty of uncertainty when it comes to trade policy and how it will impact inflation and, of course, by extension, then interest rates.
Yeah, we have seen the pricing of Fed easing really increasing when it comes to year end and how much the Fed can actually cut rates. It's been really interesting to see the bond market reaction as well, because it's been really outsized in the last few days. How will this really feed into other global economies? We have seen UK inflation data also moderating.
Well, we've had a very whipsaw few days on the bond market, as you know. We started the week with yields surging. The story was all about bond vigilantes, and now we had this good US inflation data, and of course it's taken the real sting out of the march up in yields. But there's no doubt that this easing of US inflation has taken pressure off the rest of the world as well, because it does suggest that perhaps maybe the Fed might have some scope to ease again at some point this year. Now, remember, last week, the jobs numbers were so strong that some on Wall Street, like Bank of America, were talking about the Fed having to raise interest rates again. And obviously, that wouldn't be good news for the rest of the world, and especially emerging economies. So this inflation data today suggests some reprieve. And if the Fed has scope to cut, well, then obviously that's going to be good news for emerging economies elsewhere too.
A Bloomberg Global Economy correspondent, Enda Karan. There's so many ripple effects from what the Fed might do this year. Well, our next guest says the biggest risk to US stocks is a further upside in yields. Katrina Dudley is a senior public markets investment strategist at Franklin Templeton. Katrina, great to have you with us. And how much sort of reassurance do you get from this CPI reading? And does it potentially kind of still risk being derailed depending on what the fiscal picture is for this new administration?
I think there's a lot going on at the moment. The first thing, as you've identified, is that the CPI data did come in slightly lower than consensus was expecting, and that's a positive, particularly as you balance that across the jobs data that came in, with more encouragement in terms of the signs of economic growth. And so the Fed is kind of walking a tightrope and doing a good job walking that tightrope, ensuring that they, cut rates when needed and do those adjustments. We're not in the camp that they need to do significant adjustments going forward, but yields are the biggest risk. In addition, the other risk that we see to markets going forward is earnings growth. The banks have delivered strong earnings, and that makes us positive as we look at the markets going forward.
And the other part of the equation, or part of the equation, as you said, there's a lot going on when it comes to these factors, is earnings. Obviously, the big banks, did very well at the end of the last 4 years of the current administration. The banks don't kind of, fully reflect what we see elsewhere, right? Do you see a consistent sort of positive picture when it comes to earnings, or is it going to be pretty spotty outside of, banks and obviously tech?
If I look at the Magnificent Seven and going through earnings, the 12-month period ending September, they actually grew earnings 54%, and the rest of the market was down 2%. So, big tech delivered the majority of the heavy lifting as it relates to earnings growth. As we look on a forward 2-year basis, one of the things that we've noticed is how the breadth of earnings growth is going to expand significantly, so that the big tech won't be covering the full weight of the need to lift earnings growth for the entire market. We see earnings growth happening in the small cap space and in the mid cap space. As we look across industries, we actually have all industries on a 2-year basis delivering forward positive earnings growth. And I think that breadth and the expansion of the breadth in the market is positive, because it means that people won't be as focused on those Magnificent Seven and the fact that they are a very concentrated part of the market. I think it's now time for the other 493 stocks that make up the S&P 500 to start delivering.
Very concentrated also in terms of U.S. investing, given the American exceptionalism narrative that we've seen in the past couple of years. But how closely are you watching at, say, emerging economies going into 2025 and next year as well, with an incoming Trump administration that continues to threaten tariffs?
You're right. In 5 days, we have the new president. And at that point, we are looking at his day one policies as it relates particularly to tariffs as well as to immigration. On tariffs, there's the narrative that he's put out in terms of fairly aggressive tariffs on both China and other parts of the world. There's a camp that believes that you should take him at his word and that those tariffs will be implemented. There's also a camp that says that this is a negotiating tactic and that he will implement tariffs that are less significant. The biggest concern as it relates to emerging markets is the impact of those tariffs. I think in terms of China, if we have a look at the percentage of exports that that China has into the United States, that's declined by 47% since the first round of tariffs were implemented during the first Trump administration. And so the exposure there is much less significant, and that's something that we think investors are not taking into account. The second side of tariffs as it relates to the inflation, and that obviously has the follow-on effect in terms of what the Fed does in terms of rates, is we don't think that there's any discernible proof that shows that there's a direct connection between tariffs and inflation. And if you have a look at the tariffs that were implemented in his the last time he was president, you've got the evidence to show that there wasn't a significant increase in inflation. And so we are a little more cautious that these tariff regimes are going to really hurt the U.S. consumer.
And the impact also on specific industries like semiconductor, right? I mean, Northeast Asian economies depend a lot on these hardware exports. We do have the Bank of Korea rate decision today to contend with as well. How much more difficult and challenging does the situation become for economies like this that are very trade dependent?
Yes, you're right. 92% of semiconductors come out of Taiwan, and I think that there's been a deliberate policy in the United States and even internationally in order to start diversifying the sources of semiconductors. I think that that's just good for business, it's good for defense, and a number of reasons. That just takes time, and luckily we have already started down that journey. As it relates to these emerging markets such as South Korea, I think that it is a headwind for them, but I don't think it's a headwind that they can't overcome. I think that they've had a sufficient knowledge of what is happening and that they can make appropriate adjustments. We saw, for example, in the washing machine market, when we had significant tariffs introduced in the United States, a number of these companies actually were domiciled in, say, South Korea, moved manufacturing into the U.S. so that you had the jobs creation in the U.S., but you actually had the profits going back to the Korean companies. And I think that we could see something like that happen again.
Katrina Dudley, great to have you with us, public market senior investment strategist at Franklin Templeton. Coming up on the Asia Trade, UBS tells us why they see favorable trends for stocks with pullbacks as a buying opportunity. Plus, it's BOK decision day, and Goldman Sachs joins us to explain why they expect a rate cut. And a closer look at earnings for the big U.S. banks as they close out the Biden era with a surge in profits. This is Bloomberg.
"700 days of failure and 1 day of success." Well, we've had many difficult days since Hamas began its terrible war. We've encountered roadblocks and setbacks. We've not given up. And now, after more than 400 days of struggle, the day of success has arrived.
President Biden there speaking about the deal to bring a temporary halt to the war in the Gaza Strip. Let's get some more details now when it comes to the ceasefire deal, the reaction. Our Bloomberg editor Michael Heath is with us. And, you know, I suppose in a lot of ways it's obviously positive that's been done. It's hard to kind of look at this without the context of just how much life has been lost.
Yeah, I mean, it's a real issue, Heidi, because this is the deal, from what we understand, is very similar to what was on the table in August. And since then, you've had, thousands of people killed. You've had Israeli soldiers as well killed. Very little progress made in the war, and it really does raise the question of what was the difference between now and then. The difference seems to have been the election of Donald Trump, and basically, Israel having potentially the most pro-Israeli president in history there, that they really don't want to get off on the wrong foot with him. So they're just going to take this plunge. I mean, as you say, it's only a temporary agreement. It's 6 weeks. 33 of the hostages are supposed to come out, and Israel will withdraw from sort of the more populated areas, and it'll release a swathe of Palestinian prisoners as well. But whether it holds, I guess, is a question. But then what more Israel expects to get out of the military campaign is another issue as well.
Well, because there's a lot of tension from already settlers in specific areas, and whether a two-state solution is still viable or wanted, by the parties. Is there any kind of indication of what that could look like under Trump foreign policy in the Middle East?
Well, Donald Trump, in his first term, he actually got pretty ambitious about what he wanted to do in the Middle East, him and his son-in-law, Jared Kushner. And they did sign these Abraham Accords, which, formalised relations between Israel and some Gulf states. And the big prize is basically doing that between Israel and Saudi Arabia. Now, the Saudis basically obviously want peace in Gaza. They also want, the Palestinian Authority to replace Hamas and to be reformed and to sort of be running things. They're prepared to put in some money to rebuild Gaza, but there also has to be a path to a Palestinian state. And the idea that Prime Minister Benjamin Netanyahu is going to agree to that is very hard to see. But then you do have the unpredictability of Donald Trump, which is almost like sort of throwing a stone in the pond and seeing what waves come out of there, because surprising things have happened. I mean, we saw the fall of the regime in Syria, which have been there for 40 years. I mean, all sorts of amazing things are happening in the Middle East now. So it could go very bad, it could go very right. It's just really unclear, but the precedents aren't particularly good for it to see a solution there.
I was going to say, how different is the landscape now from Trump 1.0? In this new administration, you mentioned the fall of Bashar al-Assad's regime and how Iran has been humbled when it comes to its role in the Middle East.
Yeah, that's exactly right, Sherry. And the question sort of is, on one hand, it's opened up a lot more possibilities, but also when Trump was first there, Iran was the great threat to everybody in the region, whether it's Israel, whether it was the Gulf states as well. They were all worried about its power. And so it sort of naturally had that drawing together effect. Now things have sort of dissipated a bit in terms of power, and there's a reorganisation, a recalibration of who is the sort of the senior country in the region as well. And there's a lot of jockeying for power there, whether it's Saudi Arabia, whether it's Turkey, whether it's Iran trying to hold on to what it has. So it's sort of unclear, how the pieces might come together again is not particularly clear. But definitely, I think all parties are interested in this whole idea of a Saudi-Israeli deal. And of course, the prospect of that deal is actually what spurred Hamas to launch the attack on October 7th in 2023. So it's significant for all players involved there, and that's the prize. I mean, you do that, or if you get some sort of peace deal here, you could see President Donald Trump winning a Nobel Peace Prize or something to that effect. I mean, but again, there's a lot of bridges to be crossed here to get to that point.
Bloomberg's Australia and New Zealand eco-editor Michael Heath there. Now, the U.S. unveiled a fresh round of regulations aimed at keeping advanced chips from making their way to China. Beijing has called the Biden administration's flurry of trade restrictions on its final days in office irrational and irresponsible. For more, let's bring in our China correspondent, Min Lo, in Hong Kong. Min, so what are these latest regulations?
Hey, Sherry. So these are latest rules that will require chip makers like TSMC, Samsung, Intel to step up due diligence of their customers. The U.S. is expanding licensing requirements for these foundries and packaging companies, with tighter rules being applied unless these customers are trusted customers that are able to prove that their processes are below a certain performance threshold. And the U.S. is also imposing sanctions on 6 16 Chinese companies. And the intention here is to close the back door that could allow some advanced semiconductors to enter China, because in the past, last year, for example, some of TSMC's chips somehow were able to find their way into Huawei's AI servers, and that's precisely the sort of things that Washington doesn't want to see. And of course, this comes, as you said, after a series of measures over the past few days, really a last-ditch effort by the Biden administration to tighten the noose on China's access to semiconductors.
We've sort of talked a little bit about clearly a displeasure from Beijing in terms of a response. And, I guess it sort of highlights how critical this pursuit of self-reliance is.
Yes, that's exactly what China had said. They had, of course, blasted the move, saying that it's irresponsible, but they also vowed to double down on their self-reliance push. And as I said earlier, we have seen, for example, the U.S. blacklisting Chinese tech companies like Tencent, blocking the sale of smart cars containing Chinese software and hardware, banning NVIDIA chips from being sold to most data centers around the world. So really, every few days, we've been getting new measures from the Biden administration. Markets really gearing up for potentially more tensions between U.S. and China, especially as Trump takes over the reins from Biden, and with potentially more tariffs coming for Chinese goods as well.
Bloomberg's China correspondent Min Min Lo there with the details. More ahead on the Asia trade. This is Bloomberg.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
Heidi, we're gearing up for a potential third consecutive rate cut coming from the Bank of Korea. Now, we haven't seen this type of easing streak since the end of the financial crisis, when the BOK had to cut about 6 times, and all to do with, of course, the weakening economy. And the BOK might have room to cut. I mean, Heidi, you and I have talked about the challenges of South Korea, especially given very high levels of debt and the financial instability that a lot of easing could cause, given housing prices surging. But household loans have fallen, so that gives the BOK a little bit more room. Not to mention that we also saw that surge in the jobless rate, surprisingly, so this week, which could also lead to the fact that the BOK might feel more pressure to ease. And of course, I haven't even talked about the political crisis over there.
That's right, and it's quite interesting. If you take, in some sense, you would think that they're separate things. Obviously, we had the terrible disaster from the Jeju airline crash and this ongoing political saga, but quite clearly, and in the views of many economists, including here at Bloomberg, all of that is feeding through to kind of a broader confidence blow to the South Korean economy at a time where we're already seeing structural weakness, and we've seen that play out when it comes to those jobs numbers that you just mentioned, and potentially just sort of broader consumer and household confidence there as well. And you mentioned this ongoing political situation, and we are expecting that resumption of questioning of President Yoon at 2 p.m. local time. That's according to the recent reporting from Yonhap News. He had asked the investigation office to delay the morning questioning, citing health reasons. He had been questioned for about 10 hours, over 10 hours on Wednesday, and has been detained at the Seoul Detention Center for those questions. So we'll see if there is yet another refusal to testify today.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Let's take a look at how commodities are trading this Thursday morning. This, of course, we had that really reassurance when it comes to the US CPI print, suggesting that deflationary mindset has kind of taken hold. Of course, still a lot of question marks over how the fiscal situation, trade tariffs in the US this year could impact that. This is a picture, though, as we continue to see those highs being held at around that 5-month high when it comes to crude, Russia sanctions, US supply declines continuing to play out, though. The numbers, in particular, when it comes to tightening US inventories, has really pushed a bit more of that price momentum for crude, and these ongoing sort of tightening of restrictions and sanctions on Russia also impacting some of those flows as well. We're seeing iron ore actually seeing a little bit of upside at the moment. In fact, just over 1% of upside for iron ore, despite these ongoing concerns when it comes to China's growth. But we did see iron ore shipments from one of the biggest ports here in Australia, Port Hedland, reaching a record number in 2024. Sherry.
Heidi, let's go a little bit deeper on that agreement between Israel and Hamas to a phased ceasefire deal to bring a temporary halt to the war in the Gaza Strip. Joining us now is Mara Rudman, professor at the University of Virginia. Mara, great to have you with us, and thank you so much for joining us today. This seems like a big diplomatic victory for President Biden in his outgoing days. Only 5 days for President Trump now to take office. Though, how big of an effect did the former president have when it came to actually getting this deal into place?
Well, I would say first, it's a victory not just for American leadership, but really for the Israeli people, for the Palestinian people, for leaders in the region. So it's an important statement across the board, and so very much needed to get to this temporary ceasefire agreement with a very good chance of moving from the first phase to the remaining phases. You're right, Sherry, that there was a clear partnership, and that may seem odd for people to hear given the very significant rough spots between the Trump teams and the Biden teams. But this is something that the way in which they work together, and particularly President Trump's named envoy for the Middle East, Steve Witkoff, who really kind of took up residence in Doha, understood that the Biden team was the lead, but contributed in key ways because he understood that he was going to be carrying on the responsibility of implementation. So this was a handoff between administrations that should work this way on all national security issues. But with these teams, it was clearly a rare occurrence, and very fortunate that it has played out this way.
Given the relationship between Prime Minister Netanyahu and President Trump, how are we expecting the negotiations to unfold in the coming months?
Sure. Well, it's been reported that President Trump's named Middle East envoy, Steve Witkoff, who I mentioned a moment before, who has been in Doha, flew to Jerusalem to meet directly with Prime Minister Netanyahu, I believe on Shabbat there on Saturday, with, again, President Biden's, one of President Biden's top aides, Brett McGurk, on speakerphone for a conversation that I am guessing conveyed the fact that President-elect Trump and President Biden were of one mind on the importance of getting this deal done, getting it done now, getting it done on the terms that had been laid out. And so I think what Prime Minister Netanyahu can expect is a continuation in terms of the commitments that are being made in this framework to work towards negotiating in this, once the first phase is underway, negotiating a permanent ceasefire, which is a key part of this deal, continuing humanitarian assistance going in, continuing the hostages coming out and the Israeli hostages coming out, and the concurrent releases of Palestinian prisoners from Israeli prisons. And in addition to that, working towards the phase 3, which is really the very serious reconstruction effort that is required in Gaza, I would say is required for Israel's security and stability, as well as for that of the Palestinian people. And so figuring out together the details of how that occurs. And so President Trump sharing some of the credit for this this achievement, though I think that the large amount of it goes to President Biden and his team, but sharing in this partnership, he also owns working it through in the remaining phases of the agreement. And I think that's very important. And I think it was a wise policy decision on his part.
And at the moment, we're also seeing this Global Alliance meeting, as we see building international support continue for a two-state solution. I do wonder for the parties and for the major power brokers, including the new Trump administration, how viable is that model now, and is that wanted by both or each party?
Yeah, well, I think, and Tony Blinken, our Secretary of State, has laid out that it is a requirement to get to the kind of security and stability that Israelis so desperately and understandably desire, that so many Palestinians want, that the rest of the region demands. And that is going to require finding a pathway to a Palestinian state that sits alongside a state of Israel. That doesn't mean that negotiations start tomorrow. That's part of why the reconstruction effort in Gaza is so important, what the role will be of the Palestinian Authority there, how to work the very serious security issues that will exist, how much international actors will come in both with resources and probably in the very needed way to help secure the ground in Gaza. All of those things are really tough issues, but are critical for security and stability, again, for the region and for countries throughout Europe, in the United States, throughout the world. And so there should and there will be, I expect, an international effort to make that happen.
Alongside the ongoing conflict in Gaza last year, late into last year, we had some astonishing developments in the Middle East, right? The complete, sort of transformative developments in Syria, the reframing of perhaps Iran's capacity and confidence in the region. Do you think that speaks to the possibility for more uncertain developments this year, or does it perhaps give policymakers maybe a bit more confidence to think outside the box that, more might be possible in this region to affect change?
Sure. Well, both things can be true at once. That it will, I expect, lead to or contributes to uncertainty about the region in the coming year, and also opens up opportunities. To be clear, one of the opportunities that opened up, the terms of this ceasefire in Gaza, are largely those that were laid out by President Biden last May. And negotiations have continued, have had their ups and downs over these months, but it's likely that the extent to which Hamas was isolated by the actions that Israel took with respect to Hezbollah, and then the subsequent ceasefire, also negotiated by the Biden administration, between Hezbollah and Israel, the ways in which Iran was both struck, the back and forth between Iran and Israel, and the fact that Iran was seriously weakened, including weakened by the fact that it no longer had Hezbollah, is what significantly contributed to the downfall and the very fast downfall of Assad in Syria. So these are all interrelated. Iran is probably at once both at one of its most weak states that it's been at in years, and at the same time probably working that much more intensively to increase its capacity to make a nuclear weapon. So that in itself leads to a volatile situation, and other actors in the region are really keen to ensure the United States is ready to partner in ways that increase stability and security. And some of those interests are also shared, I am sure, by President Trump and his team, who do not want to see the United States significantly involved, drawn into further conflicts in the region. And so there are new opportunities, new arrangements, and some very tough decisions ahead for President Trump and his team.
Mara, it's always great to have you with us and your insights. Mara Rudman, Professor at the University of Virginia. Well, just days to go. President Biden is set to deliver a farewell speech in about 2 hours' time. His administration coming to a close ahead of Donald Trump's inauguration on Monday. Bloomberg's political news director Jody Schneider joins us now from Washington. Of course, there's been a flurry of, sort of last-minute achievements and policy measures from the outgoing administration. What are we expecting from his speech?
Yeah, Heidi, we expect that he is going to tout economics the job growth that has occurred during his administration and getting things back on track. When he took over, of course, it was right in the midst of COVID. People were still all working from home. There was really great kind of economic dislocation, supply chain problems. And though a lot of people voted against him based on the economy, he is going to tout that and legislation that really helped improve the economy, the whole Build Back Better plans. So we expect he'll do that. We expect that he will mention the anticipated release of hostages and the ceasefire in Gaza. We expect that he will talk about that and that he was able to get that done. It's expected to be a short speech, about 15 minutes, but really a farewell speech with him saying he thinks he has done some important things and left the country in better shape than when he took over in early 2021.
Yeah, I mean, as Heidi alluded to, we are seeing a lot of activity just in the last few days before he leaves office. He's not trying to go away quietly at this point.
That's right, Sherry. Even though after the few months after the election in November, we didn't really see or hear from him, too much. But the last few weeks have been a flurry of activity, passing some bills. Some say he's trying to Trump-proof things like energy regulation and trying to do some things that perhaps the incoming president will undo, but trying to make, his case for some of his policies and a lot of announcements and a bunch of goodbyes. This one, of course, more significant in that it's from the Oval Office. It's an actual farewell. But he has, had a lot of these kinds of speeches. He had a foreign policy speech on Monday. And this one will be a little bit of foreign policy as well, given the announcement today of that ceasefire that they hope will take effect very soon in Gaza and those hostages being released. He does leave with a pretty low opinion rating, approval rating, 36.1%, which is the lowest since any president since Jimmy Carter.
Bloomberg's political news director Jody Schneider there. And other geopolitical stories that we're following at the moment, Canada is set to be preparing to put tariffs on about $105 billion worth of U.S.-made goods if Donald Trump carries through with his own trade threats. Our source says the list will only come into play if Trump moves first and may be expanded later, depending on what the U.S. does. Prime Minister Justin Trudeau has met with the premiers of Canada's provinces to discuss the tariff issue. The Washington Post is reporting that President-elect Donald Trump is considering an executive order suspending the looming U.S. ban on TikTok. The app is set to go dark in the U.S. from Sunday unless it's sold by its Chinese owner, ByteDance. The Post cites unnamed sources saying a Trump order could suspend enforcement of the law for up to 90 days after he's inaugurated on Monday.
Sherry, the biggest US banks are ending the bad news on a high note, with their combined quarterly profits so far topping $100 billion. We'll be taking a closer look at those earnings next. This is Bloomberg.
Four of the biggest banks in the U.S. ended the Biden years on a high note, notching their second most profitable year ever in 2024. JP Morgan became the first bank in U.S. history to top $50 billion in annual profit. Citigroup also saw three of its five main segments, wealth, U.S. personal banking, and services, posting record revenue for the year. Bloomberg's Sally Bakewell joins us now for more on this. And Sally, despite all of the excitement about potentially more growth coming during the Trump era, we have seen a very positive finish for 2024 in the Biden years. What stood out for you?
I think the very big takeaway here was the trading performance by a lot of the banks. This was a great quarter for Wall Street's traders, with both JP Morgan and Goldman scoring some kind of record as they capitalized on the election volatility. Goldman was able to cruise past estimates, and its equity traders delivered their best year on record, and it helped it double its fourth quarter profit to more than 4 billion. JP Morgan's traders also notched a record fourth quarter. And even Citigroup, it soared today and actually led the pack for a while, despite lowering a crucial profitability target. I think investors really like the fact that it announced a 20 billion buyback program and also managed to notch records in 3 of its 5 units, services, wealth, and US personal banking. So all in all, it was a strong quarter, and that optimism also bleeds into next year.
Yeah, and there were already optimistic expectations for next year as well. What are they sort of hoping for, particularly when it comes to the regulatory side?
I think the incoming Trump administration is widely expected to pare back, repeal, get rid of some regulations that had shackled the banks from doing the sort of M&A, the jumbo deals that really burnish their bottom lines. Regulators are also expected to dial back or get rid of potential new capital rules, which would free up a lot of capital for these banks, indeed to return it to shareholders or to do more profitable activities, such as lending or other more risky activities. So there are some headwinds, however. Of course, Trump's tariff policies, however they actually take effect, could lead to inflation, which would be bad for borrowers. But the rate cuts, on the other hand, if those take place this year as well as expected, that could also be a big boon for banks by encouraging borrowers to lend, which of course generates more lending income for them. So a lot of things are pointing to a strong 2025 for a lot of these banks, and I think that was reflected in their share prices today.
Bloomberg's Sally Bakewell there. Let's take a look at one of the other stories that we're following. And Hindenburg research founder Nate Anderson says he is shutting the short-selling firm. In a post on the Hindenburg website, Anderson said there's no specific threat, health or personal issue behind that decision. The firm's first high-profile report came in 2020 against electric truck startup Nikola. It was most recently known for that 2023 report against the Adani Group. Hindenburg has also gone after major financial figures, including, of course, Carl Icahn. So, this is quite an interesting development, right? Because this has really been something that, Sherry, has been so market moving. We, in particular, when it comes to the sort of broader moves on the Adani empire, was really this sense that this was a sign that Hindenburg in its targets was really going global in, some of the companies and the individuals that it was retraining its focus on. They've talked about that brazen market manipulation, according to them, by the Adani Group at a time when that group had been really trying to attract global and retail investors. And we saw just the enormous amount of fallout there as well. So it's pretty interesting. And it, in a way, I guess it leaves a great sense of relief for a number of companies.
Yeah, Heidi, I mean, it's interesting to put in the broader global markets picture, right? With the huge stock market rally that we've seen, it's been very difficult to be a short seller, not to mention the rise of retail investors, the likes of GameStop being a huge meme stock as well. So we have seen a lot of other short sellers also sort of retreat from this field, the likes of Jim Chanos, for example, closing his short-focused funds back in November of 2023. We now know that the defunct Melvin Capital lost $1 billion in a single day, given that huge surge in what I mentioned before with the GameStop share. So it's been really interesting to see these activist short sellers sort of starting to retreat from the area. But before Anderson focused on short selling, he really was trying to earn a living by submitting tips to the SEC whistleblower program in order to collect some rewards. He then poured his energy into publishing reports online. He now says that he'll try to make a series of models and materials on Hindenburg's model so others can learn from that. But as we continue to watch the markets, take a look at some breaking numbers numbers that we have out of Japan as well. We're getting the producer price index month-on-month, a gain of 0.3%, surprising to the downside. The expectation was for gains of 0.4%. Year-on-year is growth of 3.8%, which came in line with estimates. Of course, very important as we have already seen corporate goods prices accelerating to the fastest pace in 16 months for PPI numbers in the previous month, which sort of supports the BOJ's further normalization of policy and puts this pressure on companies to pass on costs to their customers. So we continue to watch the PPI numbers very closely. When it comes to the month-on-month number, a little bit of downside surprise of gains of only 0.3%. We have more ahead on the Asia trade. This is Bloomberg.
This is the Asia Trade. The latest when it comes to some of the corporate headlines that we're following. SpaceX has launched a pair of commercial satellites carrying lunar rovers as competition intensifies in the private sector's race to the moon. One probe is made by Texas-based Firefly, which will attempt a landing in about 45 days. The other is from Tokyo-based iSpace and is scheduled to reach the moon around the middle of the year. Meanwhile, Blue Origin says it's targeting Thursday at the earliest for the twice-delayed debut launch of its New Glenn rocket. Bloomberg sources say Blackstone has hired financial advisors to explore the sale of song rights that might fetch over $3 billion. A deal could include music from Bob Dylan, Adele and Ariana Grande. Our sources say financial firms including Apollo Global, Warburg Pincus and Temasek have all expressed interest in these assets. TSMC is expected to post its fastest pace of growth in profits in 2 years on Thursday, reflecting the growing dominance of high-end chip making and AI development. Analysts on average expect net income to increase 55% on year. TSMC last week reported quarterly sales that topped estimates, reinforcing investor hopes of another strong year for data center hardware spending. And you can catch our exclusive interview with the Intercontinental Hotel CEO, Elie Maalouf, as the luxury brand celebrates its 50th anniversary of entering the Greater China market, the opening of its 800th hotel in the region. Taking a look at some of the challenges and opportunities. That's at 1:40 p.m. Hong Kong time, 4:40 p.m. in Sydney.
And Heidi, these are some of the stocks that we'll be watching when trading opens in Korea and Japan. We'll be tracking Takeda Pharmaceutical after the FDA announced a ban on red number 3 citing cancer risks. We know that this is found in drugs including Takeda Pharmaceuticals for disorders like attention deficit hyperactivity. Also keep an eye on retail stocks like J-Front Retailing after tourists to Japan hit record 37 million in 2024. This, of course, given the decline in the Japanese yen, which is making the country an attractive and affordable destination. In South Korea, we'll be tracking Naver after Webtoon announced it plans to have Japanese web comic studio number 9 as part of the comic company's global expansion strategy.
Coming up later, Sherry, we'll be, of course, giving you live coverage of President Biden's farewell address as we count down just days now until that Monday inauguration of President-elect Donald Trump. Market opens in Seoul and Tokyo are next. This is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is the Asia Trade. I'm Sherry Yan in Tokyo.
I'm Hattie Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asia markets are set for a positive start after Wall Street's best CPI day in more than a year. Stocks and treasuries surging on bets that a surprise slowdown in US inflation now puts the Fed rate cuts back on the table. The Bank of Korea is expected to cut its key rate today as the economy slows amid ongoing political turmoil at home and geopolitical threats abroad. Plus, Israel and Hamas agree to pause a war that's killed tens of thousands of people with a deal to free hostages and prisoners as Israeli forces pull back.
And hiding the markets is all really to do with that reaction to the softer than expected inflation data that we got out of the U.S. I mean, it's really interesting because we had cooling even housing prices, and that's been really interesting because we're watching the core CPI very closely, the first step down in 6 months. And the fact that the Fed's preferred inflation gauge, the PCE price index, doesn't put as much emphasis on shelter is a reason that we look at CPI very closely. But given the more surprising to the upside data when it comes to the CPI with really surprising markets, we have seen that easing by the Fed being priced in, that amount jumping in the overnight session.
And also being supported by, what we see when it comes to profitability for the big US banks, right? We know that, despite these ongoing concerns about what policies we might see in a Trump 2.0 administration and the implications for the economy on Wall Street, so much excitement, of course, when it comes to some of these big financials for Trump's growth agenda. But we already see these big banks ending the Biden years on a pretty high note, trading revenue surging on some of the swings that we've seen triggered by the jobs numbers, on the election result as well. We've seen deal making ramp up. Executives are predicting more deals and more potential momentum in that space to come as well. So this is now, for the four big banks, the second most profitable year ever in 2024, and that only trails Biden's first year.
Take a look at how futures are trading at the moment. Not a lot of change, but we have seen the S&P 500 now recouping those losses for this year. In fact, we saw those big gains in the banks index gaining more than 4%. And we also saw that big jump in treasuries with the 10-year yield falling by the most since August, given the inflation data that we got. Not to mention the WTI crude is right now at around those 5-month highs. But it's really about that picture when it comes to price trends that we've been watching very closely. Take a listen to what the Fed's Austin Goolsbee had to say.
The trend continues to be improvement in inflation. I'm still optimistic for 2025 that we can continue growing and have a soft landing.
We're watching the strength of the U.S. dollar very closely, which fell to a 1-month low after we got the inflation data, recouping some of those losses, though, through the session. And on the other side of that trade, the Japanese yen at that 156 level, we saw a big jump in the overnight session after we heard from the BOJ Governor Ueda really hinting at a rate hike when they meet next week. Still, Nikkei futures not doing much after 5 sessions of losses already. And, of course, the big central bank decision today is going to come from the Bank of Korea. Expectations are for a cut. But when it comes to the U.S. inflation picture, of course, it really has an impact on global markets. We saw the global bond rally overnight. Let's bring in Bloomberg's global economy correspondent, Enda Curran. Enda, so how important are these CPI numbers in the context that we also are getting mixed messaging from PCE data as well?
I think the main takeaway, Sherry, was the core CPI reading, which showed an increase of 0.2%, touched lower than expected. And in fact, the first step down, as you mentioned earlier, in 6 months. And that suggests that perhaps the core disinflation story is coming back on tap. Within that, there were some cheaper costs for hotel stays and medical services taking the sting out of that tail. Headline CPI continues to feel some pressure from energy costs, made up 40% of the gains there, and still some stickiness in like core staples, car insurance and education services and the like. But the big takeaway, the net takeaway from today was that in recent months, the story had been that progress on US inflation had stalled. But these numbers for December suggest that perhaps there is some easing in the system now, especially shelter prices increasing at a slower pace, giving encouragement that the inflation story might be a bit better as we start the year.
And how much of a threat to this disinflationary story could incoming trade tariffs be?
Well, it's certainly one of the big talking points, the big uncertainties, because much depends, Heidi, as you know, on the breadth and the level of the tariffs which the new president will implement. We don't yet have specific details on that. Our colleagues have been reporting some of the proposals that the incoming administration are looking at. But either way, as soon as we start to get a handle on that trade policy, the economists will start to run the number. And at the margins, that for now, they say that if you are going to put up tariffs on consumer goods coming to the US, that will add broader inflation pressure into the system at a time when we don't still know if the disinflation story is back on track or not. So there's plenty of uncertainty when it comes to trade policy and how it will impact inflation and, of course, by extension, then interest rates.
Yeah, we have seen the pricing of Fed easing really increasing when it comes to year end and how much the Fed can actually cut rates. It's been really interesting to see the bond market reaction as well, because it's been really outsized in the last few days. How will this really feed into other global economies? We have seen US, UK inflation data also moderating.
Well, we've had a very whipsaw few days on the bond market, as you know. We started the week with yields surging. The story was all about bond vigilantes, and now we had this good US inflation data, and of course it's taken the real sting out of the march up in yields. But there's no doubt that this easing of US inflation has taken pressure off the rest of the world as well, because it does suggest that perhaps maybe the Fed might have some scope to ease again at some point this year. Now, remember, last week, the jobs numbers were so strong that some on Wall Street, like Bank of America, were talking about the Fed having raised interest rates again. And obviously, that wouldn't be good news for the rest of the world, and especially emerging economies. So this inflation data today suggests some reprieve. And if the Fed has scope to cut, well, then obviously that's going to be good news for emerging economies elsewhere too.
Bloomberg Global Economy correspondent Enda Karan. There are so many ripple effects from what the Fed might do this year. Well, our next guest says the biggest risk to US stocks is a further upside in yields. Katrina Dudley is a senior public markets investment strategist at Franklin Templeton. Katrina, great to have you with us. And how much sort of reassurance do you get from this CPI reading? And does it potentially kind of still risk being derailed depending on what the fiscal picture is for this new administration?
I think there's a lot going on at the moment. The first thing, as you've identified, is that the CPI data did come in slightly lower than consensus was expecting, and that's a positive, particularly as you balance that across the jobs data that came in, with more encouragement in terms of the signs of economic growth. And so the Fed is kind of walking a tightrope and doing a good job walking that tightrope, ensuring that they cut rates when needed and do those adjustments. We're not in the camp that they need to do significant adjustments going forward, but yields are the biggest risk. In addition, the other risk that we see to markets going forward is earnings growth. The banks have delivered strong earnings, and that makes us positive as we look at the markets going forward.
And the other part of the equation, or part of the equation, as you said, there's a lot going on when it comes to these factors, is earnings. Obviously, the big banks, did very well at the end of the last 4 years of the current administration. The banks don't kind of, fully reflect what we see elsewhere, right? Do you see a consistent sort of positive picture when it comes to earnings, or is it going to be pretty spotty outside of, banks and obviously tech?
If I look at the Magnificent Seven and going through earnings, the 12-month period ending September, they actually grew earnings 54%, and the rest of the market was down 2%. So, big tech delivered the majority of the heavy lifting as it relates to earnings growth. As we look on a forward 2-year basis, one of the things that we've noticed is how the breadth of earnings growth is going to expand significantly, so that the big tech won't be covering the full weight of the need to lift earnings growth for the entire market. We see earnings growth happening in the small cap space and in the mid cap space. As we look across industries, we actually have all industries on a 2-year basis delivering forward positive earnings growth. And I think that breadth and the expansion of the breadth in the market is positive, because it means that people won't be as focused on those Magnificent Seven and the fact that they are a very concentrated part of the market. I think it's now time for the other 493 stocks that make up the S&P 500 to start delivering.
very concentrated also in terms of U.S. investing, given the American exceptionalism narrative that we've seen in the past couple of years. But how closely are you watching at, say, emerging economies going into 2025 and next year as well, with an incoming Trump administration that continues to threaten tariffs?
You're right. In 5 days, we have the new president. And at that point, we are looking at his day one policies as it relates particularly to tariffs as well as to immigration. On tariffs, there's the narrative that he's put out in terms of fairly aggressive tariffs on both China and other parts of the world. There's a camp that believes that you should take him at his word and that those tariffs will be implemented. There's also a camp that says that this is a negotiating tactic and that he will implement tariffs that are less significant. The biggest concern as it relates to emerging markets is the impact of those tariffs. I think in terms of China, if we have a look at the percentage of exports that that China has into the United States, that's declined by 47% since the first round of tariffs were implemented during the first Trump administration. And so the exposure there is much less significant, and that's something that we think investors are not taking into account. The second side of tariffs as it relates to the inflation, and that obviously has a follow-on effect in terms of what the Fed does in terms of rates, is we don't think that there's any discernible proof that shows that there's a direct connection between tariffs and inflation. And if you have a look at the tariffs that were implemented in his the last time he was president, you've got the evidence to show that there wasn't a significant increase in inflation. And so we are a little more cautious that these tariff regimes are going to really hurt the U.S. consumer.
And the impact also on specific industries like semiconductor, right? I mean, Northeast Asian economies depend a lot on these hardware exports. We do have the Bank of Korea rate decision today to contend with as well. How much more difficult and challenging does the situation become for economies like this that are very trade dependent?
Yes, you're right. 92% of semiconductors come out of Taiwan, and I think that there's been a deliberate policy in the United States and even internationally in order to start diversifying the sources of semiconductors. I think that that's just good for business, it's good for defense, and a number of reasons. That just takes time, and luckily we have already started down that journey. As it relates to these emerging markets such as South Korea, I think that it is a headwind for them, but I don't think it's a headwind that they can't overcome. I think that they've had a sufficient knowledge of what is happening and that they can make appropriate adjustments. We saw, for example, in the washing machine market, when we had significant tariffs introduced in the United States, a number of these companies actually were domiciled in, say, South Korea, moved manufacturing into the U.S. so that you had the jobs creation in the U.S., but you actually had the profits going back to the Korean companies. And I think that we could see something like that happen again.
Katrina Dudley, great to have you with us, public markets senior investment strategist at Franklin Templeton. Coming up on the Asia Trade, UBS tells us why they see favorable trends for stocks with pullbacks as a buying opportunity. Plus, it's BOK decision day, and Goldman Sachs joins us to explain why they expect a rate cut. And a closer look at earnings for the big U.S. banks as they close out the Biden era with a surge in profits. This is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
"700 days of failure and 1 day of success." Well, we've had many difficult days since Hamas began its terrible war. We've encountered roadblocks and setbacks. We've not given up. And now, after more than 400 days of struggle, the day of success has arrived.
President Biden there speaking about the deal to bring a temporary halt to the war in the Gaza Strip. Let's get some more details now when it comes to this ceasefire deal, the reaction. Our Bloomberg editor Michael Heath is with us. And, you know, I suppose in a lot of ways it's obviously positive that's been done. It's hard to kind of look at this without the context of just how much life has been lost.
Yeah, I mean, it's a real issue, Heidi, because this is the deal, from what we understand, is very similar to what was on the table in August. And since then, you've had, you know, thousands of people killed. You've had Israeli soldiers as well killed. Very little progress made in the war, and it really does raise the question of what was the difference between now and then. The difference seems to have been the election of Donald Trump, and basically, you know, Israel having potentially the most pro-Israeli president in history there, that they really don't want to go get off on the wrong foot with him, so they're just going to take this plunge. I mean, as you say, it's only a temporary agreement. It's 6 weeks. 33 of the hostages are supposed to come out, and Israel will withdraw from sort of the more populated areas, and it'll release a swathe of Palestinian prisoners as well. But whether it holds, I guess, is a question. But then what more Israel expects to get out of the military campaign is another issue as well.
Well, because there's a lot of tension from already settlers in specific areas, and whether a two-state solution is still viable or wanted, you know, by the parties. Is there any kind of indication of what that could look like under a Trump foreign policy in the Middle East?
Well, Donald Trump, in his first term, he actually got pretty ambitious about what he wanted to do in the Middle East, him and his son-in-law, Jared Kushner. And they did sign these Abraham Accords, which, you know, formalised relations between Israel and some Gulf states. And the big prize is basically doing that between Israel and Saudi Arabia. Now, the Saudis basically obviously want peace in Gaza. They also want, you know, the Palestinian Authority to replace Hamas and to be reformed and to sort of be running things. They're prepared to put in some money to rebuild Gaza, but there also has to be a path to a Palestinian state. And the idea that Prime Minister Benjamin Netanyahu is going to agree to that is very hard to see. But then you do have the unpredictability of Donald Trump, which is almost like sort of throwing a stone in the pond and seeing what waves come out of there, because surprising things have happened. I mean, we saw the fall of the regime in Syria, you know, which had been there for 40 years. I mean, all sorts of amazing things are happening in the Middle East now. So it could go very bad, it could go very right. It's just really unclear, but the precedents aren't particularly good for it to see a solution there.
I was going to say, how different is the landscape now from Trump 1.0? In this new administration, you mentioned the fall of Bashar al-Assad's regime and how Iran has been humbled when it comes to its role in the Middle East.
Yeah, that's exactly right, Sherry. And the question sort of is, on one hand, it's opened up a lot more possibilities, but also when Trump was first there, Iran was the great threat to everybody in the region, whether it's Israel, whether it was the Gulf states as well. They were all worried about its power. And so it sort of naturally had that drawing together effect. Now things have sort of dissipated a bit in terms of power, and there's a reorganisation, a recalibration of who is the sort of the senior country in the region as well. And there's a lot of jockeying for power there, whether it's Saudi Arabia, whether it's Turkey, whether it's, you know, Iran trying to hold on to what it has. So it's sort of unclear, you know, how the pieces might come together again is not particularly clear. But definitely, I think all parties are interested in this whole idea of a Saudi-Israeli deal. And of course, you know, the prospect of that deal is actually what spurred Hamas to launch the attack on October 7th in 2023. So it's significant for all players involved there, and that's the prize. I mean, you do that, or if you get some sort of peace deal here, you know, you could see President Donald Trump winning a Nobel Peace Prize or something to that effect. I mean, but again, there's a lot of bridges to be crossed here to get to that point.
Bloomberg's Australia and New Zealand eco-editor Michael Heath there. Now, the U.S. unveiled a fresh round of regulations aimed at keeping advanced chips from making their way to China. Beijing has called the Biden administration's flurry of trade restrictions on its final days in office irrational and irresponsible. For more, let's bring in our China correspondent, Min Lo, in Hong Kong. Min, so what are these latest regulations?
Hey, Sherry. So these are latest rules that will require chip makers like TSMC, Samsung, Intel to step up due diligence of their customers. The U.S. is expanding licensing requirements for these foundries and packaging companies, with tighter rules being applied unless these customers are trusted customers that are able to prove that their processes are below a certain performance threshold. And the U.S. is also imposing sanctions on 16 Chinese companies, and the intention here is to close the back door that could allow some advanced semiconductors to enter China, because in the past, last year, for example, some of TSMC's chips somehow were able to find their way into Huawei's AI servers, and that's precisely the sort of things that Washington doesn't want to see. And of course, this comes, as you said, after a series of measures over the past few days, really a last-ditch effort by the Biden administration to tighten the noose on China's access to semiconductors.
We've sort of talked a little bit about clearly a displeasure from Beijing in terms of a response. And, I guess it sort of highlights how critical this pursuit of self-reliance is.
Yes, that's exactly what China had said. They had, of course, blasted the move, saying that it's irresponsible, but they also vowed to double down on their self-reliance push. And as I said earlier, we have seen, for example, the U.S. blacklisting Chinese tech companies like Tencent, blocking the sale of smart cars containing Chinese software and hardware, banning NVIDIA chips from being sold to most data centers around the world. So really, every few days, we've been getting new measures from the Biden administration. Markets really gearing up for potentially more tensions between U.S. and China, especially as Trump takes over the reins from Biden, and with potentially more tariffs coming for Chinese goods as well.
Bloomberg's China correspondent Min Min Lo there with the details. More ahead on the Asia trade. This is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually, and ports are a major contributor. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress by deploying electrified cranes and tractors, recycling and reusing resources, and offsetting emissions by allocating resources to preserve critical ecosystems. This demonstrates how ports can be drivers of positive change and sustainable growth.
Heidi, we're gearing up for a potential third consecutive rate cut coming from the Bank of Korea. Now, we haven't seen this type of easing streak since the end of the financial crisis, when the BOK had to cut about 6 times, and all to do with, of course, the weakening economy. And the BOK might have room to cut. I mean, Heidi, you and I have talked about the challenges of South Korea, especially given very high levels of debt and the financial instability that a lot of easing could cause, given housing prices surging. But household loans have fallen, so that gives the BOK a little bit more room. Not to mention that we also saw that surge in the jobless rate, surprisingly, so this week, which could also lead to the fact that the BOK might feel more pressure to ease. And of course, I haven't even talked about the political crisis over there.
That's right, and it's quite interesting. If you take, in some sense, you would think that they're separate things. Obviously, we had the terrible disaster from the Jeju airline crash and this ongoing political saga, but quite clearly, and in the views of many economists, including here at Bloomberg, all of that is feeding through to kind of a broader confidence blow to the South Korean economy at a time where we're already seeing structural weakness, and we've seen that play out when it comes to those jobs numbers that you just mentioned, and potentially just sort of broader consumer and household confidence there as well. And you mentioned these this ongoing political situation, and we are expecting that resumption of questioning of President Yoon at 2 p.m. local time. That's according to the recent reporting from Yonhap News. He had asked the investigation office to delay the morning questioning, citing health reasons. He had been questioned for about 10 hours, over 10 hours on Wednesday, and has been detained at the Seoul Detention Center for those questions. So we'll see if there is yet another refusal to testify today.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
Let's take a look at how commodities are trading this Thursday morning. This, of course, we had that really reassurance when it comes to the US CPI print, suggesting that that deflationary mindset has kind of taken hold. Of course, still a lot of question marks over how the fiscal situation, trade tariffs in the US this year could impact that. This is the picture, though, as we continue to see those highs being held at around that 5-month high when it comes to crude, Russia sanctions, US supply declines continuing to play out, though. The numbers, in particular, when it comes to tightening US inventories, has really pushed a bit more of that price momentum for crude, and these ongoing sort of tightening of restrictions and sanctions on Russia also impacting some of those flows as well. We're seeing iron ore actually seeing a little bit of upside at the moment. In fact, just over 1% of upside for iron ore, despite these ongoing concerns when it comes to China's growth. But we did see iron ore shipments from one of the biggest ports here in Australia, Port Hedland, reaching a record number in 2024. Sherry.
Heidi, let's go a little bit deeper on that agreement between Israel and Hamas to a phased ceasefire deal to bring a temporary halt to the war in the Gaza Strip. Joining us now is Mara Rudman, professor at the University of Virginia. Mara, great to have you with us, and thank you so much for joining us today. This seems like a big diplomatic victory for President Biden in his outgoing days. Only 5 days for President Trump now to take office. Though, how big of an effect did the former president have when it came to actually getting this deal into place?
Well, I would say first, it's a victory not just for American leadership, but really for the Israeli people, for the Palestinian people, for leaders in the region. So it's an important statement across the board, and so very much needed to get to this temporary ceasefire agreement with a very good chance of moving from the first phase to the remaining phases. You're right, Sherry, that there was a clear partnership, and that may seem odd for people to hear given the very significant rough spots between the Trump teams and the Biden teams. But this is something that the way in which they work together, and particularly President Trump's named envoy for the Middle East, Steve Witkoff, who really kind of took up residence in Doha, understood that the Biden team was the lead, but contributed in key ways because he understood that he was going to be carrying on the responsibility of implementation. So this was a handoff between administrations that should work this way on all national security issues. But with these teams, it was clearly a rare occurrence, and very fortunate that it has played out this way.
Given the relationship between Prime Minister Netanyahu and President Trump, how are we expecting the negotiations to unfold in the coming months?
Sure. Well, it's been reported that President Trump's named Middle East envoy, Steve Witkoff, who I mentioned a moment before, who has been in Doha, flew to Jerusalem to meet directly with Prime Minister Netanyahu, I believe on Shabbat there on Saturday, with, again, President Biden's, one of President Biden's top aides, Brett McGurk, on speakerphone for a conversation that I am guessing conveyed the fact that President-elect Trump and President Biden were of one mind on the importance of getting this deal done, getting it done now, getting it done on the terms that had been laid out. And so I think what Prime Minister Netanyahu can expect is a continuation in terms of the commitments that are being made in this framework to work towards negotiating in this, once the first phase is underway, negotiating a permanent ceasefire, which is a key part of this deal, continuing humanitarian assistance going in, continuing the hostages coming out and the Israeli hostages coming out, and the concurrent releases of Palestinian prisoners from Israeli prisons. And in addition to that, working towards the phase 3, which is really the very serious reconstruction effort that is required in Gaza, I would say is required for Israel's security and stability, as well as for that of the Palestinian people. And so figuring out together the details of how that occurs. And so President Trump sharing some of the credit for this this achievement, though I think that the large amount of it goes to President Biden and his team, but sharing in this partnership, he also owns working it through in the remaining phases of the agreement. And I think that's very important. And I think it was a wise policy decision on his part.
And at the moment, we're also seeing this Global Alliance meeting, as we see building international support continue for a two-state solution. I do wonder for the parties and for the major power brokers, including the new Trump administration, how viable is that model now, and is that wanted by both or each party?
Yeah, well, I think, and Tony Blinken, our Secretary of State, has laid out that it is a requirement to get to the kind of security and stability that Israelis so desperately and understandably desire, that so many Palestinians want, that the rest of the region demands. And that is going to require finding a pathway to a Palestinian state that sits alongside a state of Israel. That doesn't mean that negotiations start tomorrow. That's part of why the reconstruction effort in Gaza is so important, what the role will be of the Palestinian Authority there, how to work the very serious security issues that will exist, how much international actors will come in both with resources and probably in the very needed way to help secure the ground in Gaza. All of those things are really tough issues, but are critical for security and stability, again, for the region and for countries throughout Europe, in the United States, throughout the world. And so there should and there will be, I expect, an international effort to make that happen.
Alongside the ongoing conflict in Gaza last year, late into last year, we had some astonishing developments in the Middle East, right? The complete, sort of transformative developments in Syria, the reframing of perhaps Iran's capacity and confidence in the region. Do you think that speaks to the possibility for more uncertain developments this year, or does it perhaps give policymakers maybe a bit more confidence to think outside the box that, more might be possible in this region to affect change?
Sure. Well, both things can be true at once. That it will, I expect, lead to or contributes to uncertainty about the region in the coming year, and also opens up opportunities. To be clear, one of the opportunities that opened up, the terms of this ceasefire in Gaza, are largely those that were laid out by President Biden last May. And negotiations have continued, have had their ups and downs over these months, but it's likely that the extent to which Hamas was isolated by the actions that Israel took with respect to Hezbollah, and then the subsequent ceasefire, also negotiated by the Biden administration, between Hezbollah and Israel, the ways in which Iran was both struck, the back and forth between Iran and Israel, and the fact that Iran was seriously weakened, including weakened by the fact that it no longer had Hezbollah, is what significantly contributed to the downfall and the very fast downfall of Assad in Syria. So these are all interrelated. Iran is probably at once both at one of its most weak states that it's been at in years, and at the same time probably working that much more intensively to increase its capacity to make a nuclear weapon. So that in itself leads to a volatile situation, and other actors in the region are really keen to ensure the United States is ready to partner in ways that increase stability and security. And some of those interests are also shared, I am sure, by President Trump and his team, who do not want to see the United States significantly involved, drawn into further conflicts in the region. And so there are new opportunities, new arrangements, and some very tough decisions ahead for President Trump and his team.
Mara, it's always great to have you with us and your insights. Mara Rudman, professor at the University of Virginia. Well, just days to go. President Biden is set to deliver a farewell speech in about 2 hours' time. His administration coming to a close ahead of Donald Trump's inauguration on Monday. Bloomberg's political news director Jody Schneider joins us now from Washington. Of course, there's been a flurry of, sort of last-minute achievements and policy measures from the outgoing administration. What are we expecting from his speech?
Yeah, Heidi, we expect that he is going to tout economics, the job growth that has occurred during his administration and getting things back on track. When he took over, of course, it was right in the midst of COVID. People were still all working from home. There was really great kind of economic dislocation, supply chain problems. And though a lot of people voted against him based on the economy, he is going to tout that and legislation that really helped improve the economy, the whole Build Back Better plans. So we expect he'll do that. We expect that he will mention the anticipated release of hostages and the ceasefire in Gaza. We expect that he will talk about that and that he was able to get that done. It's expected to be a short speech, about 15 minutes, but really a farewell speech with him saying he thinks he has done some important things and left the country in better shape than when he took over in early 2021.
Yeah, I mean, as Heidi alluded to, we are seeing a lot of activity just in the last few days before he leaves office. He's not trying to go away quietly at this point.
That's right, Sherry. Even though after the few months after the election in November, we didn't really see or hear from him, too much. But the last few weeks have been a flurry of activity, passing some bills. Some say he's trying to Trump-proof things like energy regulation and trying to do some things that perhaps the incoming president will undo, but trying to make, his case for some of his policies and a lot of announcements and a bunch of goodbyes. This one, of course, more significant in that it's from the Oval Office. It's an actual farewell. But he has, had a lot of these kinds of speeches. He had a foreign policy speech on Monday. And this one will be a little bit of foreign policy as well, given the announcement today of that ceasefire that they hope will take effect very soon in Gaza and those hostages being released. He does leave with a pretty low opinion rating, approval rating, 36.1%, which is the lowest since any president since Jimmy Carter.
Bloomberg's political news director Jody Schneider there. And other geopolitical stories that we're following at the moment, Canada is set to be preparing to put tariffs on about $105 billion worth of U.S.-made goods if Donald Trump carries through with his own trade threats. Our source says the list will only come into play if Trump moves first and may be expanded later, depending on what the U.S. does. Prime Minister Justin Trudeau has met with the premiers of Canada's provinces to discuss the tariff issue. The Washington Post is reporting that President-elect Donald Trump is considering an executive order suspending the looming U.S. ban on TikTok. The app is set to go dark in the U.S. from Sunday unless it's sold by its Chinese owner, ByteDance. The Post cites unnamed sources saying a Trump order could suspend enforcement of the law for up to 90 days after he's inaugurated on Monday.
Sherry, the biggest US banks are ending the bad news on a high note, with their combined quarterly profits so far topping $100 billion. We'll be taking a closer look at those earnings next. This is Bloomberg.
this gig. You get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Four of the biggest banks in the U.S. ended the Biden years on a high note, notching their second most profitable year ever in 2024. JP Morgan became the first bank in U.S. history to top $50 billion in annual profit. Citigroup also saw three of its five main segments, wealth, U.S. personal banking, and services, posting record revenue for the year. Bloomberg's Sally Bakewell joins us now for more on this. And Sally, despite all of the excitement about potentially more growth coming during the Trump era, we have seen a very positive finish for 2024 in the Biden years. What stood out for you?
I think the very big takeaway here was the trading performance by a lot of the banks. This was a great quarter for Wall Street's traders, with both JP Morgan and Goldman scoring some kind of record as they capitalized on the election volatility. Goldman was able to cruise past estimates, and its equity traders delivered their best year on record, and it helped it double its fourth quarter profit to more than $4 billion. JP Morgan's traders also notched a record fourth quarter. And even Citigroup, it soared today and actually led the pack for a while, despite lowering a crucial profitability target. I think investors really liked the fact that it announced a $20 billion buyback program and also managed to notch records in three of its five units, services, wealth, and U.S. personal banking. So all in all, it was a strong quarter, and that optimism also bleeds into next year.
Yeah, and there were already optimistic expectations for next year as well. What are they sort of hoping for, particularly when it comes to the regulatory side?
I think the incoming Trump administration is widely expected to pare back, repeal, get rid of some regulations that had shackled the banks from doing the sort of M&A, the jumbo deals that really burnished their bottom lines. Regulators are also expected to dial back or get rid of potential new capital rules, which would free up a lot of capital for these banks, indeed to return it to shareholders or to do more profitable activities, such as lending or other more risky activities. So there are some headwinds, however. Of course, Trump's tariff policies, however they actually take effect, could lead to inflation, which would be bad for borrowers. But the rate cuts, on the other hand, if those take place this year as well as expected, that could also be a big boon for banks by encouraging borrowers to lend, which of course generates more lending income for them. So a lot of things are pointing to a strong 2025 for a lot of these banks, and I think that was reflected in their share prices today.
Bloomberg's Sally Bakewell there. Let's take a look at one of the other stories that we're following. And Hindenburg research founder Nate Anderson says he is shutting the short-selling firm. In a post on the Hindenburg website, Anderson said there's no specific threat, health or personal issue behind that decision. The firm's first high-profile report came in 2020 against electric truck startup Nikola. It was most recently known for that 2023 report against the Adani Group. Hindenburg has also gone after major financial figures, including, of course, Carl Icahn. So, this is quite an interesting development, right? Because this has really been something that, Sherry, has been so market moving. We, in particular, when it comes to the sort of broader moves on the Adani empire, was really this sense that this was a sign that Hindenburg in its targets was really going global in, some of the companies and the individuals that it was retraining its focus on. They've talked about that brazen market manipulation, according to them, by the Adani Group at a time when that group had been really trying to attract global and retail investors. And we saw just the enormous amount of fallout there as well. So it's pretty interesting. And it, in a way, I guess it leaves a great sense of relief for a number of companies.
Yeah, Heidi, I mean, it's interesting to put in the broader global markets picture, right? With the huge stock market rally that we've seen, it's been very difficult to be a short seller, not to mention the rise of retail investors, the likes of GameStop being a huge meme stock as well. So we have seen a lot of other short sellers also sort of retreat from this field, the likes of Jim Chanos, for example, closing his short-focused funds back in November of 2023. We now know that the defunct Melvin Capital lost $1 billion in a single day, given that huge surge in what I mentioned before with the GameStop share. So it's been really interesting to see these activist short sellers sort of starting to retreat from the area. But before Anderson focused on short selling, he really was trying to earn a living by submitting tips to the SEC whistleblower program in order to collect some rewards. He then poured his energy into publishing reports online. He now says that he'll try to make a series of models and materials on Hindenburg's model so others can learn from that. But as we continue to watch the markets, take a look at some breaking numbers that we have out of Japan as well. We're getting the producer price index month on month, a gain of 0.3%, surprising to the downside. The expectation was for gains of 0.4%. Year on year is growth of 3.8%, which came in line with estimates. Of course, very important as we have already seen corporate goods prices accelerating to the fastest pace in 16 months for PPI numbers in the previous month, which sort of supports the BOJ's further normalization of policy and puts this pressure on companies to pass on costs to their customers. So we continue to watch the PPI numbers very closely. When it comes to the month-on-month number, a little bit of downside surprise of gains of only 0.3%. We have more ahead on the Asia trade. This is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
This is the Asia Trade. The latest when it comes to some of the corporate headlines that we're following. SpaceX has launched a pair of commercial satellites carrying lunar rovers as competition intensifies in the private sector's race to the moon. One probe is made by Texas-based Firefly, which will attempt a landing in about 45 days. The other is from Tokyo-based iSpace and is scheduled to reach the moon around the middle of the year. Meanwhile, Blue Origin says it's targeting Thursday at the earliest for the twice-delayed debut launch of its New Glenn rocket. Bloomberg sources say Blackstone has hired financial advisors to explore the sale of song rights that might fetch over $3 billion. A deal could include music from Bob Dylan, Adele and Ariana Grande. Our sources say financial firms including Apollo Global, Warburg Pincus and Temasek have all expressed interest in these assets. TSMC is expected to post its fastest pace of growth in profits in 2 years on Thursday, reflecting the growing dominance of high-end chip making and AI development. Analysts on average expect net income to increase 55% on year. TSMC last week reported quarterly sales that topped estimates, reinforcing investor hopes of another strong year for data center hardware spending. And you can catch our exclusive interview with the Intercontinental Hotel CEO, Elie Maalouf, as the luxury brand celebrates its 50th anniversary of entering the Greater China market, the opening of its 800th hotel in the region. Taking a look at some of the challenges and opportunities. That's at 1:40.
Today, what we know so far about the ceasefire deal in Gaza.
What it means for Israeli hostage families, the population of a devastated Palestinian enclave, and the wider Middle East, and how a crackdown on illegal mining in South Africa has resulted in dozens of dead.
It's Thursday, January 16th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Jonah Green in New York.
And I'm Tara Oakes in London.
When you hear LSEG data and analytics, what do you think of? Comprehensive data you can trust, exclusive access to Reuters News, industry-leading
Benjamin Netanyahu has a 1-hour hold-up negotiated ceasefire
with LSEG data and analytics.
a painstakingly negotiated ceasefire deal for Gaza, and a final hour hold-up. Israeli Prime Minister Benjamin Netanyahu has accused Hamas of making last-minute demands and going back on agreements. It is unclear what impact the latest delay will have on the deal. Israel's acceptance of it will not be official until it's approved by the country's security cabinet and government. Last night, when the deal was announced, celebrations on the streets of Khan Yunis in Gaza. After news that a ceasefire deal between Israel and Hamas had been reached. Paving the way for an end to the fighting, a surge of humanitarian aid to Palestinian civilians, and a return of Israeli hostages held since October 7th, 2023. It's a complex, phased accord. Mediators say the first phase will take effect on Sunday, a 6-week initial ceasefire with the gradual withdrawal of Israeli forces from the Gaza Strip, and the release of hostages taken by Hamas in exchange for Palestinian prisoners held by Israel. In Tel Aviv, the families of Israeli hostages held in Gaza gathered to demand the release of all those who've been held, alive or dead. Ifat Calderon, whose cousin was taken hostage, said she felt not joy, but relief.
We don't know the situation of all the hostages. I don't know if Ofer, my cousin, is still alive or not.
Negotiations on implementing the second phase of a deal will begin later. That stage is expected to include the release of all remaining hostages, a permanent ceasefire, and the complete withdrawal of Israeli forces from Gaza. Nidal Maghrabi is our senior Palestinian correspondent based in Cairo. Nidal, what's the current situation inside Gaza?
The need for aid is enormous. According to the United Nations, to Palestinian official, Gaza will need at least 1,000 trucks, a day. But according to the deal, there will be 600 trucks of aid going into Gaza every day. It's not about food only. For most, will be in need for medications, will be in need for new hospitals. The city will be in need to rehabilitate the electricity network, the infrastructure, the sewage network. Everything is destroyed and is in need for rebuilding.
What does Hamas's future look like with this deal?
So far, Israel and the United States do not want any role by Hamas in the day after in Gaza, or to have any role in the government. But in the absence of an alternative, it seems that Hamas will have a role, and basically it is still standing.
So what about the impact of this deal for the wider Middle East? Mayan Lubel is our senior correspondent in Jerusalem.
In terms of the wider impact, it will likely quell tensions, possibly maybe open the door for a greater diplomatic deal between Israel and Saudi Arabia. It's very early days, and there's a big if. It's a phased deal. Stage 2 depends on stage 1. And if it breaks down in the middle, we could see the whole deal unraveling.
And where does this leave Israeli Prime Minister Benjamin Netanyahu?
Hardliners in Netanyahu's government have come out against the deal. One of them has threatened to bolt the government, but Netanyahu's government is not in imminent danger of falling. There's broad support amongst the Israeli public as well. His political situation a few months ago was one that kind of put any kind of progress on the deal at risk. I think the game changer in the dynamics and the talks toward the deal was basically Trump being elected. And a lot of the players, Netanyahu, the mediators, they all had a vested interest basically in making Trump happy and getting the deal over the finishing line.
Both President Joe Biden and President-elect Donald Trump are claiming credit for the ceasefire deal that was months in the making. A senior Biden administration official did credit Trump's envoy with helping deliver the deal alongside Biden's representative. President Joe Biden's final Oval Office speech opened with a familiar message of unity as he looked to seal a legacy now overshadowed by Trump's return to the White House. But the tone turned.
Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy.
Biden also warned of a tech-industrial complex bringing an avalanche of misinformation and disinformation and threatening the free press.
Donald Trump's choice for Attorney General Pam Bondi vowed at her Senate confirmation hearing not to use the U.S. Justice Department to target people based on their politics.
There will never be an enemies list within the Department of Justice.
Though she dodged direct questions about investigating people scorned by the president-elect. The Senate also probed Senator Marco Rubio, Trump's nominee to be Secretary of State. Rubio promised a robust foreign policy based on American interests. TikTok plans to shut U.S. operations of its social media app on Sunday, when a federal ban is set to take effect. It's according to people familiar with the matter. The Washington Post reported that Trump is considering issuing an executive order to suspend enforcement of the shutdown for 60 to 90 days. The paper did not say how Trump could legally do so.
Red flag warnings advising of extreme wildlife danger have expired across the Los Angeles region. The National Weather Service says the respite will be short when ideal fire conditions of high winds and low humidity pick back up again on Sunday. Wall Street's main indexes soared on Wednesday, with the benchmark S&P 500 touching a one-week high, driven by lower-than-expected December core inflation data and robust quarterly earnings from major US banks. US Finance Editor Lenan Nguyen.
Well, the banks actually just reported a blockbuster quarter, mostly because investment banking has done much better. Deals are starting to return to the markets. Companies are issuing debt and equity. And generally, there is a more optimistic tone as the Trump administration takes office. People are expecting a more pro-business, pro-growth policy from the Trump administration.
At least 78 bodies have been pulled from a South African mine following a months-long state crackdown on illegal mining. A court-ordered rescue operation to clear the Stilfontein mine has ended a standoff in which police withheld food and water from 200 miners for months. Our reporter Siyabonga Sishi was at the mine.
It's quite tense. Every day you get people who go there with the hope that their loved one will surface alive. They're quite angry. They believe that the government has been dragging their feet in rescuing these guys. They are accusing the government of mass murder. Some saying the government must accept that they have blood in their hands. Since the mine rescuing has started, you can actually see when they have the alive illegal miners, you can tell that they are physically weak. But then on the other side, you see all these body bags. And so these family members are just hoping that my loved one has used the exit on the one side.
People, I just could not take a risk anymore that what if he's still alive? I could not just gamble with his life.
One of the women that I met at the mine, her name is Zinzi Chom, actually took the government to court and to resume the operations. So she's coming there with the hope that the brother will surface, but unfortunately that has not happened.
Why is the government taking such an extreme stance at this mine?
This operation called Operation Valamkoti, they identify areas where these abandoned shafts are being used by illegal miners and they seal them up. So we've been seeing these notes coming up to surface, these guys asking for food. The ones that were actually extracted in the past, they've appeared in court facing various charges. But will we see end to illegal mining? I don't think so. The indication from the police, if there isn't anybody underground, the rescue operation will come to an end, but Operation Valamkoti will not end.
The South African government has defended the siege as part of a necessary crackdown on illegal mining. The police have also denied blocking the miners' exit. They say more than 1,500 miners did get out by their own means between the start of the siege in August and the rescue operation, which began on Monday.
To stay ahead in fast-moving markets, you need to transform quality data into tailored, practical, and valuable intelligence.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin in the Middle East and some breaking news. Israeli Prime Minister Benjamin Netanyahu accusing Hamas of reneging on parts of a ceasefire agreement that looked set to pause more than 15 months of fighting in Gaza starting Sunday. Netanyahu's office says new demands by the Palestinian group are an effort to extort last-minute concessions. We get more from Bloomberg News Israel Bureau Chief Ethan Brunner.
I mean, there are numerous details, which prisoners will be released, on what kind of schedule, all sorts of things that are not necessarily all written down. And so it's easy for one side to say suddenly the other side is making new demands. And, you know, fundamentally, they have such different goals. The goal of Israel is for Hamas to be destroyed and eliminated in any position of power in Gaza. And the goal of Hamas is to retain its power and drive Israel out of Gaza. So ultimately, they're on a kind of collision course, even though they're theoretically negotiating a compromise.
Bloomberg's Ethan Brunner notes under the terms of the agreement, Hamas would release 33 hostages taken on October 7th, 2023, while Israel would pull out of populated areas in Gaza and release hundreds of Palestinian prisoners. Hamas says it is committed to the ceasefire deal, as announced by the mediators.
Well, Nathan, we turn to Washington now, and a farewell from President Joe Biden. The president took to the cameras in the Oval Office to deliver a final address to the nation and a warning about the administration to come.
Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy.
President Biden echoed former President Dwight Eisenhower's warning of a military-industrial complex, saying the nation now faces the threat of a tech-industrial complex.
Turning to politics north of the U.S., Karen, Canada has drawn up an initial list of more than $100 billion of U.S. manufactured items that it would hit with tariffs if President-elect Donald Trump decides to levy tariffs on Canadian goods. Sources tell us this list is a draft and would come into play only if the Trump administration moves first. Prime Minister Justin Trudeau and the premiers of Canada's provinces met yesterday to plot a strategy for dealing with U.S. protectionism.
Well, Nathan, Donald Trump's pick for Treasury Secretary is hedge fund investor Scott Bessent. He faces a Senate committee for his confirmation hearing later this morning, and Bloomberg's Amy Morris has a preview from Washington.
Back in October, Bessent told Bloomberg TV Donald Trump tends to be more involved in the financial side of things.
He has a deep understanding of financial markets as opposed to most politicians. So he wants to be involved in the conversation. He has very well-formed opinions.
Bessent has said he plans to pursue policies that boost the U.S. economic output while slashing budget deficits, and that his priority will be to deliver on Trump's tax cut proposals. But he's been known to not be as supportive of tariffs. That will be a big focus for senators and investors. Scott Bessent still is expected to win approval easily from the Senate. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thanks. Well, in prepared remarks set for later this morning, Bessent will say maintaining the dollar as the world's reserve asset is critical to U.S. economic health and the nation's future. Stay with Bloomberg for full coverage of Bessent's confirmation hearing starting at 10:30 a.m. Wall Street time on Bloomberg Radio and television.
Karen, TikTok continues to battle to keep its app operating in the U.S. Now we're learning the CEO of the company is joining the list of tech moguls attending Trump's inauguration. The New York Times reports TikTok CEO Shou Chew has been invited to sit in a position of honor on the dais where former presidents and other important guests are traditionally seated. TikTok, which is owned by China's ByteDance, does face a Sunday deadline to find a U.S. buyer in order to keep operating in this country. Politicians from both parties are looking for ways to keep TikTok accessible despite the impending ban.
Nathan, let's turn now to the latest developments in the battle to contain the wildfires in Los Angeles. And Bloomberg's John Tucker joins us for an update. John, good morning.
And good morning, Karen. The traumatized region made it through Wednesday without another major fire breaking out. The last of the red flag warnings are expected to end this afternoon. As fire crews work to gain control, officials are also speaking to witnesses to find out the cause of the blazes, including the devastating Palisades and Eaton fires. Jose Medina is with the ATF.
We are talking to individuals about not just what they saw, but what they smelled and they heard.
The fires have killed 25 and destroyed more than 12,000 structures. The government has yet to release damage estimates, but private firms say they expect the estimates will climb into the tens of billions of dollars, and it could become the costliest fire disaster in U.S. history. I'm John Tucker, Bloomberg Radio.
John, thanks. Got news in space this morning. Blue Origin's new flagship rocket has lifted off for the first time and successfully reached orbit.
5, 4...
thundered off the launch pad at Cape Canaveral, Florida, just after 2 a.m. Eastern Time. The mission is expected to last several hours. It puts the company's Blue Ring Pathfinder test satellite into orbit. That was the main objective of this mission. But launch commentators later confirmed the booster portion of the rocket was destroyed as it attempted to land on a barge in the Atlantic. That fell short of the secondary goal.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The big college basketball game was a showdown of top 10 teams in the Big 12, and second-ranked Iowa State pulled away, beat ninth-ranked Kansas 74-57. Curtis Jones scored 25 points. The Cyclones are 15-1, 5-0 in the Big 12. Quinn Ewers, the quarterback at Texas the past 3 seasons, leaving the Longhorns, heading for the NFL draft, which means that the heralded Arch Manning will now take over as the Longhorns starting quarterback. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
There are 2 kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get to zero, not using climate as a moral crusade.
And Justin Trudeau.
There are still people who are hell-bent on reversing our approach on fighting climate change.
And the creative minds you haven't heard of yet.
Really don't need to have a tomato in December. It's gonna taste like nothing anyway. Just don't do it.
What we've made here is inspired by shark skin. Yeah. It is much more simplified than actual shark skin.
Drilling industry has come up with some of the most creative job titles.
Yeah. Tell me more.
You could imagine tool pusher,
no,
driller, motorman, mudlogger.
It is serious stuff, but never doom and gloom. I am Akshat Rati. Listen to Zero every Thursday from Bloomberg Podcasts on Apple, Spotify, or anywhere else you get your podcasts.
We are becoming a...
Talk to me first about your outlook for U.S. equities, because I understand you're looking at 11% upside for the S&P. What is your best and worst case for corporate earnings this year?
I think the way to think about it, and the conversations we've been having with portfolio managers here at the conference, is the idea of the S&P 500 index rising to around 6,500, which would be around 11% gain from the current level. The way to think about that is earnings per share likely to grow around 11% in calendar 2025 and about 7% in calendar 2026. So equity investors are already thinking about not just the current year, but looking into the next year. Specific to this conference, we've been focusing a lot of questions around the fourth quarter earnings season that is about to kick off today. And so from earnings growth for this quarter, reporting is around 8% gain. And one of the big questions has been, what's the impact of a strong dollar? The strong dollar that really was notable in the fourth quarter would suggest that the magnitude of surprises in the reporting season are likely to be somewhat less than you've seen in the last, say, couple of years. Typically, you get a earnings season where the positive surprises are around 400 basis points. So if that was the case, you'd have earnings growth something closer to 12%. I think that's not likely to be the situation this quarter, probably a little bit less. Some positive surprises, but not so much. So we think about the general trajectory of the U.S. equity market. Earnings are the driver, not multiple expansion. The U.S. stock market trades around 23 times, 22 to 23 times forward earnings. That's a very high multiple, historically speaking. So it's really earnings that are going to get us to our target of 6,500.
Okay, so you talk about dollar strength, but we also have very elevated yields right now. Obviously, we're waiting for inflation data. Do you think we're at the peak of yields, and to what extent is that going to be a headwind for equities?
Well, a higher bond yield environment is a concern. It's a concern for a couple of reasons. One, the speed with which bond yields have backed up. Both real and nominal yields have gone up almost 50 basis points in a 1 month period, which is a very swift and high magnitude of movement in a short period of time. And historically speaking, that's been a headwind for equities. And in fact, equities in the last month have sold off slightly here in the United States. So the idea of a higher bond yield environment would be a headwind for really strong returns. Our expectation is that inflation is coming down slowly, and that bond yields will fall over the rest of this year, something closer to 4.25% on nominal yields, down from the current level, which is much higher than that. So I'd say that's a big area of focus for fund managers. One of the questions we spent a lot of time with yesterday on the first day of the conference.
But there's also inflationary pressures from possible Trump tariffs, right? And I'm also curious, what do you think is the risk for those mega caps with huge revenue exposures to China, for example, Tesla, Apple? Already we've seen NVIDIA in the crosshairs as well.
So it's a definite question we're receiving here, and not just here among conference attendees in our Hong Kong conference, but also from our colleagues and clients in the United States. So the way I think about it is that it's Trump is somewhat mercurial in terms of the actual tariffs that may or may not be imposed, how much, at what pace those might be implemented. Those are questions that remain to be decided. And so as a portfolio manager, the way we think about it as strategy is thinking about owning U.S. companies whose primary revenues are domestically driven in terms of the United States, and avoiding or selling those companies whose primarily sales are coming out of the country. And the intuition behind that is that companies with high degree of domestic sales won't have the immediate risk of higher retaliatory tariffs. The retaliatory tariffs are likely to be imposed on companies that are more export-oriented. So that's a risk, if you will, to those potential earnings for those companies. So that's the way we think about that. That trade has basically, I think the opportunity still exists to be owning companies that sell domestically and basically selling companies that are more internationally exposed. That's one of the risks around the so-called Magnificent Seven companies. Around 50% of their sales actually take place outside the country, outside the United States. So that's one source of potential risk. Now, we think about these big companies and the source of excess return. There have been fantastic stock performance in calendar 2023 and calendar 2024. Those were associated with premium earnings growth. That premium growth is likely to narrow pretty substantially. There's some numbers around that. If you look at 2024, and of course the fourth quarter results still yet to be reported, but their earnings growth was 30 percentage points greater than the rest of the market. That's likely to narrow to something like 7 percentage points premium in 2025 and 3 percentage points of premium in 2026. So that narrowing premium earnings growth is likely to result in a narrowing excess return. Still outperforming in the coming year, but by a relatively small amount. And that's one of the reasons why, when we think about the best investment trade out there right now, has been focusing on mid-cap stocks. Mid-cap U.S. equities, somewhere between $5 billion and $20 billion U.S. in size. That's an area of the market that has outperformed long-term. They trade at much lower multiples than the rest of the market, probably 16 times forward earnings relative to 22 or 23 times for the large cap stocks. Similar kind of growth rates. That's a much better risk reward in my opinion.
So you favor the mid caps, and the Mag 7 still have some room to run. I'm curious, do you see any interest from U.S. investors to reallocate to China? And if not, what would it take to see more rotation back to China?
We have not seen a lot of interest in terms of my conversations. To be fair, my focus is primarily on the U.S. equity market, but when talking to U.S. companies, U.S. investors, the question is more about, can they get perhaps China access via U.S. equities if they had to do so, as opposed to owning the actual U.S. Chinese companies. That's the questions that I'm receiving.
I want to start with your outlook, in particular on steel and cement, because you said that it's going to be the most stable year since 2021. I found that a little bit surprising, just given the dire warnings last year from Chinese steel companies that we could be facing a prolonged winter ahead. So what is driving this outlook?
Yeah, I think the big changes here is really on the demand side. We are expecting a return of infrastructure activities. I mean, the past 3 years is really mostly about property and then some softness of infrastructure projects. I think the property correction, because the absolute construction activity has shrunk already quite a bit. So now infrastructure is a bigger part of the construction demand, which actually has been facing tremendous problem because of local government debt. Effectively, the dollar actually went into the infrastructure projects from the funding has getting lower and lower, despite there has been pretty stable on the surface support to the infrastructure. I think it has been the biggest victim of local government debt, financial distress. And I think now the trend is reversing. We are seeing a very large-scale local government debt resolution plan.
That's right.
As a result, working capital should improve significantly at the local government level, and therefore return of the infrastructure projects. Half suspended or new starts, we expect all of them probably will come back. We have made pretty prudent assumption that it's no longer going to decline this year. It's going to stabilize for a couple of years. I think there's also a chance for a bit of a upside risk based on how we track the activities on the ground.
Okay, so is this government-led sort of rebound in infrastructure activity? I'm curious though, because last year we saw downward pressure on things like iron ore, largely because of this contraction in domestic demand and the overcapacity issue as well. Have you seen an improvement in that situation, and in terms of cash margins for some of these companies as well?
Well, I think on the iron ore supply demand itself, I think it's unlikely to, if you have a stable demand, unlikely to make too much changes. However, the expectation ahead of the construction season last year was very high. So we went into the construction season post-Chinese New Year. There was no seasonal pickup, and therefore price correction. So we had 2 rounds of that on iron ore for March and September. And this year is almost the opposite. Everybody went into Chinese New Year with very, very timid restocking, given there's very little expectation.
Right.
But given the fundamental change on demand, at least I think in the upcoming construction season, we see some surprises. The oversupply problem on steel is still there, so the pressure will still be there on the margin. But on a relative basis, I think we are a little bit more positive, I would say, on flat steel, which actually goes into the manufactured products.
I remember you had a report on the overcapacity issues in various sectors in China, and the top sectors last year had been solar panels, lithium batteries. How close are we to this inflection point around that?
I think we are already clearly seeing the bottom, to a certain extent, a little bit of a pickup, I think, in margin, if anything. The idea is we have, since middle of the last year, we have seen, from producers' perspective, already supply responses, curtailment in terms of production cut to bring the balance back to the market. But in the meantime, we're also seeing continued capex, actually deceleration in responding actually to the overcapacity. We also see policy changes actually on a very holistic view across many oversupplied sectors, including some of the commodity sector, the steel or cement.
Okay, so let's talk about lithium prices. What's your projection there, and for the earnings of the big lithium producers as well? Because as far as I understand, since September last year, the domestic lithium market has been running at a deficit.
Yes, clearly you've been reading our report, so thank you for that. That's absolutely correct. I think that the market has been a deficit since September, on the back of 2 reasons. One is we have definitely seen supply responses, curtailment, production cut. So that helped floor the actually pricing from falling off further. I think the other things we have to say, the stimulus on the trading program for EVs clearly has helped. So we've seen strong battery demand. We've seen strong energy storage demand on battery as well. So both these two factors together is holding the market at a balance. I think the only issue now is it's always my view that you need to have less capacity to bring pricing powers back to really have a sustainable pricing improvement, and production cut at best only stabilize price at the floor, and that's kind of where we are there for 2025. Capacity is still available on the side. We need time to digest those capacity. We need to see capacity development slow down. But in the meantime, pricing clearly has found its floor, but the recovery probably will be capped in 2025.
Okay, probably will take time for that. I want to talk about Trump, the U.S.-China relations, which has been very much in focus. And given that China has been using its dominance in rare earths, critical metals as a sort of leverage over the U.S., which area do you think is China most at risk in terms of its capacity to be self-reliant? Because you were saying something very interesting about bauxite there.
Well, I think self-sufficiency in many areas, in my observation, has become more and more a policy strategic focus. So I think at Goldman Research last year, we did so much work on food security, on energy security, technology security. So the idea is the reliance is there, but there's definitely domestic effort to change that. Now, for example, in U.S.-China, people would naturally think about soybean. This is one area China has to import quite a lot, but soybean import as percentage total consumption has not really moved up in the past few years, which is quite amazing. I think this is attributable to domestic effort in terms of improving yield, actually reduce consumption using some of the substitution. And then similar as that, I think this is an effort in kind of coping with long-term reliance. But one commodity I wanted really to bring up is actually bauxite. And this probably has less to do with U.S.-China relationship, but more of a China is increasingly import the use of bauxite for very important metal production, aluminum. And now self-sufficiency has came down rapidly in the past 5 years, and now it's only 20%. 20% self-sufficiency. So we are actually expecting it, at least in the medium term, higher and longer bauxite prices, which is very different than when I first started this industry, when my boss told me, low prices, bauxite supplies everywhere. I think the world has certainly changed around there.
Got to start with a very serious topic, and from there the topics get even more serious. But let's start with you first of all, sir, personally. According to multiple US and Western officials, the Russian government planned to assassinate you. This has been in the news over a number of months now. Can we start with that and talk to you about how things are going personally? When were you told about that, and by who?
It's about 1 year ago, and the information we've got from the US, from FBI. And I'm very happy about that, that they very early gave us that information. German government took that information, and the protection level now is very high. I have the same protection level than the Chancellor.
Wow, you have the same security protections as the Chancellor, Olaf Scholz. Yeah. And do you feel secure?
I feel secure.
Is there a reason why you wanted to stay in the job, even though that threat was hanging over you?
I love that job. We have to work. We have to work for freedom, and we have to work for democracy, and nobody can stop us,
including Russia. Let's talk about the challenge that comes from Russia now, and the push from the incoming president to push defense spending, perhaps as high as 5% as GDP. And we know it's been a struggle for many NATO members to get to 2% over the last number of years. Do you think that's doable, to get to 5% of GDP?
I think 5%, it's a big value, 5%. And I believe that if we first of all get the 3%, it would be great, because over the last 25 years, the Europeans did not invest enough money in security. I understand 100% President Trump. He's right that Europe has to spend more into the Western security, and we have to do it.
Well, my reporting over the summer was actually they were looking at 3%. So potentially this falls down to anywhere from 3 to 5. Germany, though, is only spending 2%. Do you think they can spend more on defense?
I think they can, and I think they have to do, because at the end of the day, Germany is the biggest economic in Europe, and they have to help to make Europe safe.
We just heard from Mark Rutte last month talking about it's time for Europe to shift to a wartime mindset. For decades, Europe decided to curb their defense spending and really outsource their defense to the United States. That failed, obviously, when Russia invaded Ukraine. Do you think Europe is still unprepared for the war that's on their doorstep?
We prepare ourselves, and if you see what we do in Rheinmetall is we invested over the last 2 years more than 7 billion to build up the capacities, and that's very important. And in between, I am able to produce 1.1 million artillery rounds, which is more than the US is doing at the moment. So I think we prepare ourselves, but we have to do more.
You also have production facilities inside Ukraine.
Yes.
How quickly will we be able to get ammunition production going inside the country?
In 12 months' time.
In 12 months' time?
Yes, yes.
There is potential that in 12 months' time, according to President-elect, this war could be over. Do you foresee a scenario where Putin will agree to some sort of ceasefire in Ukraine?
Nobody knows that, and as you know, President Trump said he's able to do it very fast. We will see if that really will happen. But even if that will happen, we need a lot more defense goods, because at the moment, as you know, the stocks are empty, especially for ammunition. But although the tanks, we have not enough tanks, we cannot protect ourselves.
What about the incoming administration in terms of communication? You are really the massive player in Europe, almost the only game in town when it comes to the European defense industrial complex. Are you talking to the incoming Trump administration?
We start to talk to that, and I will talk very, very early with the Trump administration, because we have to do it. And the reason is that I also have a lot of investments here in the US, and I invested some months ago more than $1 billion also to buy a company here, because I believe in the transatlantic relationship.
Do you think that you can partner with this incoming administration? And how was the communication and partnership with the Biden administration?
It was good, but at the end of the day, we as a company, we must be politically, let me say, a little bit independent. And we have to work with all governments. And that's very important. And I believe that we really can work with the Trump administration, because I believe that he is right. And the pressure that he is creating at the moment is good for Europe.
He's right with respect to spending more on defense. But is he right about the U.S. retracting some of its spending on Ukraine and really leaving it to the European Union to finance the efforts there?
I believe that we have to help Ukraine. If Ukraine will fall, we will have a big problem in Europe. If we have a big problem in Europe, because I believe that Putin will not stop with the on the Ukrainian border. So what about the Baltics? What about Georgia? What about Moldavia and all the other things? And I believe that it will be very, very helpful if the US and Europe is working together in this area. And at the moment, Europe needs US because the resources are not good enough in Europe.
Do you think there is a political will in Europe to offset any decrease in financing from the United States at a time of political turmoil where there's even upset in leadership in Germany and real questions around how much the public wants to keep financing this?
I believe that the new government in Germany, and as you know, we have election in 7-8 weeks, that the new government will create a very strong contact to the Trump administration. And I believe that they want to work out a good plan and to make a deal together. Europe and the US has to make a deal for security.
You talked about how you're investing in the United States, and I'm wondering how important it is to get a foothold in the U.S. to get around any potential tariffs or other types of issues that come down the pike.
Very important, very important. I understand all the issues that the U.S. has, and I said, okay, we want to make money, and President Trump wants to make deals, and he's right about that, and we have to take care about that. That's the reason that we are investing also in the U.S.
Are you also ratcheting back certain businesses in Europe that you think are going to be more exposed?
We grow at the moment 40% per year, so we can grow in Europe, and we have to grow in the U.S.
The president wants to make deals. Do you want to make deals? Do you think we need some consolidation in European defence?
Yes, I think it's possible, and I think it's important to do it. As I always said, Europe needs also a bigger machine in defence. And what I believe is we need a company which makes 40 billion per year. We are at the moment only on the level of 10 billion, but we will grow over the next years to 20 billion, maybe more. And the backlog is a very good one, so I believe that consolidation is very important.
You can grow organically to 20.
Yes.
Acquisitions. Have you got any in mind?
Yes, we have a lot in mind because, as you said, over the last 2 years we bought the lock performance here in the U.S. and the Spanish company.
Yeah.
We invested 2.2 billion in that, and we want to invest more, and we have more firepower.
Have you spoken to BAE?
We always speak with BAE, but
You've spoken to them about a possible acquisition?
No, we didn't speak about to merge or other things.
Would you be open to that?
At the moment, there is no discussion.
But would you be open to it? Would it make sense?
I'm always open if it makes sense.
And does it make sense?
I'm not sure, but we have to analyze that.
I want to go back to how John really started this topic. The fact that your life was put at risk. You're basically on a Russian hit list, but it goes beyond that. Dmitry Peskov last year said your company is, quote, a legitimate target. How, as a company, are you responding to Russia's hybrid warfare on the continent?
First of all, we have a very, very good cyber center. That's the most important thing, that cyber attacks will not come in. And the second point is we are not in war at the moment. I have not air defense and missiles around my factories. But if there is a higher potential that something will grow up, then we have to do that, for sure. We will protect our factories, and we have to do it.
Right. And you feel like the German government is a partner with you in this?
Absolutely. Absolutely. We are absolutely fighting shoulder on shoulder.
And when it comes to this assassination attempt on your life, do you believe it came from Vladimir Putin himself?
I don't know. I don't know, and at the end of the day, the information, as I told you, came from secret services, and we have to take care about that, and the government in Germany takes care about that. Not only the German government, also governments, if I travel to other countries, also that governments take care about that. I'm very grateful about that.
With the latest, here's Manus Cranny.
Jonathan, it's a quartet of good news, and it's a triptych in FICC. Citi has delivered FICC sales and trading of $3.48 billion. The estimate was just under $3 billion at 2.94. So that just shows you, again, the musculature of FICC, the good vol that you had in that fourth quarter into the election and afterwards, post that jumbo rate cut from the Fed. Buyback, $20 billion. This was the missing piece in the chessboard, according to some of the analysts. It was a slight promise by the bank just before Christmas in terms of the narrative from there. Mark Mason hinted that this would be. So $20 billion in a buyback. FICC is a comfortable blowout. And investment banking revenue, $925 million. Again, this is what the market was hoping for, is that renaissance, that change that Jane Fraser has enacted across this bank would be rewarded. Investment banking, $925. The market was looking for $896. So that's a comfortable read for Jane Fraser at Citi this morning. Jonathan.
Manus Cranny, thank you. Citi up by 2.4% in the pre-market. Shanali Basso with us around the table. Shanali, is that a clean sweep this morning? Decent across the board here?
The numbers themselves are very decent. You have them beating on fixed income and trading revenue. You have really strong results here in terms of net interest income as well, above expectations. What investors will also be looking at, John, though, remember, this is a bank that's in the middle of a turnaround story. They did lower their return on tangible common equity targets. The new target for 2026 is now expected to be between 10 and 11%. That used to be higher, between, let me tell you exactly, it used to be between 10 and 12%, I believe. Yes, 11 and 12%. So they are lowering that for next year. By comparison, Goldman is expected to be bringing up in the medium term above 14%. JP Morgan puts up 17% like it's no problem every quarter, right? So that is going to be the number for Citigroup that investors are going to be looking to, because really, with regulatory hurdles that Citi still faces, how can they keep their expenses in line to bring profitability up as they go through this turnaround story?
That I find interesting, that at least for the moment, we are able to get it some decent of a rally, despite the fact that they lowered their return on tangible equity goal, because this had been such a big thing for them. Mike Mayo had said that he didn't think they'd get to their 12% target until 2027. Are moving the goalposts, is this something that investors will be okay with Jane Fraser, who is just so under pressure right now?
Listen, the answer is maybe, because at least you know where they're going now. They're giving you credible targets in terms of what they need to put out the door and what they're going to bring in the door, while, by the way, beating on expectations with the revenue they're bringing in. If they're bringing in revenue and they're showing that they're steadily beating, then maybe it's okay. The point that you made earlier, John, about Janie, you made it, about the models, the business models. They could take on less risk while they partner with private credit firms to bring money in the door and gain client share. They have a new head of investment banking. I think you guys are talking to him very, very soon as well. That will change the game for Citigroup. But remember, the other story for this, too, is they're the cheapest. You have JP Morgan and Goldman Sachs, each trading well above 2 times book value. Citigroup is still well below that. They've made progress, but they have a gap to close here, and investors are looking for them to do it.
Offering some headlines on the outlook here. Let me go through them, Shanali, just briefly. So for revenue for 2025, a range of 83.5 billion to 84.5. The estimate was 83.2. For net interest income, ex-markets, to grow in 2025 modestly. To your point, does that do enough to offset this morning, just rolling back the profit target just a little bit?
The modestly part is a little hard when JP Morgan an hour or two ago said that they're going to bring in $1 billion more in net interest income. They both have massive card businesses. When you hear Mark Mason, the CFO, talk to journalists shortly, but also both of them, Jane and Mark, will talk to analysts soon too. Do they see something different in terms of credit quality? Are they more cautious than their large rival, JP Morgan? Is part of this pressures internationally? Remember, Citigroup has that special concern that a lot of other banks don't have as much of. This is the question.
Joined now by Kristen Peck. Great to see you in person.
Thank you so much, Katie. It's great to be on today.
So let's start with the broad breakdown. Of course, as Shanali just walked us through, you address companion animals. I'm thinking cats and dogs, livestock such as cattle. What is the current breakdown when it comes to your revenue, and how do you see that evolving over the next couple of years?
It's great to be on. And what's really important to know about animal health is that it's been growing 4 to 6% over time with a compound annual growth rate of 5%. As you mentioned, companion animals have been growing a little bit faster. So that generally grows about 6 to 8%, and livestock a little slower at 2 to 4. Right now for Zoetis, about 65% of our portfolio is in companion animal, the faster growing. And I think what really differentiates Zoetis is that we're driving that market growth with our innovation and with our commercial excellence. So we've been driving a compound annual growth rate of 8%, which is 3% above what the market's been doing. And that has been led by innovation across both companion animal and livestock.
When it comes to the longer-term sales outlook, specifically to companion animals, where do you see the biggest opportunity when you think about categories such as cancer, arthritis, or cardio? I mean, where do you see actually sales being driven by?
Sure. I mean, we have 3 phenomenal franchises today that continue to grow double digits. That's growth in parasiticides, growth across our dermatology franchise, where we've been on the market for 11 years, still with double-digit growth, and certainly our pain franchise with Librela and Solensia monoclonal antibodies for pain. But the future portfolio is just exciting. We are just getting started. And so one of the big disclosures we've made here at JP Morgan this week is around the potential we see in important new areas such as renal, which we think could be a $3 to $4 billion market with huge needs across dogs and cats. We talked about oncology, which is a huge need, and as well as cardiology. And what's really different about animal health than human health is we're still young in this. Really, there are no therapies for these products today, and we're really excited, Zoetis, that we'll be able to launch, products throughout the next 1 to 5 years. And in fact, what we announced here is that we'll have an approval every year for the next few years, and we think that'll really drive the growth, for Zoetis and for the industry in years to come.
Well, you're talking to a cat lady. I definitely worry about renal issues, so glad to hear that you're working on that. I am curious, though. You take a look at Bloomberg Intelligence data, and they show that vet visits have actually declined for 11 straight quarters, which I was surprised to see. I mean, how do you manage around that? How dependent are you on people actually taking their pets to the vet?
One thing we've been saying for years, and last year we showed charts, is there's absolutely no correlation between the vet visits and the growth of our company. Historically, vet visits actually grow between 0 and 1%. And again, as we've mentioned, we've been growing with a compound annual growth rate of 8%. And really, what you need to do is break down those vet visits. Therapeutic visits for itch, for pain, have been growing, and in fact, they've been growing double digits. And what you're seeing, especially even in some of those categories, is more of the sales actually going online, where we've seen, a 30% of our Apoquel sales today, which is for allergic itch, are online. So vet visits are not the best proxy for understanding the growth of Zoetis. The better proxy to really look at is revenue growth in the vet clinic. And so we're really excited that the new pet owner is a millennial and Gen Z, and pets are such important parts of their life that human-animal bond is incredibly strong. With Zoetis launching new innovation in areas of unmet medical need, we think that's great growth for years to come.
Yeah, I haven't seen my cat since Sunday, so I'm feeling a little emotional. But let's move on. Let's talk about Librela here. Of course, that treats osteoarthritis in dogs. And you take a look last month, the FDA actually posted a letter to veterinarians warning about the adverse side effects, including seizures, lameness, loss of muscle control. What are you doing to address some of those concerns?
So the Dear Vet letter was actually a communication that really helped pet owners and vets understand what they're seeing. And we actually found the letter really helpful. Basically they said is the adverse event rate and what they're seeing is very similar to what we've been seeing globally. Librela's been on the market for over 3 years globally, and we are incredibly confident in the safety and efficacy of this product. And there's so many pets this has made such a big difference for, 18 million across the world. And really what the Dear Vet letter said is what they're seeing in the U.S. are the same adverse events we've been seeing around the globe. And in the end, they were making recommendations to help communicate to veterinarians and pet owners what those were. And what we've been saying for the last 9 months is, similar to what we've seen in other markets, we expected a label update, and we expected the label update to look like it did in other markets, because that's what we're seeing in the adverse events, and that's exactly what that letter said. So We remain very confident. In fact, Librella's launch in the U.S. has been the best launch in animal health ever. So we remain very confident and excited for the future of Librela.
And Kristen, somehow we have about 30 seconds left with you, but I really want to get to bird flu. Of course, it's spread from birds to mammals, and you saw your first U.S. human death as well. I know you have bird and cattle vaccines available. Put it into context in your business. I mean, do you see this as a growth and sales opportunity for you?
You know, our primary focus is not around the growth and sales opportunity. It's about taking care of the animals. It's about addressing the disease in both, poultry, as you mentioned, as well as in dairy cattle where we're seeing it. We are expecting, as we announced today, to get a conditional license for high-path avian influenza in poultry, and we're working with the USDA in a trial right now in dairy cattle. Our goal is to support governments and to support producers in ensuring the best health care for the animals.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Israel and Hamas agree to a ceasefire. It will begin on Sunday and last initially for 6 weeks. The deal includes the release of 33 hostages, while Israel will withdraw from populated areas of Gaza. Risk on returns. Cooler US inflation sparks a global rally, with Asian stocks tracking gains on Wall Street. In Japan, Bloomberg understands BOJ officials see a good chance of a rate hike next week. We bring you our scoop. Plus, earnings season gets underway as TSMC posts a big beat on net income, and 4 of America's biggest banks see their second most profitable year in history. We look ahead to the numbers from Morgan Stanley and Bank of America later today. We talked about the bank earnings story. We have earnings coming through from the luxury group Richemont right now, with third quarter sales at a constant FX level up 10%, well above the estimates. This is a stock that is up around 35% over the last 12 months, where the jewelry division has been relatively resilient to the slowdown in luxury spend in China. China, of course, in focus for this company. Watches, that division has been under pressure, but it's a beat in terms of the earnings that have come through, the sales numbers for the third quarter. Just breaking it down in terms of the top line number, then we'll go regionally. Sales for the third quarter coming in at $6.15 billion. The estimates had been for $5.64 billion. There's the significant beat then in terms of sales. Over 6 billion euros of sales in the third quarter. The estimates had been for 5.6 billion euros of sales. In the Americas, revenue was up 22%. In Japan, you saw a gain of 19%. And in Europe, a gain of 19% as well. Well above the estimates in Europe, where you'd seen an expected increase of 6% in terms of revenue. The actual number coming in at 19% as the increase in revenue for Richemont. This will be a stock to watch at the open at 8 a.m. UK time. Pun intended, of course, the jewellery and watchmaker. We're also getting numbers we expect in terms of Renault sales as well. Group vehicle sales for the French automaker up 1.3% versus 2023. We keep an eye on Renault as well. That stock is, of course, one that's been questioned. It's actually up around 48% over the last 12 months because the broader challenges for the auto sector in focus. But you're seeing vehicle sales up 1.3% for Renault and that group versus 2023. That's a year-on-year number for that company. Let's get to the markets right now. It is risk on, given the soft CPI print we had out of the US yesterday. Yields on the 10-year dropped about 15 basis points. To what extent will this be a prolonged headwind then, or tailwind, I should say, for the equity space? European stocks actually taking a breather after rallying more than 1% yesterday. Again, on the more benign picture in terms of inflation out of the US. European futures now pointing down by 0.3%. FTSE 100 futures, meanwhile, pointed to gains of 0.1%. S&P futures, after the strong gains that came through yesterday, currently flat. The S&P rallying 1.8%. Nasdaq 100 looking to lose 32 points after gaining 2.3% yesterday, the biggest rally since Trump's election. Let's flip the board and have a look at what is happening in Asia, because the handoff is there in terms of the gains that have come through broadly on the MSCI Asia Pacific, up 0.8%. The CSI 300, though, on mainland China, looking for the next catalyst there, currently flat. The Nikkei in focus on the Bloomberg reporting around the BOJ looking potentially to hike next week. The Nikkei currently up just shy of 0.2%, and the Japanese currency in focus, gaining 0.2 in the session versus the US dollar at 156, again on that Bloomberg reporting. Cross asset, let's flip the board. We saw that big move into treasuries yesterday, of course. Yields came down. Has the bear market around the global bond sell-off come to an end, or is this temporary reprieve in terms of government borrowing costs? 465 right now in the 10-year. The pound continues to be in focus, under pressure again in the session today, down 0.2%. We did have a better picture when it comes to inflation yesterday out of the UK, of course. 122 on the pound, Brent $82 a barrel, and Bitcoin closing back in on 100,000 at 99,383, benefiting as well from expectations that the Fed could cut, fully priced now for July. Currently, the cryptocurrency down 0.3% in the session. Let's get to geopolitics, though, because Israel and Hamas have agreed to a ceasefire deal in Gaza. It pauses 15 months of fighting that has killed thousands of people and caused widespread destruction. The three-phased element, an agreement, will take effect on Sunday. It includes the release of 33 hostages held in Gaza and Israel's withdrawal from populated areas in the Strip.
700 days of failure and 1 day of success. Well, we've had many difficult days since Hamas began its terrible war. We've encountered roadblocks and setbacks. We've not given up. And now, after more than 400 days of struggle, a day of success has arrived.
Let's get more with Bloomberg Horizons anchor Jumana Basechi. Jumana, what more do we know about the deal? How confident can we be that it will actually take place on Sunday?
Well, the deal is done, which is a very positive step for the region after more than 14 months of conflict and many, many false starts. As we know, there had been several rounds of negotiations over the course of the summer, several false starts, and we thought we were close to getting a ceasefire deal towards the end of the summer last year. And of course, that all massively reversed. But now there is a deal that has been agreed to, as announced by the U.S. and by Qatar yesterday. The Qatari Prime Minister, the Qataris playing a huge role in these mediation talks, making a statement yesterday to the effect of what the deal actually contains. Now, it's important to note here that what has actually been agreed to is phase one out of a three-phase ceasefire plan. So phase one is known as the humanitarian part of the ceasefire deal. It will entail the release of 33 hostages being held in captivity, some believed to be thought dead, in exchange for Palestinian prisoners. It would also allow for the passageway of aid into the Gaza Strip, much needed, with about 90% of the population facing acute food poverty. It will also entail Israel forces moving away from the central part of the Strip towards a buffer zone and allow for the internal movement of displaced Palestinians from the southern part of Gaza back into the northern part of Gaza. So all of those elements have been agreed to. Now, the more challenging part is what happens next and how you transition from phase one to phase two, which is a more permanent ceasefire and the release of the rest of the hostages, the male hostages, in exchange for even more potentially and again, very contentious topic, the release of Palestinian prisoners from Israel as well. How we get there is going to be a big question, and whether or not Israel are willing to offer further concessions in terms of the withdrawal and how much presence they want to maintain in the Gaza Strip is going to be a subject of discussion. But they do say by the 15th or 16th day of phase one, they need to start talks vis-a-vis phase two. What we do know, Tom, is that phase one is going ahead. This marks the end of bloodshed, but possibly not the end of the conflict.
Jumana, incoming President Trump, he's kind of taken claim for getting this deal across the line. How big a role did he and his team actually play in this agreement?
Well, you could say he actually played quite a big role. And back in December, you may recall that Trump said, and he said this, all hell will break loose if the hostages are not returned back home before he steps into office. He's obviously stepping into office in a couple of days' time. And so it has been a big focus of his. He has said consistently, even on the campaign trail, that he wanted to see this deal done and dusted before he stepped into office on January the 20th. So in this past couple of weeks, we've seen a bipartisan push. It has not just been the Biden administration administration negotiators, the Secretary of State, Anthony Blinken, Jake Sullivan in the region pushing the discussions, but also the Trump Middle East envoy, Steve Witkoff, came to the region as well. He met with Qatari officials, but then also with the Israeli Prime Minister Netanyahu himself on the day of Sabbath. And he came with a very strongly worded message to the Israeli government saying that Trump, under no conditions, no situation, wants to see this ceasefire talks or discussions being dragged on any further. And so it certainly does appear as though the Trump administration did give that extra push that was needed to get it across the line. Now, it also is relevant because if you want to think about the longevity of the deal, it is very important that the U.S. continue to support what is going to happen vis-a-vis phase 2 and phase 3. And the fact that the Trump team feels some ownership towards it suggests that Trump will have a vested interest in the deal being successful.
OK, Bloomberg Horizons anchor Jemana Pasechi on this historic deal with questions that still remain, of course, as we look ahead to Sunday and the first part of that deal coming into place. Jemana Pasechi on the ground for us, covering all of that in detail. Now to the macroeconomic policy, switching focus right now, because the December reading of US inflation rose by less than expected yesterday, igniting the best CPI day for the equity market since 2023. The core consumer price index increased 0.2%, marking the first step down in 6 months. Chicago Fed President Austin Goolsbee says he's optimistic about taming inflation without sparking an economic downturn.
The trend continues to be improvement in inflation. I'm still optimistic for 2025 that we can continue growing and have a soft landing.
OK, for more, let's bring in Bloomberg's Valerie Teitel. Valerie, so we're hearing there from Goolsbee on a soft landing scenario for the US economy. How have expectations around the Fed's next steps altered and changed in light of the inflation data we got yesterday?
Tom, there is a lot of market optimism out there that the Fed's easing cycle isn't done just yet. That cool CPI reading really igniting this optimism that we could still see those 2 Fed cuts during 2025. That is the Fed's base case. There is some speculation out there that could come again as soon as March. It's going to put to bed the fears that the Fed would raise rates this year, at least for now. But it ignited a rally in the Treasury market, as well. Those yields coming down near a double-digit basis point move in the Treasury market. That bond rout is over at the moment. It did ignite an even further rally in the gilt market. Those fears about the UK government being put to bed for now. But looking ahead, at least for the Treasury market, we have those U.S. retail sales numbers coming at 130. We also hear from the Treasury Secretary pick from Trump, Scott Bessent. He has his Senate confirmation hearing later today. We did get his statement pre-released where he said that Trump has a generational opportunity to unleash a new economic golden age for the U.S. He warned that they should that the U.S. should protect its critical international supply chains, and he did critically back up that the U.S. needs to protect needs to ensure that the U.S. dollar remains the world's reserve currency.
We also have the Bloomberg scoop around the BOJ's thinking ahead of its decision next week and seeming to edge closer to another hike.
Yeah, we've seen the yen have 2 days of strong gains, now at its strongest in over a month. Now that Bloomberg scoop on the Bank of Japan says that this good chance of a January hike would come if the markets are calm heading into the Bank of Japan decision. The Bank of Japan's decision is next Friday, so 5 days after President-elect Donald Trump takes office. So as long as we have some calm markets during the week next week, that Bank of Japan hike on that Friday does seem a bit likely.
Valerie Teitel, thank you very much indeed. Yep, the yen strengthening on the back of that story. Another big decision, of course, for the central banks next week. Looking, though, through the market context on the back of that inflation data that came in softer, of course, for the US as well. Valerie Teitel, our markets reporter, thank you. Turning to earnings news, TSMC's profit in the December quarter topped estimates with a 57% rise. The earnings call has just kicked off. Bloomberg's Annabelle Drulas is tracking all of this for us. Annabelle, another strong picture in terms of the numbers coming through for TSMC. It seems a lot of that is driven by that AI demand. What stands out to you in terms of the numbers that we've had from this company?
Well, what's really standing out, Tom, just in the last couple of minutes is we've got the earnings call that's just kicked off and we're hearing about the expectations for the first quarter, and they're strong, which is great news, of course, for anyone that's invested into this AI theme. But talking about the numbers themselves, so first quarter sales are expected to be between $25 to $25.8 billion. The estimate had been for $24.43 billion. Gross margin as well. This is seen being better than expected at 57 to 59%. The estimate had been for 56.9, and put it in context as well, because TSMC's longer term expectation around the gross margin is for it to be around 53%. So even by their own metrics, they're doing better than expected. It goes back to really that growth story, because when you drill down into the fourth quarter numbers as well, which you said came in better than expected and a huge revenue rise on the year, 3/4 of their revenue is coming from 7-nanometer chips and above, so their most advanced technology. And that really does speak to that continuing demand that we see, that also translates into the CapEx plans, because I'm just taking a look at 2025 CapEx that's just dropped as well. That's between $38 to $42 billion. The estimate had been for $35 billion, so they're continuing to spend in this vein as well. So lots of commentary that's just dropping now. We do actually have a T-Live blog underway, so of course if you're interested you can get more details from our reporters and editors that are also tracking this right now.
OK, Bloomberg Asia Tech reporter Annabelle Drulers zeroing in on that CapEx number, and rightly so, in terms of the indicator around the confidence that TSMC has going forward in terms of demand, of course, for the chips that it produces, that major foundry owner, looking potentially at CapEx of up to $42 billion for 2025. Annabelle, thank you. Coming up, we're going to take a closer look at earnings for the banking sector. Big US banks reporting. There have been some superlatives around the banking earnings story. They close out, of course, the Biden era with a surge in profits. The details are next. This is Bloomberg.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
We've been hiring, across the businesses in areas that we want to grow while we get more efficient. And so generally that's in places, in client-facing roles across the commercial bank, the investment bank, our capital markets teams within our markets business, as well as in wealth management.
We believe it is our responsibility to continue to press for a more transparent regulatory process in order to foster a more efficient financial system that supports growth and competitiveness of the U.S. economy.
OK, Wells Fargo CFO Mike Santomassimo and Goldman Sachs CEO David Solomon, of course, both speaking after their earnings reports. 4 of the biggest banks in the US have now ended the Biden era on a high note, notching their second most profitable year on record. For more, let's bring in Bloomberg's Charlie Wells, who's been following all of the earnings story across the banks for us. Charlie, what is the outlook then for the rest of the year? What have we been hearing from executives?
Tom, I think CFO of JP Morgan, Jeremy Barnum, put it best yesterday when he said that animal spirits have returned to the sector. So there is so much optimism. There is this hope that M&A activity will pick up on one side. There's also this hope that rates might kind of play ball here and that they're headed down, but they might be headed down in sort of a slow and perhaps slightly more predictable predictable pattern. And so that could be good on the deal side, but also good for that net interest income side, where you've still got some of those rates providing that revenue coming in on the lending side.
Yeah, it's really interesting. So arguably something of a sweet spot on rates for these banks, at least for now. We've heard a lot, of course, and you touched on this for us yesterday, around recent shake-ups in terms of the management of some of these top US firms. Let's take a listen now to what Jamie Dimon had to say about his own position at JP Morgan in the near future.
I do love what I do. I'll be 69 in March. I think it's just a rational thing to do. I've had a couple of health problems, I just think it makes a lot of sense.
Well, Charlie, Jamie Dimon has long been in the spotlight in terms of succession plans. When he steps down, he's long made a joke of being 5 years down the line. Is this Jamie Dimon finally kind of putting his finger in the air and saying, you know what, it's time for me to think about stepping down?
This was one of the people questions that really kind of loomed over this week. It came into the spotlight before the earnings were announced because the bank, JP Morgan, announced that COO and President Daniel Pinto would be retiring at the end of this year, that Jen Pipsack would be named to the COO position, but does not, at least at this time, want to be the next CEO. And I mean, look, Dimon has been at the head of this bank since before the iPhone was invented. So it's been a really long time.
Wow.
He's turned it into the country's largest bank. And I think it's just difficult because he is such a figure in this industry. There was, of course, that joke about, 5 years more that he would stay. He told investors in the middle of last year that time frame had changed. And yesterday, during the earnings call, he talked about how, there are candidates that the media, that analysts may know about. There may also be one or two that they don't know about. So a little bit of, kind of building suspense there and kind of adding to some mystery. But this really has been one of the biggest questions of the week.
OK, and it suggests that this story is going to continue to fascinate, isn't it, in terms of the succession plans at JP Morgan. Meanwhile, Citi, I believe 3 out of their 5 main units had record revenues, and yet it seems they are looking at job cuts. What's going on?
Yeah, they also announced $20 billion in share buybacks,
right.
But they are in the middle of a turnaround. They've been talking a lot about implementing new technology and trying to, be more efficient. That tends to mean layoffs. So they said that they are going to be earmarking $600 million for severance payments. Of course, that comes with layoffs. That's a little bit lower than what they had last year when they slashed 10,000 jobs. Management had said that as part of this turnaround, they want to cut 20,000. So we've got 10,000 left. It looks like we kind of know what that means about the year ahead. Potentially layoffs.
OK, potentially more layoffs at Citi. So the pain point there. JP Morgan, I love that time frame. Head of the bank, or at the bank, since before the invention of the iPhone. Bloomberg's Charlie Wells on bank earnings, and we've got more big numbers dropping, of course, in the banking sector later today. Charlie, thank you. Coming up, President Biden makes his farewell address. We bring you that story and a roundup of some of the other news we are following. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Other stories making the news this Thursday. President Biden has delivered his farewell address from the Oval Office, listing his achievements over the past 4 years, while also voicing concern about the future of the US. The president said he worried about the consequences if wealthy Americans use their influence to win tax breaks or roll back efforts to combat climate change.
I want to warn the country of some things that give me great concern. This is a dangerous and that's a dangerous concentration of power in the hands of a very few ultra-wealthy people. And the dangerous consequences if their abuse of power is left unchecked. Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms.
Meanwhile, Bloomberg has learned that Canada has drawn up a list of $105 billion worth of American goods that it would hit with tariffs if President-elect Donald Trump imposes levies on its northern neighbour. Our source says the list Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Israel and Hamas agree to a ceasefire. It will begin on Sunday and last initially for 6 weeks. The deal includes the release of 33 hostages, while Israel will withdraw from populated areas of Gaza. Risk on returns. Cooler US inflation sparks a global rally, with Asian stocks tracking gains on Wall Street. In Japan, Bloomberg understands BOJ officials see a good chance of a rate hike next week. We bring you our scoop. Plus, earnings season gets underway as TSMC posts a big beat on net income, and 4 of America's biggest banks see their second most profitable year in history. We look ahead to the numbers from Morgan Stanley and Bank of America later today.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, I'm Caroline Hyde.
And I'm Mike Shepard in Washington, in for Ed Ludlow. This is Bloomberg Technology.
Coming up, could Elon Musk be TikTok's savior? China is analyzing the option to save the social media company in the United States and work with the next administration. Plus, NVIDIA CEO Jensen Huang goes to China this week as the company is slapped with curbs on the sale of its AI chips abroad. And off to the space race, with the space infrastructure startup Loft Orbital out with new funding news to operate its satellites in low Earth orbit. But first, we check in on these markets, which have been moved around from a volatile perspective. On the positive side, inflationary headwinds cooling if you look at some of the wholesale prices. Does that bode well for CPI tomorrow? But then we have the ongoing narrative of how we impose tariffs on other countries, in particular on China, in the next administration. We're currently trading flat as we have scoop after scoop coming from our Washington-based colleagues. Bitcoin, though, managed to fend off some of that risk sentiment. We're currently trading 2.2% higher, perhaps more looking towards where we could see Trump and the next administration eyeing crypto. Move on to have a look at what's happening in terms of the individual movers. And I go to a key story of the day. We are, of course, going to be analysing if Elon Musk could indeed take over the US operations TikTok. It is being eyed by Chinese officials, but it has its impact on Meta, which also has been falling lower, I might add, because there's some concerns surrounding the fact that, well, they're going to be offloading some of their lowest performers at a faster rate. We'll get to that in a moment. Snap currently off by 6%, if indeed TikTok US could be staying for longer here in the United States. If, of course, by January the 19th, it's deemed that it has to be banned or divested, could that divestment come to one Elon Musk riding to the rescue? Let's get to all of this with Bloomberg's Sarah Fryer. And Sarah, where has this narrative come from that Chinese officials, not ByteDance, but Chinese officials might think that Elon Musk could be a good owner of this key social media company?
Well, from what our sources tell us, they have been evaluating the potential options for TikTok should the ban go through, which it looks like, based on the Supreme Court arguments and how that went, that it's very likely that we will see the law be enacted. Elon Musk appealed to the Chinese government because he already has experience dealing with businesses in China through Tesla. He has a long-standing relationship with that country. The thing I want to give pause here on is, this is the Chinese government's idea. The whole point of this entire exercise of trying to disentangle TikTok from its ownership was to reduce the links to China. So would the U.S. government really go with a solution that involves somebody that is expected to be friendly with China? Well, maybe it won't matter because of Elon Musk's close ties to Donald Trump, which the Chinese government is also seeing as a positive according to our sources. He has been at Trump's side day in and day out. He gave more than $250 million in support of his campaign. So it's this really complicated web of, we're trying to get, the US government is trying to get this app out of connection to the Chinese government, and the Chinese government has a say in how that happens because of the TikTok algorithm. So it's getting very complicated very fast.
Sarah, back to Elon Musk, but more from the perspective of him as a social media platform owner already. How would acquiring TikTok work for him? Is this something he has floated before or thought about before? And how would he come up with the financing, too? It would be a pretty expensive purchase.
Well, it would be relatively insane to do this. I mean, he just bought TikTok. Sorry, God, excuse me. He just bought Twitter for $44 billion in 2022. And he's still paying off those loans. So he's not very liquid. He's the richest man in the world, but his money is not very accessible to him. If he were to buy TikTok or propose such a thing, it would certainly cost many billions. We don't know exactly how much, but some estimates put it around 40 to 50 billion for TikTok US. It could be a different price depending on the diplomatic interest in that kind of a deal. We don't know yet if TikTok, if it would be sold, which nobody's talking about just yet in the company. If it would be sold, then would it happen in a competitive process, or would it be more of a diplomatic arrangement between China and the U.S. and the company and whoever wants to buy it? So some people are already working on it. I know Frank McCourt was on your show last week with Kevin O'Leary. They have a bid. So it is something that could be an Elon Musk financing situation, but it could also not even get to that point.
Briefly, Sarah, the irony of all of this is some other Chinese-owned social media companies are doing really rather well. People are moving off from TikTok potentially to find new homes, and you go to Apple's App Store, what's trending?
Yeah, the top apps are from China, and I think that this is just indicating that the U.S. consumer is already embracing multiple Chinese apps. There's Shein, there's Temu, there's a lot of nascent social apps that are booming right now, and so I think that this is going to be a whack-a-mole problem. One of the solutions to the TikTok potential ban could be that they just rename a new one.
Bloomberg Sarah Frier, thank you. Now let's bring in Sarah Krebs into the conversation. She is the director of the Tech Policy Institute at Cornell University in Ithaca, New York. Sarah, this question of TikTok is coming to a head now. Any buyer would have to really demonstrate a complete separation from China. How would they go about doing that? What would be the process once this sale were to actually emerge, if ByteDance and China agree?
I mean, it's such an interesting question, and it came up in the Supreme Court hearing last week. And the TikTok lawyer said he did not even think it was possible to divest or separate TikTok from the owner ByteDance. He said it could take years if it's even possible. So at the same time, the U.S. Solicitor General in those same hearings said that she thought that maybe the Chinese government was playing this game of chicken and might at the last minute float some sort of alternative. But, the TikTok lawyer, I think, sort of shot themselves a little bit in the foot in the sense that he said this is really complicated. And as your last guest was just saying, essentially, the U.S. TikTok is ByteDance, and the Chinese government now stepping in at this stage is confirming what the members of Congress thought a year ago and years ago, which is that there is this Chinese government control over a U.S. social media company. It's hard to see how you can do that, certainly not by the 19th, and as the TikTok lawyer said, if at all.
Sarah, how would this fit into the broader exchange and relationship between Washington and Beijing over matters including trade and other technology-related security issues? Is this something that China could offer, perhaps as a bargaining chip, as Trump takes office?
Yeah, I think it's pretty savvy in two ways. One is that they're very mindful of the influence that Elon Musk has as an advisor in the incoming administration, but also that the incoming administration really seems to want to be making some like opening a door for better relations with China. Both of these countries in the last several years, including in the first term of the Trump administration, technology really was at the center of this rivalry. And so they've gone back and forth, and TikTok is emblematic of this rivalry. But we see this in the chip space, in particular in the chip space and AI. Just yesterday that the administration, the White House, the Biden administration in its last days issued a new policy, an AI diffusion policy, trying to make it more difficult for China to access U.S.-made chips.
I want to reiterate to our audience that, of course, no comments have been made by, thus far, the Chinese officials. We know that Elon Musk hasn't responded to this report, and indeed ByteDance itself has called it fiction. But I am interested, Sarah, to push us forward. What the outcome seems to be of a potential TikTok ban has been a movement onto other Chinese-owned social media companies. How big a national security issue is that, then?
Well, it's interesting to me. Either they don't understand the law, or they are banking on the fact that it will be just too difficult to enforce. Because last week on TikTok, they were trying to push people to Lemonade, which is also ByteDance owned. Now they're trying to push people to RedNote, also Chinese owned. And so all of those social media platforms would be covered under the law. There must just be an assumption that enforcement of this will just be a cat and mouse game. And maybe the incoming Trump administration, who again seems warm to the idea of, or has looked and indicated that they don't support the ban, might just turn a blind eye to these kind of complicated ownership structures, or what's RedNote or what's Lemonade, oh, that's Chinese owned, and just kind of staying enough behind it that something gets to perpetuated. But at the same time, what I think the members of the national security risk here was that you had 170 million Americans in one space. And actually, to the extent that they migrate elsewhere, that's actually a win.
Interestingly, Xiaohongshu, or RedNote as it's known, it seems to be organic movement, actually, going over to that particular app. It's not related to ByteDance, but as you note, Lemonade certainly is. So push us forward as to, you said how difficult it is to disentangle US TikTok from ultimately the rest of the parent company. China has some sort of authority here, even though, of course, there's not much direct ownership over ByteDance, but because they can control who gets to have access to algorithms sold by Chinese companies. Do you think in any way the Chinese would ever want its algorithm held by a US company, whether it's Elon Musk owned or otherwise?
No, I just don't see that scenario because it's too lucrative. That essentially TikTok is this very sophisticated and very effective algorithm, and it's as highly valuable to ByteDance, and there's no incentive for them other than to keep operating in the U.S., but to share any of that. And so I don't, again, as the lawyer himself said last week, I don't see how you can actually disentangle these, because then TikTok, without that algorithm, just becomes any other social media platform.
Sarah Krebs, it's great to have your expertise, Director of Cornell University Tech Policy Institute. Thank you. Let's just relook at Meta shares for a moment. As I mentioned at the top, the company is planning to cut about 5% of its lowest performers. This is all according to an internal memo sent to employees. Now, the memo reads, I've decided to raise the bar on performance management and move out low performers faster. And, of course, coming from CEO Mark Zuckerberg, the memo also mentioned intention to backfill these roles this year, all, of course, with an eye on where the focus is around AI for the company in the future. Mike.
Coming up, the White House rolls out new measures to bolster U.S. car manufacturing and AI development. Details coming up next. This is Bloomberg. The Biden administration is rolling out measures to boost car manufacturing and AI development in the U.S., even as it looks to sharpen curbs on Chinese technology and tee up potential restrictions for Donald Trump to enact. Let's bring in Bloomberg's Mackenzie Hawkins for more. Mackenzie, you've done so much reporting over the past year on this wave of restrictions on everything from semiconductors to AI technology. This is the final shot from the Biden team. Looking ahead, do we see the incoming Trump administration holding on to some of those curbs?
So this week we've seen almost a new regulation or two every day targeting China's tech industry and trying to boost America's. And National Security Advisor Jake Sullivan said yesterday that he does anticipate that Trump will maintain a lot of the China contours that Biden is setting up in his 11th hour of his administration. But Trump is a wild card on China and many other things, so it remains to be seen over the coming months what policies of Biden's he will keep intact and which ones he'll do away with.
Just remind us how expansive these new rules are, what indeed it includes, because it's not just AI chips.
So the restrictions announced today are actually targeting Chinese automotive technology. We have restrictions on the import of cars that contain certain software and hardware from China. And it's specifically internet-connected cars, but that's pretty much every car. You can almost think of a car, as the Biden administration does, like a smartphone on wheels. And the goal is to prevent China from gaining access to Americans' personal data as they travel along American roads. But this is also a preemptive measure because there aren't actually that many Chinese cars in the U.S. thanks to tariffs of over 100% on Chinese EVs.
Mackenzie, looking more broadly, some of these restrictions, including the ones in particular unveiled yesterday on AI technology, have started to hit a nerve. We heard NVIDIA really objecting pretty loudly. Do we expect some of those objections to now really take hold and have some influence?
So what we saw yesterday was the administration expanding what has now been several years of curbs on the export of AI chips to China and a bunch of other nations to the entire world, with caps for specific countries and caps for the maximum amount that can go to any one company. This set off a massive opposition in the tech industry led by NVIDIA, whose chips are going to be the most affected. And absolutely, they've been lobbying really hard. They're hoping that they can get a better ear than they feel like they've gotten the Biden administration when Trump takes office. We saw them put out a pretty heavily worded statement to kind of nodding toward the Trump administration having a less aggressive regulatory approach. And even NVIDIA CEO Jensen Huang said before the curbs were officially announced yesterday that he is sure that Trump will do the right thing. So we'll see what happens.
Bloomberg's Mackenzie Hawkins, thanks so much for tracking it. And look, let's hone in a little bit more on NVIDIA and Jensen Huang, because while Washington is slapping on these new curbs, and at a time when Beijing is investigating the company's own domestic presence, well, Jensen is embarking on a trip to China. And it's this week. Let's discuss Bloomberg's Peter Elstrom to more on this. Peter, interesting timing. Jensen Huang visiting the key capitals.
Very sensitive timing. We know that Jensen Huang is going to be in Taiwan this week. He's going to attend a party there on Friday of this week. But after that, we've heard, according to sources, that he's going to go over to mainland China, as you mentioned. He's going to stop into Shenzhen for a New Year's party. We understand, to celebrate with some of the employees there. And then his plans are to go to Shanghai and Beijing after that. He could still change these plans. As you pointed out, this is a very sensitive time. It also comes just ahead of Trump's inauguration. There's some expectation that maybe he would go to that too. But he is building a more substantial business within China at this point. They've been adding employees there, especially around autonomous vehicles. So the company had a bit of a setback, as Mackenzie was laying out earlier, with these new regulations around AI exports that affects NVIDIA very, very directly. They've been outspoken about wanting to oppose those curbs. But Jensen Huang is still trying to build a bridge between some of these different markets that are so important for his company.
Peter, one destination that doesn't seem to be on Jensen Huang's list right now is Washington or Mar-a-Lago, the incoming president's base of operations. Do we expect him to actually pay a call to Donald Trump? So many other big tech CEOs have done so already.
Yeah, so far, I would say, so far we don't know anything about his plans to attend either Mar-a-Lago or the inauguration, as you mentioned. I would stick a pin in that and see exactly what happens at this point. It'd be very surprising if he does not try to build that bridge to the Trump administration. As you say, so many of the tech companies have done this. Of course, Elon Musk has sort of led the way, but many, many others, including Mark Zuckerberg, have also been trying to build a closer relationship with the Trump administration as they come to power, and they're going to begin implementing these policies that are so important to the companies. And there are very few companies that have more at stake than NVIDIA and, by extension, Jensen Huang. So I'd be surprised if they don't meet sometime soon.
And indeed, he spoke with our own Ed Ludlow last week, saying if he's invited, he'd love to go. But Peter, how precedented or unprecedented is it for a CEO such as Jensen to be going out to China when, of course, he is upping his spending on EVs and R&D? Do lots of other companies, when facing this sort of antitrust issue and indeed political overhang, tend to make visits?
Well, we see a lot of these companies. Remember, it was not that long ago that globalization was the standard of business every place in the world. You saw many of these business leaders going to China and other parts of the world to build whatever kinds of global operations that they possibly could. I would say Tim Cook at Apple is another one who very regularly visits China. They have a huge operation there. Of course, their partner Foxconn builds most of the iPhones that we use around the world in China right now. They're trying to do more of them in India, too. But you see Tim Cook, Jensen Huang, many other business leaders are going to China because it's important either for their manufacturing operations, their research and development, or in some cases, the marketing of their businesses.
Bloomberg's Peter Elstrom, thank you. Coming up, Databricks gets over $5 billion in financing from lenders. We'll have all the details next. This is Bloomberg. Software maker Databricks has clinched more than $5 billion of financing from lenders including Blackstone, Apollo, and Blue Owl Capital, according to sources. This would be its largest debt raise to date. Let's bring in Brody Ford for more. Brody, what does all this money from this big raise mean for the company, and how does it help in this competition? They are going toe-to-toe with Snowflake. We just had the Snowflake CEO on yesterday. The two companies have really locked horns in this space they're in.
Absolutely. We've been seeing a lot of headlines with Databricks and billion numbers. A lot of big numbers, big headlines. You might say, what's going on here? The answer is that in a different reality, if we were in 2019, 2020, Databricks would have been public already. But there's a trend right now where these big startups, Databricks, Canva, Figma, they're pushing the label of startup a little bit by staying private quite long because they're able to access these huge pools of funding from private institutions. And so Databricks often talks about the virtues of remaining private a little longer, right? They're able to do things like make big acquisitions or hire aggressively. They say that a lot of these AI startups, their monetization didn't work out, and so they're going to try to either bring in the right people or bring in their technology. This allows Databricks to, one, offset some of the tax burden from employees selling their shares, and two, just continue to invest in the business in a pretty aggressive way.
And that's what's so interesting, that they're alleviating the tax burden for employees.
Yeah.
This liquidity moment, they can satiate with the secondary market. They don't need to IPO.
Effectively, their fundraise last month was IPO size. They raised $10 billion, right? And the fact that they then have to raise $5 billion in debt to help their employees offset tax burden shows you just kind of the gargantuan scale of Databricks at this point.
Extraordinary amounts, but still a lot of new AI products and acquisitions to be making. All things Databricks and Brody Ford, we appreciate it. Coming up, we're going to be speaking with D-Wave CEO Alan Baratz as quantum computing stocks face yet another week of volatility. Plenty more around the company that has risen some 400% since October, when everyone got very exuberant about one Willow chip coming out of Google and the movement of quantum. This is Bloomberg Technology.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Mike Shepard in Washington.
It's a quick check on these markets, Mike, because, look, we've got macro at play in many ways and some cooling of inflationary pressures. It's interesting that Bitcoin remains on the higher side as risk sentiment still a little jumpy at some of the tariff headlines. We're at 1.8% higher for Bitcoin. Move on and have a look at some stocks you have got to have been keeping an eye on throughout 2024 and now back in 2025. It has been a volatile path for some of the most highly known but still relatively small quantum stocks. D-Wave Quantum, Rigetti, quantum computing. We shine a light on some of the moves today because we've got B. Riley analyst Craig Ellis really once again affirming a positive view on the sector, the long-term potential, the recent developments offering some encouraging technical advances, he says. Of course, this comes on the back of some rather cooling words that came from NVIDIA's CEO last week. Remember Jensen Huang saying, maybe it's going to be 20 years until you get very useful quantum computing. What's the take from the C-suite? Alan Baratz is with us, T-Wave CEO. Wow, what a ride your stock has been on, but what a company you've been slowly building here. And I want to get your first take. 20 years? Sound right?
No.
Right.
Not right at all. So there are many different approaches to building quantum computers. Some of them will take many years to mature. But at D-Wave, we selected an approach that is actually commercial today. And this is a really important point. We have customers that are using our systems today in support of their business operations. So not 20 years, but today. Alan, can you talk a little bit more about those products and how customers are already putting it to commercial use? Sure. So the approach that we've taken to quantum computing is called annealing. And it's quite different from what everybody else in the industry does. We've been working on this for 15 years. We're on our 5th generation system. So we have companies like NTT Docomo that is using our quantum computers to optimize resources at cell towers, allowing them to support up to 15% more phones per tower. We've got other companies like Pattison Food Group. We've got companies that are getting near commercialization, companies like Interpublic Group, or companies like MasterCard. Alan, to follow up on the development and this timeline that is much in debate now, there is another question hanging over quantum computing, and that is the degree of government support that the industry might need and might be seeing. What more can Washington do to help support development in this area? Yeah. So government support is certainly important, although I will say that at D-Wave, we've built our business primarily on commercial customers. We have over 70 commercial customers. But government support is important, and we've actually got an issue right now. The National Quantum Initiative, which is the premier U.S. government funding mechanism for quantum, was passed during Trump's first administration. It was due to be reauthorized almost a year and a half ago, and under Biden, it still has not been reauthorized. So we're hopeful that with Trump coming back in, that will be reauthorized to provide incremental funding to the quantum industry.
There have been incremental and significant breakthroughs of late, though, in quantum. The reason your shares have been up and to the right significantly since October, November, December has been the announcements, for example, on the Willow chip coming from Google. How seismic was that? Because as you articulated at the top, there's lots of different ways of doing quantum here.
Yeah. So one of the main issues that must get addressed for what's called gate model quantum computing, which is the approach that pretty much everybody in the industry has taken, other than D-Wave. We do both annealing and gate. But error correction is critical to gate model systems. In fact, there's no evidence at all that without error correction, you'll ever be able to do anything useful with a quantum computer. Well, the Willow announcement basically for the first time showed how error correction could work on a quantum computer at an interesting scale. So this was a very important advancement.
Why then? And I'm just going to play hypotheticals with you. Why then do you think NVIDIA, which actually partners with Google Quantum's team, is casting some sort of shade on how quickly this could be useful?
Yeah, because I think that when you're talking about gate model quantum computers, we are many years away.
How many from your perspective?
It could be 7, 10, 15. We are many years away. But what Jensen got wrong was that he didn't recognize the fact that there's more than one approach to quantum. And so I'm guessing he has in his head only gate model, which has some very significant challenges still to be overcome, versus annealing, which is quantum computing that's in use today. Alan, what are some of the limitations that are currently posing a challenge or even an obstacle to further development of the kind that you just talked about? So when it comes to annealing quantum computing, which is the systems that we have in the market today, we're already capable of supporting business applications at commercial scale. But we are continuing to work on growing the size of our quantum computers to solve even larger problems and being able to solve them even faster, although we can solve things pretty fast today. I mean, we've been able to solve problems in the area of material simulation in minutes that would take well over 1 million years to solve on classical computers. So we're pretty good today, but there's a need for increasing size and speed, even in quantum computers. And we continue to work on that.
What's interesting is you got swept up, your share price got swept up in the exuberance when perhaps there were breakthroughs being made in a different type of quantum computing. We've got plenty of other players all seeing retail investors jump in, new exuberance around the next field of innovation. How has your shareholder base changed? You're offering potentially up to $150 million new shares. You're making the most of it.
Yeah. So first of all, I would say that the Willow announcement is applicable to gate model, and we are building a gate model system as well, in addition to our annealing system. So that is applicable to work that we are doing. It's just that with our annealing computers, that's not required today, and we are commercial today. As far as financing the company, we recently announced that we now have over $170 million in the bank. So we've got the cash we need to execute. We will always be looking for opportunities to increase that if we can do it with limited dilution. We are very sensitive to dilution in the stock. Alan Baratz, D-Wave CEO, we thank you. Coming up, we'll be joined by Loft Orbital Chief Operating Officer Alex Greenberg to discuss the space infrastructure startup's latest funding round. This is Bloomberg.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually, and ports are a major contributor. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress. By deploying electrified cranes and tractors, recycling and reusing resources, and offsetting emissions by allocating resources to preserve critical ecosystems. This demonstrates how ports can be drivers of positive change and sustainable growth.
Loft Orbital has announced $170 million in new funding. The space infrastructure startup helps customers deploy and operate satellites in low Earth orbit. For more on this, we're joined by the company's COO, Alex Greenberg. Alex, thank you so much for joining us. First, we want to ask you, how do you plan to deploy this latest injection of capital? Where is it going to go and how will it help you?
Yeah, so first off, thanks so much for having me. Really appreciate it and excited for the opportunity to chat with you. So following this round, we're really going to be focused on two key things. First and foremost, we are focused on launching satellites that we have in our backlog for our customers. So we've booked over 30 satellites that we are set to launch over the next couple years. We've been investing in our production scale, in our automation, in our fleet management capabilities. So we're really focused on deploying these satellites rapidly for our customers who have entrusted us with their missions to get to space. And then the second thing we're focused on is actually more of a forward-leaning nascent market, but that's the ability to fly our customers' AI applications in space. So we have a lot of customers who are not content on just collecting data. They actually want to make their satellites a lot smarter so that things can be detected in real time. And so to do that, they are developing AI apps, and Loft is enabling them to deploy those apps to our satellites as easily as you deploy software to the cloud. So we're not the application layer, but we're really the infrastructure layer, the servers in space, if you will, that allow those apps to function.
AI knows no bounds, not even Earth. I'm interested, Alex, what your customers ultimately want to achieve by going to space. NASA, Microsoft, US Space Force, the European Space Agency, what are they using your low Earth orbit satellites to really achieve?
There's really three fundamental things that we're enabling with our satellites. So we're not focused on one specific application. We're an infrastructure company that enables our customers to deploy any mission in orbit. But it really comes down to three things. There is connectivity and data, there's national security and sovereignty, and then there's understanding our climate. So we have customers across all three of those areas, but that's fundamentally what space is being used for today, and those are pretty big problems that are impacting all of humanity.
You've raised a lot of money, a lot of French VCs involved, given the CEO himself is French. But I'm interested as to the competitive nature of space right now and the fact that someone very close to the next administration is pretty prevalent when it comes to SpaceX. How are you finding your niche? How are you seeing the industry evolve?
Absolutely. So taking a step back, we started the company 8 years ago. My co-founders and I had worked in the industry for a while. And what we saw is that it just took too long to get satellites in space. So it can take up to 5 years from when you kick off a satellite mission to when it actually launches. And for an industry that needs to iterate quickly, that has to innovate, that has to provide real value to customers, 5 years is just way too slow. And so we set out to start Loft to get customers to space in months, not years, and be the fastest, most reliable, and just simplest way for customers to get to space. So that's really where we differentiate. And I think today, what you're seeing is commercial space is entering a golden age. I think there's no better time to be a space company. Luckily, we've been building this company for 8 years. We've raised over $300 million of venture capital over that time. We now have over $500 million of aggregate contract value over the life of the company since inception with some of the customers that you mentioned. And so we're really ready to focus on scaling over the next few years.
Alex, Caroline referred to Elon Musk and his proximity to the president. And of course, his SpaceX is one of the biggest presences in the entire field. Now, what sort of opportunity do you see the incoming administration offering you in terms of expanded business, and also what sort of challenge?
Yeah, well, so first off, SpaceX is really changed the game in space by, I wouldn't say making launch a solved problem, but certainly by lowering the barrier for companies like us to get to space. So we're really thankful for SpaceX and their contribution to the industry. I think, this incoming administration has a history of being very friendly towards commercial space. So budgets that we rely on for our customers are certainly going to go up, and that's very good for us. But I think space is more than just a U.S. issue. It's actually a global issue. Loft has an office in Toulouse, France, and that enables us to do business with customers in France, both in government and the commercial side, as well as in the broader European Union. So that's in Europe, but we also see demand for space from countries that don't really have their own native industrial base, but want to have more sovereignty over their space infrastructure. So a few months ago, we actually announced a joint venture in the UAE, where we've created the very first company in the Middle East dedicated to high-volume satellite production. That's a joint venture with an excellent partner in the UAE, and the first satellites will be built in the UAE starting in 2026.
Alex, do you foresee expanding more into the area of national security and defense? That really does seem to be a theme of some of the other Silicon Valley investors who have aligned themselves with Trump, and they do see some opportunity. Do you as well with the Pentagon and intelligence agencies?
Absolutely, and we actually already have. So I think we have over $100 million of contract value in the aggregate with U.S. defense customers. We, a couple years ago, set up a subsidiary called Loft Federal that has the ability to do work with classified customers that's based in Colorado. So we are very focused on the U.S. government, both on the civil side and the defense side, as a key customer for us. We've set up the company to be able to serve that customer. And we're really excited for the fact that they've embraced commercial space over the last couple of years, and we see that as a trend that's going to continue and increase.
Alex Greenberg, COO of Loft Orbital, thank you. Caroline.
Mike, it's time now for Talking Tech. And first up, well, the EU is considering expanding its investigation into Elon Musk's X for breaching content moderation rules. Now, the social media platform is currently being probed under the EU's Digital Services Act for allegedly failing to tackle illegal content and disinformation. Plus, Google is facing its first UK investigation under tougher digital antitrust rules. The Competition Markets Authority is set to decide on whether the US tech giant is distorting the market in its search and online advertising services. The announcement comes as Google fights an order in the US to sell its Chrome web browser, of course. And Microsoft has named Jay Parikh as Executive VP of the new AI engineering division, and it is set to oversee groups on AI platforms, on supercomputers and agents. Prior to joining Microsoft, Parekh worked at Facebook, building our tech infrastructure there and the data centers. Mike.
Coming up, AI's reach extends into the kitchen. We'll be speaking with Precitaste AI CEO Ingo Stork and Union Square Hospitality founder Danny Meyer next. This is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
AI's use cases, well, they're extending way beyond the office. Precitaste AI, for example, a company bringing the power of artificial intelligence into the restaurant space, helping manage crews, even predict demand. We're joined now by the CEO of that company, Ingo Stork, as well as Union Square Hospitality Group founder, Danny Meyer, an investor in Precitaste. Danny, I start with you because Enlightened Hospitality Investments is where you've made this investment, but you've actually got a plethora of AI investments. How and at what point did you decide that artificial intelligence was going to change up your game of restaurateur?
We're facing, as we always have in our industry, really a business model where we have pretty thin margins. The restaurant industry is notoriously competitive, but I think what a lot of people may not realize is that by the time you're done paying your rent and the talent on the team and the food costs and the insurance and the florists and all the expenses that only go up over time, you're not left with much. And so we're constantly needing to find ways that we can become more productive. And machine learning, it turns out, is really, really good at a number of things. It helps us to not only have much better data with which we can take much better care of our guests, buy the proper amount of food because we never want to run out of food. And on the other hand, we don't want too much food. Have the right amount of labor and talent on the floor. You never want to have too little. You never want to have too much. We don't necessarily have the ability to think about that and be very, very present to offer great hospitality for our guests. And so the more that we can find outstanding applications for machine learning, AI, what it does is we get to be a lot smarter, but we also get to be better at hospitality.
Which is precisely where you want to be getting better, sticking to that kitchen knitting. Meanwhile, Ingo, you have been applying AI in the real world for a long time, whether it be in academia, you moved across to really wanting to change up the back of kitchen. What drew you there and how quickly have you managed to scale?
Well, we have, I have been in machine learning. I did my PhD in machine learning when I still needed to explain everyone what that is. But now I'm, since a couple of months almost, it's just 2 years, where ChatGPT or Google AI, other chat agents came to market. It is now a big hype. Everyone, has AI capabilities now in a chatbot, but the chatbot, they have their limitations. You cannot have it drive your car. You cannot have it prepare your meal. You need specialized AI capabilities, such as, using computer vision to identify what is going on, machine learning predictions that breaks down, okay, what does this weather forecast and this POS forecast and this trade area information mean for my kitchen right now in those 15 minutes.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology.
With Automation Engine from Dynatrace, you can automate valuable workflows and orchestrations across your ever-changing ecosystem. So you can break down silos, drive collaboration, and automate your entire enterprise, all with the power of the industry's simplest and most productive platform.
Estimated you might see a front load in spending to start the year because people are a little bit scared of where the tariff scenario could play out. So maybe you buy something now in fear that it might get more expensive as the year goes on. So that's a trend we're going to be watching for the first quarter.
All right, Josh, great stuff. Thanks so much. Let's turn to big bank earnings. We got Morgan Stanley and Bank of America out this morning, both delivering another bout of robust results for Wall Street. Profits for both banks more than doubling in the fourth quarter, fueled by a resurgence in deal making and financing demand. Joining us now for a bit more, we want to bring in Mac Sykes. He's Gabelli Funds portfolio manager. Mac, it's great to have you here on set with us. So these two results this morning following on the heels of very robust results that we got yesterday morning. I'm curious what your big takeaway here from this earnings season and maybe what we are learning from big banks.
Yeah, I think when we go to 30,000 feet for a second, think about the backdrop for investing in banks today. It's pretty extraordinary. We now have a normalized curve, so instead of the inversion, so a pretty normalized real rate. We have regulations that are going to be easier, so that boosts M&A. We already, year to date, we have 100 billion of announced deals. And then the last, the consumer activity has been very good as well. So when you put it all together, it's a really good environment for investing in banks. And we've seen that in terms of the reporting results. JP Morgan, 20% return on equity, very strong. Wells Fargo, very strong results. And then this morning, both from Bank of America and Morgan Stanley, delivering on those results as well.
What are you extrapolating about the state of the consumer right now per these banks?
So, you kind of have to look at the different segments that they operate. If you think about American Express, it's sort of the upper tier in small business. But, Bank of America is a pretty good slice of America, but also in terms of their credit, it's a little higher end as well. And I think that's consistent with the economic activity, which is good household balance sheets, sort of normal retail spending, as we just heard. And just a continuation of the good trends that have been in place for over a year.
Mike, I'm curious, when you take a look at Bank of America's trading operations, didn't as much significantly exceed expectations if you compare it to a Goldman Sachs or something like that. Is that something to be worrisome about? I guess, what is the read through there?
Well, I think there's a little bit of segmentation, too, in terms of the products that they serve and the risk that they're taking in terms of the activity. And if you look at Morgan Stanley, 50% in trading. Right. And equities really driving that. I think Bank of America, more fixed income component there for them. So, it depends really on the comparables. It depends on the concentration of that capital as well.
When you take a look at the net interest income, at least for Bank of America, are they more exposed or I guess more at risk if we don't see the Fed cut? And I guess what are the implications there?
So it's a giant work in progress. Yeah. But what I will say is that, if you just look at the static NIM today, it's 197 for Bank of America compared to JP Morgan at 260. And so you can see there's a discrepancy in terms of that yield that they're earning off their major asset bases in terms of their balance sheets. And so, Bank of America has been hindered by some of these legacy investments that they made years ago, whether it's in the HTM, AFS. And so that's $900 billion in total that will continue to roll off and reprice. And so as they reprice, that's 150 plus basis points that will go into the contribution of NII. And so even though they're under earning relative to their balance sheet to some other banks, you're going to get a tailwind in terms of the repricing going forward over the next several years.
JP Morgan sits within your top 10 holdings right now. I wonder what you make of some of the leadership changeover that we're going to be seeing there and how that positions the transition and succession plans that we're waiting to hear even more about once Jamie Dimon finally decides to step aside.
Right. Well, we did get a little bit of an update. Jennifer is turned down the opportunity to be considered as a candidate. But I think Jamie was very clear on the call the other day where he said, look, I'm still going to be in place in 2 years. We still have a bunch of candidates internally. And that's been well speculated in the press. And they're great leaders with lots of tenure at JP Morgan. So I think the intrigue will continue, but also things could change in the next couple of years. You just don't know how candidates will sift out or what will happen. But I think from that call, which was great, was that Jamie's like, I'm here. And if you really, rely on the culture and the drive that he brings to the whole bank, that's an important thing. And I think that was settled. So we can continue to speculate.
At least for now, yeah. Mac, let's talk a little bit more about geopolitical risk associated with some of the events that could happen here in the months to come. We also have the incoming Trump administration. What are the implications there for big banks, just in terms of the most important either events or the policy implications to watch?
So there's certainly a lot in motion, and these banks at the very core are leveraged to the economy. So to the extent that we're operating with tariffs and global impacts to GDP, et cetera, that will impact the banks. Wells Fargo is mostly U.S. and M&T, et cetera. So you have to sort of look at it on that framework as well. But I just think a bigger factor in all this is regulations, and that takes a number of dynamics as well, which is just the idea that the overall regulations will be easier across the board. So M&A advisory, and that is across the whole corporate board, and so consolidation there, and that helps fees. Number two, Basel III is a big endgame that needs to be decided. There was a 10% hit that was coming. That probably will go to neutral, so that will be a big benefit to the banks as they reposition. That will be supportive of ROEs as well. And then the last thing is within the banking consolidation, which we all know with 4,000 banks that needs to take advantage of scale and opportunities and synergies. I think that's an open door as well. And a very interesting dot that occurred last week was Atlantic Union is acquiring Sandy Spring. That was approved in 84 days. And it was the first time that a merger over $3 billion had been approved that quickly in a decade. So we're starting to see the first unravelings in terms of the tighter regulations, and that was a dot, and I think that'll be a very big boon and is unappreciated by bank investors.
Thanks so much for taking the time here with us today ahead of the opening bell, breaking down some of these big bank earnings as we've been tracking them throughout the week. Thanks so much.
Thank you.
President-elect Trump's nominee for Treasury Secretary Scott Bessent faces his confirmation hearing this morning in Washington. Members of the Senate Finance Committee will question Bessent on his potential role as Trump's top economic official. Yahoo Finance senior reporter Jennifer Schonberger joins us now from Capitol Hill. Jennifer, good to see you. What can we expect from the hearing today?
Good morning, Brad. Great to see you as well. That's right. President-elect Donald Trump's nominee for Treasury Secretary Scott Bessent set to testify in his confirmation hearing this morning before the Senate Finance Committee, a hearing where many on Wall Street will be paying close attention for any new clues on the direction of the incoming administration's economic policy. Bessent, a billionaire hedge fund manager, first for George Soros' firm and now his own, is expected to call in testimony to make the 2017 Trump tax cuts permanent and avoid what he calls, quote, a crushing $4 trillion tax hike. Bessent will say in his testimony, quote, we must secure supply chains that are vulnerable to strategic competitors, carefully deploy sanctions to address our national security, and ensure that the U.S. dollar remains the world's reserve currency. As one who has said he's concerned about the debt situation in the U.S. and favors bringing down debt through growing the economy, Bessent will say in testimony, quote, productive investment that grows the economy must be prioritized over wasteful spending that drives inflation. Bessent's nomination for Treasury Secretary is lauded by Wall Street and supported by Republicans. Senate Finance Committee Chair Mike Crapo expected to call him a, quote, excellent choice for Treasury Secretary and is committed to moving Bessent's nomination as quickly as possible. Some Democrats on the committee, including Senator Mark Warner of Virginia, are open to supporting Bessent's nod, while other Democrats, including Ranking Member Ron Wyden and Senator Elizabeth Warren, have shown concerns, with Warren herself unveiling publicly 180 questions for the nominee, from tax policy to money laundering. Issues expected to be front and center at this morning's hearing include tax policy and extending those Trump tax cuts passed in 2017 set to expire this year, the debt ceiling and budget negotiations, the president-elect's proposed tariffs, lowering the U.S. debt, and inflation. Now, Bessent would need to get the majority of votes on the Senate Finance Committee in order for his nomination to pass out of committee, an outcome that is expected. From there, his nomination would head to the full Senate for consideration. Back to you.
All right, Jennifer, thanks so much. Really appreciate it. We'll be tracking this and, of course, going to that live later on. Well, President Biden delivered his farewell address to America, concluding his 5-decade career in public office. In his Oval Office speech, Biden warned that an oligarchy and a tech industrial complex were taking hold in America. In a nod to Eisenhower, Biden cited the potential rise of the tech industrial complex, pointing to what he said is an avalanche of misinformation and social media companies giving up on fact-checking, a reference to a recent announcement by Meta Platforms.
The president went on to discuss artificial intelligence, from safeguards for the technology to America's role in leading innovation. Biden also saying that the U.S. must compete for AI dominance when it comes to China. Take a listen.
We must make sure AI is safe and trustworthy and good for all humankind. In the age of AI, it's more important than ever that the people must govern. And as the land of liberty, America, not China, must lead the world in the development of AI.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time, from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time, from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time, from Yahoo Mail.
Taiwan Semiconductor climbing after topping fourth quarter estimates, profit rising 57% from a year earlier on strong demand for AI chips. Joining us now, we've got Matt Bryson, who's the Wedbush Securities Managing Director of Equity Research for Hardware. Great to have you here with us, Matt. Let's break this down a little bit more. The Taiwanese chip maker issued an upbeat outlook for 2025. Do you see the momentum continuing even as we focus in on some of the year-over-year? And how much of the emphasis should we start to be placing on the sequential?
Yeah, so I think that Taiwan Semi's in a good place, not just for 2025, but 2026, 2027, and beyond. A lot of that has to do with them being the only supplier of these advanced semiconductors, right? They went from being competitive with Samsung or Intel to effectively being in a monopolistic position. In terms of year over year versus sequential, there's always room for some lumpiness. So I'd be less focused on, say, Q1 or Q2 and more focused on their outlook for the year. Having said that, when they give you Q1 guidance, they pretty much know exactly what their number is going to be, because wafers take 3 months to come out of the fab, and so they have their orders in hand, and so it's a pretty good indicator for where advanced semis are for this quarter.
Matt, does this tell you that maybe these U.S. chip curbs aren't that big of a deal for TSMC, just given the guidance, given the robustness that they are expected to see, and given what you just said, the transparency, and maybe how confident they likely are in 2025, given the numbers we got out this morning?
Yeah, from on the U.S. chip curb side, like if you're talking about shipments to China being curtailed a bit, it sounds like between them getting licenses to supply to companies that aren't viewed as a threat by the U.S., and then other companies within China being a relatively small portion of their revenue, right? There's no Apple or NVIDIA who are 10% customers coming out of China. I think that it's just not that much of an impact. If you're thinking about, say, potential U.S. tariffs, there's no other choice. So if there's a tariff or some sort of legislation or regulation that favors U.S. chip makers, again, no one is competing with TSM at these advanced nodes. So whether you have to pay more doesn't matter.
What is the likelihood that we could see a new competitor finally emerge and be able to not just break ground, as we've seen in some instances, but then get into full factory operation to the point where there is a dent in Taiwan Semi, and then there's perhaps a little bit more of the spreading of the chip production and the wafer fabrication elsewhere?
Yeah, over time, it's definitely a reality. Look, we've seen Intel. They were a near monopoly for 2 decades. You can look at Samsung on the memory side. They were the leader for 2 decades. Those are companies that are now struggling. There's always going to be innovation. At some point, your execution always slips. And so, yes, at some point, I fully expect that there will be someone competing with Taiwan Semi. At the same time, if I'm a customer looking at choosing Taiwan Semi, Samsung, the new company out of Japan, Rapidus, I want to see them execute on a process before I ship to them, right? Otherwise, there's a ton of risk because you don't know if they're going to get that process right. And so, at this point, Taiwan Semi is talking about 2 nanometer. They are going to control that node. And so you're talking 3-4 years out where someone has to prove that they can do it at 2 nanometer. So when you get beyond 2 nanometer, then whether it's a Broadcom, whether it's NVIDIA, whether it's Qualcomm, they'll be confident in switching to that other alternative because that company's done it before.
Now, let's talk about what we've seen play out with NVIDIA, because the stock has certainly been on a roller coaster here over the last week or so. You're talking about a stock that had been under pressure, regaining or rebounding just a bit here yesterday, but lots of questions just about what competition looks like, what demand is going to look like, not only from its competitors, but also some of its customers, historically speaking. Do you see a new landscape ahead for NVIDIA, and what do you expect that performance to look like?
Yeah, so my best guess is that 2025 is as good as everyone thought 2025 was going to be. So it certainly seems like NVIDIA has figured out any problems they were having with the Blackwell chip or the Blackwell board. The question now is at a system level. So you can build the chip, you can build the board. Can you put it in a server? Can you cluster those servers? You had one of the Taiwanese papers out today saying they've solved the server problem. Now it's just a clustering problem. I think they have a ton of capacity online, ready to build servers at partners like Foxconn, like Quanta. I think that they will resolve all of these issues. I think that there's a ton of demand for AI. And so the only question in my mind is, do you see revenue slip in, say, Q1? And if those revenues slip in Q1, then they ship in Q2 or Q3. I don't see anyone displacing NVIDIA in the near term. CUDA is a huge moat to get past NVIDIA software. And so I think NVIDIA will get past these problems. And by the end of 2025 or second half of 2025, everything will look really good.
Do they remain perhaps the top pick from your perspective in chips, or is there a different name that you expect to outperform this year?
Yeah. So if you asked me earlier, I would have said that I like TSM because, at this point they are a monopoly. They're executing. They've been executing. If you see the world move more to ASICs, they win. If you see the world move more to GPUs, they win. If Intel continues to lose share, they win. If you get smartphones or PCs rebounding, which isn't something that I see happening so much in 2025, but 2026, 2027, those categories, auto, all these other categories that lag but need semiconductors, they win. So I've been advocating for TSM. I think some of the memory names where you need more memory, need more storage to support these build outs, in particular Western Digital, we've got near-term catalysts and they're split, is a name I prefer. But I mean, NVIDIA is among those names in terms of kind of favorite name discussion.
All right, Matt, great to get your insight. Thanks so much for hopping on with us here this morning. Coming up next, we got the opening bell on Wall Street. Keep it right here. You're watching Morning Brief. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
There you're taking a live look at today's opening bell ringers. At the NASDAQ, you've got Bethany Frankel and Be Strong. And at the New York Stock Exchange, you've got the national championship, the college football playoffs. It all comes down to this. Shauna, who you got? Ohio State, Notre Dame?
Notre Dame.
Oh, wow. Okay, all right. We will see. All right, that is the opening bell.
I hope you do, too. You can't be rooting for Ohio State, given our Penn State roots.
Well, that's the opening bell. So check up the markets here. I would feel bad rooting for either one of them, quite honestly, given the Penn State allegiances. But anyway, taking a look at the opening bell and the opening cross. Just out of the gate here this morning, the Dow is flat, but to the downside. NASDAQ Composite, you're seeing that lower by about 0.3% as things are calibrating, knocking around. Actually, that's higher by about 0.3%. In the S&P 500, you're seeing that higher by about 0.1%. So let's populate this chart for you just so you can get a good look at what's transpired over the course of this week to today. Also, taking a look at the 11 S&P 500 sectors here out the gate this morning. We're mixed, about as split as you can get for 11 sectors here. We've got 5 laggards as of right now. Pulling up the caboose, you've got consumer discretionary. That's down by about 0.25%. But technology, that is leading the pack right now. It's up by 0.7% here on the day. Speaking of technology, let's take a look at the NASDAQ 100 here on the day. Out of the gate, you're seeing some of those mega cap tech stocks here on the far left side of your screen. Taking a look at NVIDIA, we were just talking about that a moment ago. NVIDIA right now, it's up by about 1.5% here on the day. Still a little bit shy of, and very much shy of, those all-time highs that it recently notched at the beginning of the year. We will see what transpires during today's trading session. Also taking a look at some of the red that we're seeing here on the screen for some of the other mega cap tech stocks. Alphabet, Apple, Amazon, Meta. Amazon's trying to make up its mind. It's been hyper waffling, as you just saw a moment ago. Meta is down by about 1% as of right now. For a little bit more on the context of today's trade, let's get on over to Yahoo Finance's Jared Blickery for a look at what's moving.
Thank you, Brad. I want to linger on what happened yesterday just for a few seconds because it was quite pivotal with respect to the markets. Both stocks and bonds had their second best day since the election, and the first best day was the day right after the election. That was that huge pop that we got. Here's the S&P 500. I'm going to show you 4 days, so that covers this week. You can see it's up 2.25%. Critically, though, it's been tracing out a nice head fake here. I'm going to call it that because it was a head and shoulders pattern that looked like it was going to break down, and then it resolved to the upside here. Still got to get to those record highs, but it was 6,000 kind of looming. But it's a similar situation for the bond market, and we're going to take a look at yields, which is kind of the opposite picture. So here, the 10-year T-note yield. We had a breakout from this prior high. That happened in April of last year, and now we are heading down. That's a major signal. That looks like it's the all clear to keep going down here, and I don't want to see a close above 4.7% again, but if that happens, that's a huge tailwind to risk markets, and I would expect that the U.S. dollar would follow in suit. And so that lower dollar, if it does end up going lower, is another tailwind, and that's kind of what we're looking for here. Some interesting developments in sector land. I'm going to show you the year-to-date totals just so we can kind of wrap our heads around what's happening here. Tech, I want to point out that tech and now communication services just turned positive for the year. Consumer discretionary, I believe that happened yesterday. But those are the 3 mega cap sectors. So those were under a bit of pressure, but now we're seeing a little bit of a resurgence. Here we have energy. Energy is a top spot for the year by a wide margin. And it just kind of reminds me of some of the previous years since the pandemic when we had energy and tech really trading places. And if we take a look at what's happening this week, we're going to go to 4 days, we can see that now it's energy leading. But financials had been leading in the pre-market for the week, and just kind of gets to some of the big bank earnings that we've been looking at. And why don't we just take a look at the big banks right now. Over these 4 days, JP Morgan up 6.3%, Bank of America up almost 5%. Wells Fargo, though, after a nice showing yesterday, and Goldman Sachs this week in earnings, those are each up more than 8%. I got to get now to the futures market, so I'm going to go back there because some interesting developments with both gold and silver, and I'm going to put this on an intraday. Both gold and silver had nice reactions to the inflation report yesterday. I'm going to put a 1-year chart on here, and I think, actually, let's do a 3 months. I think the thinking is that kind of gave the all clear for the Fed to maybe still cut later in this year. And that had been in doubt because the reacceleration due to inflation concerns, that was top of mind for investors yesterday. But gold is showing a lot of strength here. And as I've been saying, it has been going up on good news as well as bad news. So that is the definition of a bull market. I'll just show you silver here real quickly. This is a 3-month chart and it is at a 1-month high as well. Finally, got to close with crypto because Bitcoin has really been reacting strong to all of these economic reports, and it's kind of been moving in lockstep with equity. So it's just another risk-on trade that is highly levered, I would say. So here's Bitcoin. It just hit 100,000 again. Now it's at 99,000, but all it's been doing is consolidating over the last few months, and that's pretty healthy. Shauna?
All right, Jared, thanks so much for breaking that down. So now for today's strategy session, and you can see from the chart on your screen right now, the ratio of tech stocks relative to the S&P 500 is actually at its highest level that we've seen since the dot-com bubble, as valuations for those mega cap companies sit at record highs. So valuations and earnings expectations at such high levels, could we potentially be due for a sell-off? Let's bring in Marta Norton, Empower Chief Investment Strategist. Marta, it's great to have you here on Yahoo Finance. Let's talk about maybe what this signals, the margin for error. I think maybe that's the question here. The margin for error this earnings season, is that very small, just given maybe the negative reaction we could see to any sort of shortfall?
Yeah, it seems as though with expectations being so high, and these numbers are widely cited, but earnings expectations for the first quarter around 11%. And then as you ramp up over the course of the year, you're looking at about a 15% earnings growth. Those are really high expectations relative to history. And you're pairing that with valuations that also seem really stretched. And so we're looking at this on a price to expected earnings basis. So incorporating some of those earnings expectations. And even on that metric, you're looking at a market that is in the 10th decile in terms of, historical valuation ranking. That doesn't necessarily mean a sell-off is imminent. Valuations, can remain high, markets can grind higher, but it becomes more and more of a risk and kind of raises the possibility of a sell-off with that little margin of error that you suggest there in terms of execution or disappointment.
And so with that in mind, if we did get a reset of some of those expectations, at least early on in the year, do you anticipate that sell-off that we could see might turn into a full-blown correction?
Well, I think that possibility is out there. What gives me some encouragement about this market is when we're taking a look at the economy, and I know we're on pins and needles as we, follow inflation very closely here. But broadly speaking, the economy seems very healthy. There are stimulants out there when we're thinking about different fiscal policy, when we're thinking about the possibility, if inflation comes under control, of lower rates. So there's a lot of positives to point to that could suggest that we're in a healthy place. The one concern is where sentiment is and disappointments on that sentiment and what that could mean. But in terms of fundamental weakness, that could mean some sort of collapse in markets and some sort of recession. That seems a little bit further afield for me.
Marta, I'm curious what you've made of the reaction that we've seen over the last 24 hours, how the market was quick to dismiss some of those inflationary concerns, and we really saw that reaction play out within the bond market. What does that tell you maybe about the volatility that's ahead?
I mean, it just feels like pins and needles. And frankly, it's a continuation of the trends that we've seen over the past year or so. So if you remember, starting into 2024, the expectation was that inflation was falling like a rock and we were going to get plenty of cuts. Then inflation disappointed to the upside. Fears commenced around inflation. Then we have fears turn to labor. The economic narrative has been shifting consistently, and investors have been following suit. And I think the reaction that we're seeing today is very similar to this high-strung nature that the market has demonstrated over this time. I think it's really important to step back and look at this broader mosaic where I think we're seeing a cooling labor market despite month-to-month volatility, and we're seeing inflation traverse that very difficult last mile to that 2% target. So I think that broader mosaic is still entrenched, but the day-to-day volatility and narrative shifting is going to remain something that we have to contend with.
We're, of course, just days away from the inauguration, and it seems like the Fed is going to be in wait-and-see mode to see how policies might get enacted, whether that looks like and comes in the form of tariff policy, whether that comes in the form of some type of immigration and deportation that was campaigned on that gets carried through. All of these have economic implications, and ultimately we're trying to get a playbook for investors and how they should be approaching all of those key events if they were to play out as campaigned on, at least. How are you looking at that?
Right. It's complex and it's uncertain, and I think that's one reason why we're seeing the bond action that we're seeing. There's a major redirect from Biden policy, where most of these policies outside of the protectionism embedded in tariffs are moving in the opposite direction. But there's a question on what that magnitude looks like, and so I think what investors are really trying to grapple with as we see the inauguration and policy established is what that magnitude looks like. And I think the uncertainty there is pretty high around a number of factors. Take taxes, for example. That feels like an obvious direction that the Trump policy is heading in, but we don't really even know exactly what can be accomplished given the small majority that we have in the House. And so I think that there's a lot of assumptions with not a lot of information around some of these policies. Now, tariffs seem a little bit more evident that that's going to come into play, but we don't know whether that's going to be a slow and steady approach, whether that's going to be a big bang phenomenon, or whether we're going to have a universal tariff or targeted tariffs. So I think that is one of the things that keeps the market on pins and needles right now.
All right, Marta, thanks so much for joining us here this morning. Marta Norton of Empower. It's time now for our chart of the day. Let's send it over to Madison Mills for a closer look at job cuts and some of the trends that we're seeing play out across companies. Maddie.
That's right. Taking a look at 2025 here, new year, new slate of layoffs heading into that key annual raise discussion that a lot of these firms have in February. I'm going to talk about that and the importance of that in a second here. But let's just walk through the latest news. BP this morning announcing 5% of the company layoffs there, similar to what we're hearing at Meta, 5% of the staff to be impacted, and specifically talking about the impact to underperformers. That's what a lot of these tech firms, including the likes of Microsoft, have pointed out, that it's going to be job cuts for underperformers. They're kind of trying to rebrand it as that as opposed to a broader layoff, though we are seeing layoffs at Albertsons. Also over on the airline sector, new layoffs announced at Spirit Air this morning, and that comes off the back of Southwest announcing those hiring freezes and also cost-cutting measures more broadly across the company. So when I hear headlines like this, like everybody else, I start to get a little bit nervous. But luckily, I was able to hear from David Kelly over at JP Morgan, and he says that this just makes sense. This is seasonal. We start to see companies announcing these layoffs in January, just ahead of that annual raise conversation that us employees tend to have in the month of February or late Jan with our employers. And a great way to keep wages suppressed is to announce layoffs to a small group of people in the beginning of the year. That puts a little bit of pressure on employees heading into those discussions here. He specifically cited the average hourly earnings that has really been getting put under pressure, saying that employees clearly aren't asking for raises, and perhaps these small layoffs to a small group of employees are kind of fueling that pressure on wage gains moving forward here. So something to keep in mind. David Kelly mentioning that you should continue to ask for those raises annually, regardless of what's going on outside of the company. Also pointing out that last year, when we heard similar layoff news in the month of January, it didn't show up in the jobs data moving forward. So this is not a significant broad-based layoff here. These are potentially just layoffs that are idiosyncratic to these individual companies here.
Yep, Maddie, as Fat Joe would say, yesterday's price is not today's price. Keep asking for those raises.
That's right.
Coming up, we're looking at today's Yahoo Finance trending tickers. We'll give you the news behind the moves. That's next on Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, United Health Group missing fourth quarter revenue expectations, hit by weakness in its health insurance unit and higher medical costs. Still, the company affirmed its 2025 performance outlook. This is the company's first earnings report since the CEO of the insurance unit, Brian Thompson, was shot and killed in New York City. We're taking a look at both results and the shares and the share price action here on the day. Shares right now moving lower by about 2.4%. They say the people of the United Health Group remain focused on making high quality, affordable health care more available to more people while making the health system easier to navigate for patients, providers, and they're saying that they're well positioned for growth in 2025. That coming from the Chief Executive Officer of the United Health Group, Andrew Whitty, in this report.
Yeah, exactly. And this is the first time we had a chance to hear from United Health executives since a tragedy that struck not too long ago, going back to December 4th. So again, getting some insight there. And of course, on the heels of the public's reaction to this, we talk about a lot of pressure that has been placed across the industry when you talk about rebates, when you talk about availability and access here to insurance. The industry very much has been in the spotlight following the tragic death of Thompson here. But when you take a look at these numbers specifically here, a couple of trends that are continuing here for the company. You mentioned the fact the medical loss ratio, that shows the percentage here of the premium paid out for patients' care. That rose to 87.6% in the fourth quarter. Also, the cost ratio will be in the range of the 86 to 87% in 2025. When you take a look at those elevated costs here and expenses, I don't think it's any surprise that you're seeing the stock under a bit of pressure here this morning at the open. And then, of course, you're seeing that reaction play out across the industry, and many of the names up on the screen right now, other health insurers, are also falling in tandem with United Health here this morning.
Yeah, and those numbers that you're calling out here really goes to show how critical it is going to be for the company to hear what the public backlash was as well in the aftermath of the tragic event. And many people saying, hey, our experience is that we have had a not so favorable outcome or not received the care that we expected to because of how a health group, how United Health, in this instance, had evaluated their own situation. And so we'll see how all of the rest of the insurance industry also responds to.
Yeah, and United Health saying that all drug rebates are going to be going to customers by 2028. Next up, let's take a look at Target. Target raising its fourth quarter sales forecast after a strong holiday season, boosted by demand for clothing and for toys. The retailer reporting record sales for Black Friday and Cyber Monday. Now, this coming after the company cut its profit guidance late last year. You're looking at the stock's reaction off just about 3%. So you might be asking yourself why. They did raise comp sales here. They see comp sales rising about 1.5%. They saw it about flat. But the reason why we are seeing some pressure here on the stock this morning, a lot of that has to do with the EPS guidance. We didn't see movement there. They still see adjusted EPS of $1.85 to $2.45. The estimate on the street was for $2.19, so no improvement there. That's putting some pressure on the stock here this morning. But when you take that aside, there was a lot to like inside this report. Some improvement in trends here across the board. Guest traffic, that increased nearly 3% here on a year-over-year basis, reflecting some of that growth in both in-stores and also its digital channels, certainly working here this holiday season. And I think when you look out to this year, the remainder of this year, and even this current quarter, lots of questions about what those spending trends are going to look like and whether or not they're going to hold up and to what degree we will see the consumers willing to spend.
I mean, it's exactly what we were talking about coming into the holiday season, which is a consumer that is value conscious, looking for promotions. That digital number speaks directly to a consumer that is doing comparison shopping. And when you're looking at the digital sales that grew nearly 9% over the prior year, that's also going to be one of the indicators that investors can look to say, okay, margins are going to be squeezed as a result of this if you do have a consumer that's looking for those deals. And the discretionary categories that you mentioned here, notably apparel and toys, this is noteworthy for some of the other players in the retail landscape because now it'll give us a little bit more insight into how retailers like Dick's, retailers like Foot Locker, how they may have seen a trade off of their own aisles and a trade in to some of the Target aisles on those on the apparel note, at least here, depending upon what type of apparel was being bought, obviously. But I at least contributed to the toy department. I bought some Legos.
Did you?
Of course.
Which ones?
Well, you got to get the Star Wars ones.
Okay.
Yeah.
We've actually visited
New
Lego.
R2-D2. Yeah.
I've made some purchases for like the holiday season as well.
There you go. All right, one of Wall Street's most prominent short sellers, Hindenburg Research, is shutting down. The firm rose to prominence uncovering fraud at EV startup Nikola. Some of its other most notable short sells include Adani Group, Supermicro, Roblox, and Carvana. The founder, Nate Anderson, citing the toll the work took on his well-being as the reason for the closure. All right, we have been continuing to track and have tracked even at the beginning of this year. I mean, who turns the page on the new year and is immediately like, you know what, Carvana is going to catch this heat immediately on January. The father-son duo there, I think, was their words that they were using. Supermicro, that is a company that they looked into as well. They said that essentially some of the investigation, their 3-month investigation, including interviews with former senior employees, as well as a review of litigation records, it gave them accounting red flags, evidence of undisclosed related party transactions, sanctions, and export control failures and customer issues. Supermicro, you see what happened after they disclosed that report or published that report. And it's been interesting for the strategy of short sellers in publishing their reports. Citron's Andrew left even after
News when you want it. With Bloomberg News Now, I'm Nathan Hager. Thursday morning trading is underway on Wall Street, and it's steady as she goes for stocks. That's the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is higher by 0.2%, getting a little bit closer to the 6,000 level. The Dow Jones Industrial Average is wavering between gains and losses, and the NASDAQ Composite opens higher by 0.3%. The 10-year Treasury yield is little changed at 4.66% on what has been a very busy morning of economic data and corporate earnings. We'll start with the data and Bloomberg's Michael McKee with December retail sales.
The anticipation was for a very strong retail sales number. It comes in at 0.4 instead of the 0.6 that was forecast. Ex-autos 0.4 as well. Ex-autos and gas 0.3. So we know there's a fairly big gasoline component to all of this.
And Bloomberg's Mike McKee says the control group, which feeds into GDP, showed a 0.7% gain in sales. That was the most in 3 months. We also got weekly jobless claims that came in slightly higher than expected, and the Philadelphia Fed Index of Business Conditions topped estimates, all keeping hopes alive in the market that the Fed could cut interest rates this year. As for earnings, they are jumping at Wall Street's biggest banks. Morgan Stanley rounded out bank earnings season with a major beat. Fourth quarter net income more than doubled over last year, and equities revenue reached an all-time high. More from Bloomberg's Shonali Bassick.
We got more than a clean sweep. I mean, if you look at equities trading at Morgan Stanley, I had to look 3 times because it's at $3.3 billion. The estimate was for $2.6 billion. So they're coming in almost $1 billion more than expected.
Bloomberg's Shonali Bassick. And we also heard from Bank of America. Their investment banking fees hit a 3-year high. Net interest income outperformed as well. At the open, Bank of America shares are trading between gains and losses, but Morgan Stanley, those shares are up nearly 2%. There are fresh doubts about a ceasefire deal in Gaza hours after it was announced. Israeli Prime Minister Benjamin Netanyahu's office is accusing Hamas of backing away from parts of the agreement. The office says the cabinet won't meet to ratify the deal until they are assured Hamas agrees to all of it. White House National Security spokesman John Kirby is holding out hope.
We're confident that we're going to be able to start implementing it on Sunday. There are some implementing details that still need to be ironed out. We're working with the Israelis on that very, very hard right now, but we're confident that we're going to get there.
John Kirby at the White House was on ABC's Good Morning America. Bloomberg's Jumana Bersetchi has more on what may be behind the holdup.
It appears to be the case of something going on within the Israeli cabinet because they were due to vote on it at 11 a.m. local time today. They are postponing the decision, claiming that Hamas are reneging on some of the elements of the deal.
Bloomberg's Jumana Bersetchi says the deal would have Hamas release 33 hostages during a 6-week pause in fighting in exchange for hundreds of Palestinian prisoners. She says some cabinet members may be objecting to that, but U.S., Qatari, and Egyptian officials are working now to try to salvage the deal. President Biden touted the Gaza agreement and his domestic accomplishments in his farewell farewell address, even as he warned of new threats to democracy.
An oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms.
The president also warned of a tech industrial complex and a flood of mis- and disinformation enabling an abuse of power. The Bloomberg Billionaires Index shows the top 100 wealthiest Americans added more than $1.5 trillion to their fortunes during Biden's 4 years in office. Tech tycoons Elon Musk, Larry Ellison, and Mark Zuckerberg all led the way. Wall Street will be watching as President-elect Trump's pick to lead the Treasury appears for Senate confirmation hearings. Scott Bessent will talk about preserving the dollar's reserve currency status and making Trump's tax cuts permanent. More from Bloomberg's Mike Shepard in Washington.
I am curious about what he says about the tariffs that Donald Trump has threatened against U.S. trading partners Mexico and Canada, and what that could mean for relations between the closest to U.S. neighbors and largest trading partners. Trump has threatened those over border policy issues.
Bloomberg's Mike Shepard in the nation's capital. Our coverage of Scott Bessent's Treasury confirmation hearing begins at 10:30 a.m. Wall Street time on Bloomberg Radio and on the Bloomberg Podcast's YouTube page. Besides bank earnings, we heard from Target. The retailer is raising its outlook for this quarter after a better than expected holiday season. Target shares at the open, though, are down more than 2%. United Health is lower by 1% after reporting elevated medical costs and a revenue miss. And Nintendo says it's unveiling its next-generation Switch 2 console on April 2nd. It put out a teaser trailer for it this morning. Nintendo shares traded in the U.S. are higher at the open by 3%. That's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
There are two kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get to zero, not using climate as a moral crusade.
And Justin Trudeau.
There are still people who are hell-bent on reversing our approach on fighting climate change.
And the creative minds you haven't heard of yet.
Really don't need to have a tomato in December. It's gonna taste like nothing anyway. Just don't do it.
What we've made here is inspired by shark skin. Yeah. It is much more simplified than actual shark skin.
Drilling industry has come up with some of the most creative job titles.
Yeah. Tell me more.
You could imagine tool pusher,
no,
driller, motorman, mudlogger.
It is serious stuff, but never doom and gloom. I am Akshat Rati. Listen to Zero every Thursday from Bloomberg Podcasts on Apple, Spotify, or anywhere else you get your podcasts.
इस नेचुरल गैस चार्ट एक्चुअली स्टक हो गया है। आप लोगों को दिख नहीं रहा होगा, एक बार रिफ्रेश कर देता हूँ। ठीक है, लेवल वही है, कुछ चेंज नहीं हुआ है। क्रूड ऑयल नीचे बिल्कुल आ सकता है, ऊपर रेजिस्टेंस है एफईजी, नीचे वाला एफईजी ब्रेक हुआ है, इन्वेंट्री नेगेटिव आई है नेचुरल गैस की। इन्वेंट्री इज नेगेटिव फॉर नेचुरल गैस प्राइस। जस्ट गिव मी अ मोमेंट। ओके, तो नेचुरल गैस तो ठीक ठाक ही चल रहा है। आई होप हाफ प्रॉफिट बुक कर लिया होगा, इसमें हाफ प्रॉफिट बुक करके ही चलना। थोड़ा एक्सपेक्टेड है नीचे तक आ जाए तो यहाँ फिर बाइंग करें। थोड़ा टारगेट बड़ा है, छोटा टारगेट नहीं है। चार्ट रनिंग, लेट मी नो इन द कमेंट बॉक्स। अब दिख रहा है रनिंग चार्ट, आई थिंक वो स्टक हो गया था। ठीक है, रेजिस्टेंस एरिया था, वहाँ से सेलिंग चल रही थी। ये हाफ टारगेट यहाँ पर बुक करने के लिए बोला था। रिमेनिंग क्वांटिटी ट्रेल करो। इन्वेंट्री आई है अभी 9 बजे, नेगेटिव है प्राइस के लिए। थोड़ा नीचे आ जाए, ये फाइनल टारगेट है, लेकिन हाफ प्रॉफिट बुक करके चलना। यहाँ वापस देखेंगे बाइंग के लिए। यहाँ अगर नहीं रुकता है तो फिर सीधा मान के चलना 325। अच्छा टारगेट है। टोटल ओवरऑल देखोगे तो लगभग 7.5 प्लस 7.5 अराउंड 16 टू 17 पॉइंट का टारगेट। ऑब्वियसली बड़ा टारगेट है तो डायरेक्टली तो नहीं मिलेगा, इसलिए हाफ प्रॉफिट बुक करके ट्रेल करना। क्रूड ऑयल को देखोगे एफईजी टू एफईजी चल रहा है, कोई रेजिस्टेंस वैसे बना नहीं है तो एफईजी लगाया हुआ है। सेल किया हुआ है ऊपर से तो वेल एंड गुड। नीचे एफईजी ब्रेक कर चुका है तो एक्सपेक्ट करेंगे यहाँ तक आए प्राइसेस, रीटेस्ट जोन तक। चार्ट इज रनिंग राइट नाउ या अभी नहीं रन हो रहा है? दिन में 1 या 2 ट्रेड ही मिल रहे हैं, अच्छे मिल रहे हैं, बट यू नो थोड़े बड़े टारगेट के साथ। कल तो कुछ भी ट्रेड नहीं मिला क्रूड ऑयल में। एक रेजिस्टेंस एरिया जरूर था बट वो ब्रेकआउट ही हो गया था। नेचुरल गैस कल भी ठीक था, आज भी ठीक ही चल रहा है।
Paying into Medicare.
बाकी गाजा सीज फायर डील का इम्पैक्ट देखो, वैसे नेगेटिव तो होना चाहिए था बट कल और भी न्यूज़ थी, उसकी वजह से थोड़ा सा पॉजिटिव इम्पैक्ट पड़ गया। बट या ओवरऑल जो गाजा वाली न्यूज़ थी वो नेगेटिव थी। बट याद रखना अभी भी ऐसी न्यूज़ आ रही है लाइक जहाँ पर ये कहा जा रहा है कि इजराइल ने ऑलरेडी स्ट्राइक करना शुरू कर दिया है फिर से गाजा पे, सीज फायर डील के बाद भी। सो किस तरह से इम्पैक्ट होता है देखते हैं। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। लेट्स सी लेटेस्ट न्यूज़ पर देख लेते हैं।
News when you want it with Bloomberg News Now. I'm Nathan Hager. We have breaking news out of Florida, where Governor Ron DeSantis has made an appointment to fill Marco Rubio's Senate seat. He has named Florida Attorney General Ashley Moody to succeed the Secretary of State designate a day after Rubio's Senate confirmation hearing. Moody will serve through the rest of Rubio's remaining term up through 2026. The Senate confirmation hearing that Wall Street's been waiting for is getting underway. Here's Senate Finance Chairman Mike Crapo.
Let me extend a warm welcome to Mr. Scott Bessent.
The longtime hedge fund manager is up for confirmation to be the next Treasury Secretary. Bloomberg's Mike Shepard reports the veteran hedge fund manager is likely to face questions on sanctions, the fiscal outlook, and how he would manage the $28 trillion Treasuries market.
He sees the importance of maintaining a strong and robust sanctions regime, but one that is perhaps a little more coordinated. And he also is emphasizing that he would want to see the dollar, the greenback, preserved as the world's reserve currency. It's come under some pressure, thanks in part to those sanctions programs.
Bloomberg's Mike Shepard in Washington. You can catch live coverage of Scott Bessent's Treasury confirmation hearing on Bloomberg Radio and on the Bloomberg Podcasts YouTube page. Meantime, Bloomberg News has learned President-elect Donald Trump's team is working on a wide-ranging sanctions strategy over the Russia-Ukraine war. That's after President Biden imposed the toughest restrictions yet on Russia's oil trade last week. Sources tell us the Trump team is looking at two main approaches. One would float good faith measures to sanctioned oil producers if they think an end to the war is in sight. The other would ramp up sanctions even further to boost leverage. We're told the plans are in their early stages and will ultimately depend on President-elect Trump. A deal to pause the fighting in Gaza is in doubt. Israel is accusing Hamas of reneging on parts of the agreement and making new demands. Prime Minister Benjamin Netanyahu's office says his cabinet will not meet to approve the deal until mediators confirm Hamas has accepted all elements of it. Bloomberg Israel Bureau Chief Ethan Brunner says the deal would pass if it came to a vote, but
two far-right parties are opposed to this deal. One of them has said it would bolt the government over it. The other has just had a 2 or 3 hour meeting and decided it won't bolt it now. It'll let the deal go for 6 weeks. But if Israel doesn't return to war after that, then it will.
Bloomberg's Ethan Bronner joined Bloomberg Surveillance from Tel Aviv. The deal is set to take effect on Sunday. It calls for Hamas to release 33 hostages during a 6-week pause, while Israel pulls out of populated areas of Gaza and releases hundreds of Palestinian prisoners. In Los Angeles, fire-weary residents are looking forward to a brief break from the conditions that have kept the flames going for more than a week. The last red flag warnings for Southern California are set to expire this afternoon, but there is still no rain in the forecast. Los Angeles Mayor Karen Bass.
While we're still being vigilant, while we're still in this emergency, we also have to begin the process of recovery and rebuilding.
The fires have killed at least 25 people, and the two biggest wildfires remain less than 50% contained. Much of the rest of the country is getting ready for a blast of extreme cold. Sub-freezing temperatures are in the forecast from the Midwest and South starting on Saturday before shifting east early next week. Dallas could see a low of minus 21 degrees Monday night. Temperatures in Manhattan will dip to near 10 below late Tuesday. On Wall Street, stocks are little changed to lower after the latest earnings and economic data. Retail sales broadly advanced in December. They were up 0.4%. But Bloomberg's Michael McKee says that wasn't as big as Wall Street expected. At the same time,
the retail sales control group does save the holiday season, shall we say. It comes in up 0.7% compared with 0.4 the prior month and a 0.4 estimate. So it looks like the stuff that goes into GDP is the stuff that did well this time.
Bloomberg's Michael McKee. We're also hearing from Fed officials. Governor Christopher Waller says the Fed could lower interest rates again in the first half of this year if inflation data continue to be favorable. Those were his comments on CNBC. Wall Street's biggest banks did really well to end the year. Morgan Stanley's profit more than doubled. Trading revenue led the way. CEO Ted Pick says the deal environment's looking good too.
You see pipelines in the M&A product that are the highest in 7 years. So that is really encouraging.
Morgan Stanley's Ted Pick spoke on the earnings call. The shares right now are higher by nearly 3%. Bank of America posted fourth quarter profit that topped analyst estimates. Investment banking fees came in at a 3-year high, while expenses were slightly higher than expected. Bank of America shares are little changed. The S&P 500 is down 0.1%. The Dow is 0.3% lower, and so is the NASDAQ Composite. That's news when you want it with Bloomberg News Now. I'm Nathan Hager.
Oh my God.
This is Bloomberg.
Home run, from my point of view. I mean, you talk about somebody who's academically gifted, understands the world. Scott, like any Republican president, would pick Scott. I mean, he's really understands the president and what the president wants to do. And the reason I vote for almost everybody, for every president, is I believe colleagues, that every president deserves a cabinet that they know and trust and can rely upon. If I had to vote for people based on agreeing with them, I wouldn't vote for anybody y'all picked. That's not the standard for me. I vote for people who I disagree with because I think they're qualified. So I would just ask the committee to think for a minute, is this man qualified? Does he have the background and the intelligence and the character to serve President Trump and our nation's Secretary of Treasury? I think by any reasonable test of qualifications, he excels beyond the bare minimum to the highest level of excellence. But that's just my opinion. So my goal here today is to tell you a little bit about him. You've heard from the chairman about his success in the financial world, about his academic qualifications. He was born in Little River, South Carolina. Why do they call it Little River? Because it's little, and it's a river. It's in Horry County. How many of you heard of Myrtle Beach? Most of you. Well, this is somewhere between Conway and Myrtle Beach. At 9 years old, his first job was to set up beach chairs and umbrellas in North Myrtle Beach. And apparently you did well there, because North Myrtle Beach is thriving. He went to North Myrtle Beach High School, and he was voted most likely to succeed in 1980. And we have a high school classmate of his. What did they see in him? The same thing I see. Someone who really is talented and works hard and just a good person. The type of people that you think are going to succeed, but you hope succeed. So he lives in Charleston, in a really nice place. Going from Little River to Charleston is about a 2.5-hour drive, but it's a real change. Since I represent South Carolina, I like them both very much. He's married, John, his husband's right behind me. And they have 2 kids, Caroline and Cole, and they're absolutely adorable. And from a South Carolina point of view, we're really proud of Scott. I was over the top happy when President Trump picked him, because I know him. I know where he came from. The rich and powerful don't live in Little River. This is truly the American dream. This man has been successful at everything he's ever tried to do. He's worked really hard. And why did President Trump pick him? Because he believes that President Trump's economic agenda is good for this country, and he wants to help President Trump be successful. And here's what Scott said. I think it's the melding of economic policy with national security. Economic policy and national security are now indispensable, and Donald Trump understands that. So I'm here to tell you, folks, I agree with that. If we don't have energy independence, we're less safe. If we don't get our debt in order, we're less safe. I am known around here as kind of a national security guy, but I do understand economic policy matters. If you want to clean up the environment, a carbon fee seems to be a good way to do it, to punish China and India for bad carbon practices. Call it a tariff, call it whatever you want to do. So President Trump won. I'm here today because he won. I'm here today because Scott lives in South Carolina. I'm here today to tell you, if you use qualifications as your test, this is the easiest vote you'll ever take. If your goal is to play like the election didn't happen, then I guess you'll vote no. That's just where we're headed in the Senate. When you lose an election, you get up and dust yourself off and you get ready for the next one. But I was honored when he asked me to introduce him, because I know this man, and America will be in good hands if he's our Secretary of Treasury. He deserves this job. He's qualified for this job. And President Trump, thank you for picking him. On behalf of all of us in South Carolina, we're extremely proud of you, and we wish you well. Thank you.
Thank you, Senator Graham. We appreciate you giving this introduction, and you are now excused, as is our practice. And Mr. Bessent, before we turn it over to you for your opening statement, I have 4 questions that we ask all nominees who come before this committee. The first is there anything that you are aware of in your background that might present a conflict of interest with the duties of the office to which you have been nominated?
No, sir.
Second, do you know of any reason, personal or otherwise, that would in any way prevent you from fully and honorably discharging the responsibilities of the office to which you have been nominated?
No, sir.
Third, do you agree without reservation to respond to any reasonable summons to appear and testify before any duly constituted committee of the Congress if you are confirmed?
Yes, sir.
And finally, do you commit to provide a prompt response in writing to any question addressed to you by any senator on this committee?
Yes, sir.
Thank you very much. Again, welcome to the committee, Mr. Bessent, and you may make your opening statement.
Good. Thank you. Chairman Crapo, Ranking Member Wyden, members of the Finance Committee. It's an honor and a privilege to be considered by this committee as the President's nominee for the Secretary of the Treasury. I want to thank all of you who took the time to meet with me over the past few weeks. I want to thank my spouse, John Freeman, who is here today, and my wonderful children, Cole and Caroline.
Mike, I'm not sure if Mike's here.
Who are sitting behind me.
Mr. Bessent, could you pull the microphone a little closer to you?
Who are sitting behind me for the ultimate civics lesson. I want to acknowledge 3 people who couldn't be here today. My 98-year-old mother-in-law, Celine Freeman, a World War II French war bride of an American soldier who lives with us in Charleston, South Carolina, making for a 3-generation household. My sister, Paige McLeod Bessent, who doesn't like crowds and prefers the mountains of South Carolina to large cities, and my recently deceased sister, Wynn Bessent, who worked tirelessly as a public defender in one of South Carolina's poorest counties. I also want to thank President Donald Trump for having placed his trust and confidence in me for such an important role in his administration. While I've met with many of you, most Americans watching at home will be unfamiliar with my background. I have been blessed with a fulfilling and successful career, but my presence here today was far from predetermined. I was born and raised in the South Carolina Lowcountry. My father fell into extreme financial difficulty when I was young. When I was 9 years old, I started working 2 summer jobs, and I haven't stopped working since. I eventually made my way to Yale. I accepted my first internship in finance because the job came with a pull-out sofa in the office to sleep on, which allowed me to live in New York City rent-free. I've been involved in the financial markets ever since. I've been fortunate enough to work with some of the world's greatest investors in a career that has taken me to almost 60 countries over 40 years. My life has been the only in America story that I am determined to preserve for future generations. Today, I believe that President Trump has a generational opportunity to unleash a new economic golden age that will create more jobs, wealth, and prosperity for all Americans. My life's work in the private sector has given me a deep understanding of the economy and markets. And while this experience will be invaluable in crafting economic policy, I have long adhered to the principle that you should know what you don't know and lean on those who do. Having never served in government, I intend, if confirmed, to be in close contact with each of you in your offices and seek your counsel. The Treasury Department plays a critical role in protecting American national security. We must secure supply chains that are vulnerable to strategic competitors, and we must carefully deploy sanctions as part of a whole-of-government approach to address our national security requirements. And critically, we must ensure that the U.S. dollar remains the world's reserve currency. Today, Americans face significant challenges in an economy that has not created enough opportunities for working men and women. We have an affordability crisis, a housing shortage, and for the first time in my lifetime, parents feel as though the American dream is slipping away from their children. The federal government has a significant spending problem, driving deficits that have averaged an historically high 7% of GDP during the past 4 years. We must work to get our fiscal house in order and adjust federal domestic discretionary spending that has grown by an astonishing 40% over the past 4 years. Productive investment that grows the economy must be prioritized over wasteful spending that drives inflation. As we begin 2025, Americans are barreling towards an economic crisis at year-end. If Congress fails to act, Americans will face the largest tax increase in history, a crushing $4 trillion tax hike. We must make permanent the 2017 Tax Cuts and Jobs Act and implement new pro-growth policies to reduce the tax burden on American manufacturers, service workers, and seniors. I've already spoken with several members of the committee, as well as leaders of the House, about the best approach to achieving these important goals together. As President Trump has said, we will unleash the American economy by implementing pro-growth regulatory policies, reducing taxes, and unleashing American energy production. The breadth and depth of our capital markets, along with predictable pro-growth tax policy and smart updated regulation, will continue to make America the most popular destination in the world for starting, growing, and taking public a business. And as we rebuild our economy and lay the foundation for the next generation of American competitiveness, we must use all the tools available to realign the economic system to better serve the interest of working Americans. For too long, our nation has allowed unfair distortions in the international trading system. President Trump was the first president in modern times to recognize the need to change our trade policy and stand up for American workers. If confirmed, I look forward to working with President Trump and members of this committee to do just that. Members of the committee, these are just some of many important goals that President Trump has laid out for me and others on his economic team. I firmly believe that if confirmed, and with your counsel and support, we can usher in a new, more balanced era of prosperity that will lift up all Americans and rebuild communities and families across the country. I humbly thank you for your consideration and am eager to take your questions.
Thank you, Mr. Bessent. Before I begin my questions, I want to reemphasize how appreciative I am of your diligence in the process that we've gone through vetting here in this Senate. I appreciate the more than 3,000 pages of supporting material you've provided, as well as the countless hours you and your staff have offered to respond to questions from members of this committee. Let me be clear. You followed all of the applicable law and met the committee's long-standing diligence standard. Your process matched that which has applied to nominees in every previous administration. And I want to go in my first question to you to the Tax Cuts and Jobs Act, which Senator Wyden and I have both mentioned already, and you've mentioned in your remarks. The attack on this statute, this law, which is law, I remind everybody it is the law now, it was passed in 2017, is that it was a tax cut for the wealthy. I appreciate you, Mr. Bessent, noting that it will be a $4+ trillion tax increase if we do not extend this law. And a point that I would remind all of my colleagues is that if that $4+ trillion tax increase happens, it's not just going to be something that impacts the wealthy. It is $2.6 trillion of it. The majority of it falls on people who make less $400,000 for a family with two taxpayers, for under $400,000 per year. That's the number that President Biden chose to say he wanted to protect it. 2.6 trillion of this tax cut hits those making less than $400,000. Moreover, massive amounts of it hit pass-through entities, small businesses across this country. This is not a tax cut for the wealthy that we're talking about. It is a tax increase on all Americans, the majority of whom are in the lower and middle income categories. My question to you is, one of our pivotal tasks is to make sure that this tax increase does not happen. Can you give us your perspective on the impact that would occur in this country if we allowed this $4 trillion tax increase to happen?
Senator Crapo, thank you for this, and thank you for the meetings over the past few weeks. I've enjoyed working with your staff, and this is the single most important economic issue of the day. This is pass-fail. That if we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity. And as always, with financial instability, that falls on the middle and working class people. We will see a gigantic middle class tax increase. We will see the child tax credit halved. We will see the deductions halved. So it will be what we call in economics, it has the potential for a sudden stop. And as I said, traditionally with these sudden stops, it falls on working Americans.
Thank you. And I would just say to you, you may be aware of this, but the Tax Foundation has indicated that if we do sustain these tax cuts and protect them from expiring and stop this tax increase, that the extension of this policy would increase the growth of the GDP in the United States by 1.1% over time. Similarly, and I don't know how they came up with the same number, but the National Association of Manufacturers indicates that if we don't extend this tax relief, that there will be a 1.1% reduction in growth of jobs and development in our economy. It seems to me that as we are talking about what to do for America, that protecting America from a 1% reduction versus a 1% growth in GDP is a critical objective. Could you just give a little bit of perspective? I know you've just answered this question in another context, but could you just give a little bit more perspective on those kinds of dynamics? And I'm sorry, I'm going to try to keep to 5 minutes, and we've only got about 15 seconds left of mine, and I want to be sure everybody else stays on time, so I will too. Could you quickly respond?
Well, Senator, I would just say that we saw the power of these tax cuts in 18, 19, and going into January of 20 before they were interrupted by COVID, and the great success that we had.
Thank you. Senator Wyden.
Thank you very much, Mr. Chairman. Let me say to the nominee, I've got 4 questions that I'm going to ask, and if we both can keep it brief, I think we can get to all of them, because I think it really frames for us what the debate is all about. I'm going to start by talking about the future of direct file. This is the program that helps our people who choose it to save hundreds of dollars when they file their tax return. Last year, the IRS launched it. It was enormously popular among taxpayers, but of course, the tax software giants and their big lobby just hate it. They want to shut it down. Now, the filing season starts January 27th, so it opens in 10 days, and millions of taxpayers around the country have already been notified that they are going to be eligible to use direct file this year. So I won't do this for every question, but I'd really like a yes or no on this one. Will you commit to keeping direct file up and running if you're confirmed?
I will commit that for this tax season, that direct file will be operative, and the American taxpayers who choose to use it will. And if confirmed, I will consult and study the program and understand it better and make sure that it works to serve the IRS's 3 goals: of collections, customer service, and privacy?
I appreciate the answer. It means that taxpayers are going to save, who choose to use it because it's voluntary, hundreds of dollars, and we'll have a chance to see once again how popular it is with practically everybody except the tax prep software crowd. On to tariffs. Donald Trump, with no plan and no strategy, says he's going to put across-the-board tariffs, blanket tariffs on all imported goods, which means that our workers and our small businesses are going to get clobbered with additional taxes on practically everything they buy from other countries. My question here is, who would pay these tariffs? Americans or foreign countries?
So this, Senator Wyden, just to understand, so I can frame the answer correctly, do you believe that these tariffs are a consumption tax increase?
I believe these tariffs, you can call it whatever you want in terms of trying to gussy it up. They're going to be paid for by our workers and small businesses. And all through the campaign, we heard they weren't, that foreign countries were going to pay it. I think that's baloney. It's going to be paid for by workers and small businesses. So, your response?
Yes, Senator, I would respectfully disagree. And the history of tariffs and tariff theory, optimal tariff theory, does not support what you're saying. Traditionally, we see that the current, if we were to say use a number that has been thrown around in the press of 10%, then traditionally the currency appreciates by 4%. So the 10% is not passed through. Then we have various elasticities, consumer preferences may change. And finally, foreign manufacturers, especially China, which is trying to export their way out of their current economic malaise, they will continue cutting prices to maintain market share.
Okay. That's an academic view of it. But what I know is the history of this is it clobbers people of modest means. They're the people who are going to get hit. And all through the campaign, there was a big show that it was going to be paid for by foreigners, not so. Two other questions that I want to get in. And I already made it clear, and you and I talked about this. I'm for a tax code that gives everybody the opportunity to get ahead. You and I talked about my friend Bill Bradley. He and I have been working for this for years. Do you believe the tax code should treat wages differently than it treats wealth?
Look, in any tax system that advantages and creates distortions, it is a change that, Senator, it is a decision that was made when the tax codes were written. And so every tax
some news is there, कोई news थी उसके वजह से currently candle directly open equal to high बना के नीचे आया है प्राइस अभी भी रीटेस्ट जोन पे पहुंच चुका है सेलिंग में थे वो लोग निकल जाना यहाँ पे थोड़ी बहुत बाइंग एक्सपेक्ट कर सकते हैं देखना पड़ेगा न्यूज़ क्या आई अभी जो ट्रम्प के ट्रेजरी पिक हैं बेसेंट उनकी कंफर्मेशन हियरिंग चल रही है अभी जो आप सुन रहे थे announces probe into okay ठीक है नीचे रिटेल जोन है यहाँ से थोड़ी बहुत बाइंग एक्सपेक्ट करी जा सकती है नेचुरल गैस भी अटक गया बीच में ही हाफ प्रॉफिट बुक करके चलना इसमें ठीक है थोड़ा नीचे आ जाता तो बाइंग करते बट वो बीच में ही रुक गया कोई डेटा नहीं है अब हो गया आज का डेटा कंप्लीट कल लास्ट ट्रेडिंग सेशन कल है डेटा बिल्डिंग परमिट का इंपॉर्टेंट है गोल्ड और सिल्वर के लिए ध्यान रखना लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया डोंट फॉरगेट टू लाइक द स्ट्रीम ये शायद वो यूएस सैंक्शन ऑन रशियन क्रूड ऑयल। ठीक है, इस पे एक न्यूज कह सकते हो। जो आपका क्रूड ऑयल है उस पे जो फिलहाल के लिए अभी रसिया के क्रूड ऑयल पे सैंक्शन लगे हुए हैं, वो थोड़े से उन पर ढील मिल सकती है, थोड़ा कम हो सकते हैं अंडर द ट्रम्प एडमिनिस्ट्रेशन, ऐसा माना जा रहा है। ये स्पेकुलेशन है, उसकी वजह से थोड़ा बहुत कैंडल देखोगे कंटिन्यूसली ओपन इक्वल टू हाई बनाया जा रहा है। लास्ट सपोर्ट मान सकते हो, अगर यहाँ पर होल्ड नहीं किया तो फिर बड़ा गिरेगा। होल्ड करना चाहिए लेवल को, अगर नीचे नहीं भी जाना है तो एटलीस्ट इस लेवल को। नेचुरल गैस में एटलीस्ट हाफ प्रॉफिट बुक करके ट्रेल करना गाइस। आ जाता है आज ही तो वेल एंड गुड, नहीं आता है तो फिर ये लेवल रहेंगे, कुछ चेंज होगा तो विल सी दैट। फिलहाल के लिए सेम ही लेवल रहेंगे। चार्ट मूव आई होप अब करने लग गया होगा। गोल्ड का लेवल बता दिया ऑलरेडी, लास्ट क्वेश्चन पूछा था उसी समय बता दिया था। स्ट्रीम को थोड़ा सा पीछे कर लो। फोर्टी फोर लाइक हो चुके हैं, लाइक करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। बाकी इस पे नीचे जाओगे तो फिर एमसीएक्स में तो कोई लेवल नहीं है, फॉरेक्स में ही देखना पड़ेगा, बिकॉज अगर ये सपोर्ट होल्ड नहीं होता है क्रूड में। नहीं रुकता है, वही बोल रहा हूँ, अगर ये प्राइस सब रिटेस्ट जोन पे नहीं रुकता है तो फिर परसों जो लो बनाया है मार्केट ने वो एक लेवल रहेगा, एंड देन फिर फाइनल सपोर्ट जिसका हम उस दिन भी वेट कर रहे थे, आया नहीं लेकिन वो 6560। बीच में और कोई लेवल ही नहीं है, गैप अप हुआ था तो देर इज़ नो सच लेवल। क्रूड ऊपर भी गया तो ऊपर ही एफईजी रेजिस्टेंस की तरह काम करेगा, डे हाई रेजिस्टेंस है ही। in 15-minute time frame.
IRS would use it to its full potential. So I hope I can count on you if you're confirmed, and I think you'll be confirmed, to be supportive of this whistleblower program and work to ensure its full use to its full potential.
Senator Grassley, we are in complete alignment on this program.
Thank you. Next would be Senator Cornyn.
Well, thank you, Mr. Chairman. Mr. Bessent, welcome to Washington, D.C. You're getting a taste of what it's like here, which is an out-of-body experience for most people who are not acquainted with it. I happen to represent a state that has the 8th largest economy in the world. We think we understand the formula for economic growth and prosperity and opportunity, which are low taxes, a reasonable and modest regulatory footprint, and opportunities for people to prosper, and by prospering, invest and create opportunities for other people to pursue their dreams. We think there's a lot Washington can learn from that formula, and it sounds to me like you agree. One of the strange experiences I've had here is that so many of our colleagues, principally on the other side, think that the money that you earn is not actually yours. It's the federal government's, and you just get to keep a little bit of it. Conversely, I believe that the money that people earn is theirs, and they have a responsibility to pay taxes. But as you point out, an over-tax burden or large tax burden has a way of depressing the economy and reducing standard of living. So I'm grateful for your nomination, and I think you are exactly the type of individual that needs to serve in this important position, and I support your nomination wholeheartedly. Let me ask you, in the short time I have, one sort of obscure question and another one that we discussed in our office. As you know, the market for U.S. Treasuries is the largest market in the world at $28 trillion, and it's critical to the financial stability of the United States. There's actually a proposal for an entity to clear U.S. Treasury futures at the London Clearing House, which is overseen by the Bank of England. Some argue that the Bank of England would have control over a, heaven forbid, a default scenario in this critical market instead of the U.S. Is this a concern to you?
Senator Cornyn, I enjoyed visiting in your office, and I would note that while Texas has more arrivals due to good economic policies, South Carolina has more arrivals as a percent of the population, also driven by our wonderful Governor, Henry McMaster.
I'm still going to vote for your nomination. I think it's 1,600 people a day in Texas, but go ahead.
Yeah. Everything's bigger in Texas, sir. You raised a very important question, and one that I will investigate further. I was unaware until the past few days of this with the new exchange. What I can tell you is, as a student, a professor of economic history, that it is important for the U.S., for U.S. Treasuries, for us to be able to resolve any stress issues in the market in the U.S. We saw during the Lehman Brothers bankruptcy that many of the problems emanated from the UK subsidiary. So this is something that, thank you for bringing this to my attention, and my inclination is that the resolution authority must lie here in the U.S., but I will get back to you in writing with an answer on this if confirmed.
Thank you. You appropriately mentioned China as one of our biggest challenges. While I believe in free and fair trade, we know that some countries, principally the PRC and the Chinese Communist Party, don't play by the rules. Over the years, by some estimates, U.S. investments in Chinese companies have totaled $2.3 trillion in market value That was at the end of 2020. That included $21 billion. These are American companies investing in China. $21 billion in semiconductors, $54 billion in military companies, and $221 billion in artificial intelligence. So it's pretty clear to me that U.S. investments have fueled China's economic growth, which has allowed them not only an increased standard of living, which is great for the Chinese people, but problematically, it's also allowed them to modernize their military and now threaten the peace in the Indo-Pacific and beyond. As we discussed, I've introduced a bill that would require transparency of American companies investing in China. And of course, the entity that would receive the reports from American companies that do that, and since it's strictly a reporting requirement, would be Treasury. What's your view of an outbound investment transparency requirement?
Senator Cornyn, I believe that, as we discussed in your office, this is a very important issue. That the Chinese economy is the most unbalanced economy in the history of the world. They are using their surpluses to fund their military machine in China, and I'm not going to try the Mandarin pronunciation for the sake of everyone in the room, but there is a phrase that is two words: military industrial, and military always comes first. So we should understand that, and that we should have a very rigorous screening process for, as you identified, anything that could be used in AI, in quantum computing, in surveillance, in chips, that the U.S. has the lead, and we must make sure that we maintain it through smart policies such as you and I discussed.
Thank you. We need to move on. Senator Bennett. Mr. Besson, thank you for being here. Mr. Chairman, congratulations on your position. We look forward to working with you, as I always have. Mr. Besson, thank you for your willingness to serve. We are at the beginning of what's going to be a vigorous conversation about the country's fiscal health. You've described our deficit as alarming, and yet you are here with the same Trump tax policy that has burdened the American people with another $2 trillion of debt that their kids and grandkids are going to have to pay back. And despite the conversation we've heard over here, clearly, you know, the distribution of it was deeply, deeply, deeply unfair. 50% of it went to the top 5% of Americans, 75% of it, if you add the SALT, which even the Wall Street Journal won't support because it's so unbelievably outrageous, will go to the wealthiest 5% of Americans. The tax policy is one that's hard. It is, for some reason in this room, it makes sense to people. In America, I don't think there's been a mayor in the history of the United States whose tax policy has been to go to the people of New York City or of Atlantic City or even of Mar-a-Lago and said to them, I have an idea. I'm going to borrow more money than we have ever borrowed in the history of that community, and I'm going to spend it. And I would say, well, geez, I'm worried about that. I don't want us to borrow a bunch of money without knowing what it's going for. What is it going for? Is it going for schools? No. Is it going to compete with the Chinese in their defense? No. Is it going to pay for parks? No. Is it going to deal with the mental health crisis that we have in America? No. Is it going to pay to secure our border? No. What are you doing with the money, Mr. Besson? What were you doing with the money, Mr. Mnuchin? What are you doing with the money, Mayor, in America? The answer is we are going to give it to the richest people in America, the richest people in our community, and expect that somehow that's going to trickle down to everybody else. That has been the Trump tax policy since the day he showed up, and no mayor in America would ever, with a straight face, say that's what they should do. And in fact, no America in history has done that. But to add insult to injury, you sit here, and Mr. Mnuchin sat here at his time and said, it's all going to be paid for by economic growth. We know that's not true. We know it costs $2 trillion. So while the benefit went to the richest people in America, the cost is being borne by the children of working people all over this country. And that's what's going to happen now. It's $4.6 trillion this time, not $2 trillion. And then you come here, and this is my question, Mr. Besson, and you sneak into your opening statement that we have a spending problem, and what we have to focus on, as you said, is discretionary spending after your crocodile tears about how China is out competing us. And as you know, because you're a smart person, and you've spent a lot of time on Wall Street, just like your predecessor did, discretionary spending is about a third of our overall spending. 17% of what we spend is domestic. 17% roughly of what we spend is military spending. That spending you were talking about with respect to China. There are so many things I think you owe the American people after we have seen the catastrophe of the result from the tax cuts the last time and the fact that the benefits went to the wealthiest people. But don't you at least owe the American people a refund for the $2 trillion that they've already incurred because of the last round? Before you get to the $4.6 trillion, can't we think of a better idea in the halls here than cutting taxes for the wealthiest people and expecting that it will trickle down to everybody else when we have the profound needs that you have talked about? When we're living in an economy, you had the American dream. We heard you say that, where fewer and fewer people can get ahead, where this generation of Americans is going to be the first generation to leave less opportunity, not more, to our kids and our grandkids, where we see massive income inequality and wealth inequality when Trump was president, when Biden was president. Can't we think of a better idea than that? And at a bare minimum, and this is tiny, don't we owe them an answer about what you are going to do to that 17% of discretionary spending, or even the third, before you come in here and say that the most important thing we should do is cut taxes for the richest people in America?
Senator, thank you. And I would respectfully disagree with much of your categorization in terms of the benefits accruing to the richest Americans. Actually, the share of taxes paid by the upper percent of Americans increased after TCJA. It went from 39 to 46%. The top 50% of Americans now pay 98% of taxes, and working families had real wage increases in 2018 and 2019, and going into 2020 pre-COVID. The CBO scoring for the Trump tax cuts got rescored by $1.5 trillion.
Make sure, because we're in the beginning of a long debate, that if you're going to rely on the CBO score for this, that you're going to be willing to rely on it for the things that you said it's no good.
Look, I'm not in love with CBO scoring.
I know that. That's why now you're relying on it. So I'm just saying, it's not funny money. This is the American people's money. We can do math. Every mayor in America has to do math. And we're going to insist that you do the math too, because we know George Soros understands the math when you work there, and you understand full well what's going on here, just like Steve Mnuchin did, just like Donald Trump does, and we're not going to let it happen against the American people. Thank you, Mr. Chairman.
Thank you. And I again remind my colleagues, we need to hold our time to 5 minutes. Senator Cassidy.
Mr. Besson, I'm always going to pronounce your name as if it was in South Louisiana, and I'm going to pronounce it with a French Besson as opposed to Besant. That's what those folks in South Carolina do. I'll try. Let me compliment you on substantive answers. Sometimes we get people here who just rope-a-dope, and they'll have a set of statements such as has been just delivered, and all due respect to my colleague, and they just rope-a-dope, and you actually give substantive answers. I thank you for that. By the way, I'm also, Lindsey Graham alluded to it, going back to tariffs, which Senator Wyden spoke of. I've been very concerned that countries like China manipulate environmental regulations. You point out that they're building 100 coal-fired plants over a period of time, and that whatever we do will not have an impact on global greenhouse gas emissions because China's putting up so many. I believe I've learned that that is called an externality in economics. When we met, we discussed the foreign pollution fee, which would put a levy, a tariff, on those carbon-intensive products coming from countries like China, roughly commensurate with their avoided cost of not controlling it. Now, I would think that my Democratic colleagues would like that, because that's clearly a way that they are manipulating the world economy to steal jobs from the United States and simultaneously increase global greenhouse gas emissions. Any comments on such a foreign pollution fee?
Senator Cassidy, I greatly enjoyed our discussion and the extensive presentation you gave me when I visited with you. And this is a very good question, because, and I believe it is one for your Democratic colleagues to understand whether they would be in favor of the equivalent of a carbon tariff. That Senator Graham is in favor of it. And I think this is a very interesting idea that it could be part of a entire tariff program, because I think President Trump hasn't taken office yet. But if confirmed, I look forward to working with him on various strategies, some that could be specifically aimed toward carbon, as you say, others that could be aimed toward unfair trade practices, unfair financing practices.
So if you will, there's externalities that a tariff can address. Those externalities in and of themselves hurt the pocketbook or the job prospects of an average American. Let me move on. I think you would agree with that. I applaud your goal to get our debt to GDP ratio down to 3%, or percent of our GDP down to 3%. But you studiously say that we can't talk about things like Social Security. And I think that's because routinely, if we talk about Social Security, we presume that there's going to be a cut in benefits or a raise in taxes. I think we spoke when we met. I and others have a bipartisan plan that would create a pension investment fund separate from the Social Security Trust Fund, and that, just like we do with our 401ks, invested in the broader economy and use the proceeds from that to offset the upcoming 25% cut in Social Security benefits that will occur if we don't address this problem. And just so folks get that, under current law, when the Social Security program goes insolvent in 8 years, per CBO, there'll be a 25% cut in benefits. Under the plan I and others have endorsed, it's a pension investment fund in which we, again, would invest in the broader economy with all the safeguards to keep the government from interfering. I mention that because it seemed that other advisors to the incoming president, have spoken of creating an investment fund to benefit. Mr. Lutnick, I think, has. Mr. Paulson did on the campaign trail. What are your thoughts about that concept? I think they spoke about it as sovereign wealth. I'm speaking about it as a fund to bail out social. Not, by the way, all risk borne by the fund, none of the risk borne by the beneficiary. She would get her scheduled benefits. What are your thoughts on that?
So, Senator Cassidy, first of all, I want to emphasize that President Trump has said that Social Security and Medicare, they will not be touched. And I believe... Yeah,
but I'm saying touch in a positive way, not cut benefits, not raise taxes, indeed increase benefits, and take that 25% cut off the table, just to make that clear.
No, I understand. And so those would not be touched. One of the tragedies of this blowout in the budget deficit is that we have to get our short-term house in order to start, before we can start implementing the smart plans such as yours. I do believe that there is discussion to leverage the asset side of the U.S. balance sheet, as we discussed in your office, in favor of a fund, whether it's a sovereign wealth fund, something, as you discussed, a supplemental fund. So that is very much in the mix. I look forward to getting back to you on it. President Trump hasn't taken office yet. If confirmed, this is something that I think could be very exciting, because we always look at the debt of the United States, and we have fantastic assets that could be earning, leveraged, or used for multiple revenue-generating opportunities.
Thank you.
Thank you. Senator Warner.
Thank you, Mr. Chairman. Congratulations. Mr. Bessent, it's good to see you and enjoyed our meeting. I've got some specific questions I want to ask, but I don't want to litigate this now. But I do feel, as someone working with Senator Crapo and others, when we took on, I still think, the most comprehensive post-Simpson-Bowles, and we took arrows from each side. And I'm looking at any kind of pro-growth policies possible, but I just respectfully want to say there is not an industrial nation, first world industrial nation in the world that gets anywhere close to meeting their revenue needs, and I'm not proposing that America spend anywhere like the Europeans at 17 to 18% of GDP. It's never happened historically. It's not going to happen in a Trump administration or future Democratic administrations. So we'll have a time to talk back and forth on this, but I can't let some of this go without at least offering something that there's not an economist around that wouldn't concur. We got to bring down spend, but the revenue side alone is not. Excluding that, we're never going to get to a balance. I do want to raise on a more positive note, again, something I worked closely with the chairman on, and actually worked with your predecessor on, and was very proud of that relationship. I disagreed with Secretary Mnuchin on a lot of things, but I found a lot of things to agree with him on. And one was a relatively narrow part of the financial sector called Community Development Financial Institutions, CDFIs. Under the previous Trump administration, we put about $12 billion in. This serves access to capital for underserved communities. Under Senator Crapo's leadership, we built a bipartisan CDFI caucus, 12 Ds, 12 Rs. It's tough to get 24 bipartisan senators agree on anything. It's kind of low-hanging fruit. There are things we can do to continue to expand this area, creating a secondary market. We've got some bipartisan legislation there, trying to reward patient capital. A lot of these institutions now have Tier 1 equity, but they've got to get patient capital. And again, Senator Crapo and I have worked with the current administration, would want to work with yours on something called the Economic Opportunity Coalition. But can you say a word or two about how you view CDFIs and this making sure that underserved communities get the access to capital so they can have their own American dream, how that fits into your lexicon?
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning.
The state of Qatar, the Arab Republic of Egypt, and the United States of America are pleased to announce the success of joint mediation efforts, resulting in an agreement between the parties to the conflict in the Gaza Strip.
The ceasefire between Israel and Hamas will begin on Sunday and last for 6 weeks. The deal includes the release of 33 hostages, while Israel will withdraw from parts of Gaza and free hundreds of Palestinian prisoners. And risk on. Cooler CPI fires up Fed rate cut bets and sparks a global rally with Asian stocks tracking Wall Street gains. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. A historic moment. We are going to be spending a lot of the time on this show talking about the deal that has been agreed to between Israel and Hamas, as announced by Qatar and U.S. yesterday. A major milestone. What does it mean for the future of Gaza and the future of Arab relations in the region? All of these questions we will be posing throughout the course of the show. But as ever, let's just kick off the show with a look back at markets, because we had quite the rally yesterday. Remember, we were all anticipating the CPI print into the event. Markets were trading a little bit sideways, some nervousness. It was going to be a pivotal print, and a pivotal print it was. The core CPI numbers surprised slightly, just slightly to the downside. But what that meant is we got a massive and outsized market reaction, with the S&P seeing its best day since the November elections, up 1.8% yesterday. The Nasdaq also ending the session up 2.5%, 2.45% higher on the session as well. So very strong day for Magnificent Seven, as the market was quick to start pricing out, or pricing in, I should say, further interest rate cuts. Yields, huge rally, 10-year yields 4.65. We rallied about 14 basis points after that number came out. I should also say on the equity space, it wasn't all about the CPI prints. We had very strong strong banks earnings come through as well. The financial sector really led some of the rally that we saw in the S&P. And today we get further earnings on these slates as well. Dollar yen in focus this morning. As you can see, the yen continues to gain ground versus the USD. Today about 0.5% firmer on reports coming out, local media suggesting that the Bank of Japan will indeed go ahead for that interest rate hike next week. And certainly there have been, once again, expectations building into that event. And that is providing some support to the yen here. So we're sitting at around a 155 handle, down about 200 pips over the course of this week. Let's turn to some of the local markets, though. Many of these markets are actually still closed for trading. But let me just run through some of the price action that we've had more broadly. Brent, take a look at Brent actually this morning, trading at $82. There hasn't been a lot of geopolitical premium priced in to the oil complex. You would think that a ceasefire announcement would push down the energy complex. That hasn't been the case because what the market is focusing on here is a drawdown in stockpiles in the U.S. In addition to these possibility of further sanctions and the Biden administration sanctions that were applied to Russia a week ago. So that's been driving the energy complex. Tadawul, Saudi Arabia, you can see today are leaning towards the green. Over the course of the last couple of weeks, we have been rallying. The Tel Aviv Stock Exchange, interesting one, not open for trading yet, but up about 26% since the end of the summer on the ceasefire deal with Lebanon and, of course, into anticipation of the ceasefire deal with Gaza. So we've seen a massive run-up in the Tel Aviv index into today's event. And then the shekel also trading firmly versus the USD. We are at the highs of the year versus the dollar today, about 0.6% firmer. So that's it for local markets and how they're reacting to the news. But let's do a bit of political analysis here. Israel and Hamas have agreed to a ceasefire deal in Gaza, pausing 15 months of fighting that has killed thousands of people and destroyed much of the territory. The three-phased agreement will take effect on Sunday and will initially see the release of 33 hostages held in Gaza and Israel's withdrawal from populated areas in the Strip.
The first phase of the agreement, lasting 42 days, will involve a ceasefire and the withdrawal of Israeli forces to the east, away from the densely populated areas, to positions along the borders in all areas of the Gaza Strip. It will also include the exchange of prisoners and hostages according to a specific mechanism, the exchange of the remains of the deceased, and the return of displaced persons to their homes.
During the next 6 weeks, Israel will negotiate the necessary arrangements to get phase 2, which is a permanent end of the war. Let me say it again, a permanent end of the war. There are a number of details to negotiate to move from phase 1 to phase 2, but the plan says if negotiations take longer than 6 weeks, the ceasefire will continue.
Stuart Livingstone-Wallace is Bloomberg's executive editor for Middle East, North Africa and Russia. Just listening to the comments there from President Biden, talking about the challenges, really, of moving away from phase 1, which is being dubbed the humanitarian phase, the exchange of hostages for these Palestinian prisoners, the passageway of humanitarian aid, a temporary ceasefire. But he says that there's still a lot of challenges remaining in order for us to move to a permanent ceasefire. What are some of the obstacles in the way?
I mean, it's a mountain of challenges. So starting with the most basic things is they've got to identify where all the hostages are and then agree which ones to release in what order. On the Israeli side in that first phase, which Palestinian prisoners to release. And remember, the lesson for Israel here is Sinwar, who's the guy who masterminded the start of this whole war, was exactly one of those people. You know, he was a prisoner that was released in a hostage deal. So there's going to be awareness there. I think then domestic pressure on both sides. You know, this is a deal basically that was on the table 6 months ago and Hamas rejected it. So there is dissension in those ranks. And on the Israeli side, as you know, there is a significant portion of the government that is adamantly opposed to any sort of deal. So going forward, those are the initial problems. And then you've got to rebuild this enclave. And, you know, I don't think anyone's put a credible number yet on how much that will cost, how long it will take. We've seen horrific estimates that it might take a decade just to clear the rubble. So there's a long, long way to go.
Possibly even more by some estimates. Stuart, talk us through the Israeli internal politics. The government will be voting on the deal today. They still haven't officially passed it or signed off on it. Is there a chance that it doesn't go through?
I think most people are expecting it to go through, and the reason being the following, that Bibi has managed to extend his coalition over the last few weeks, and that gives him a little bit of breathing space. So even if Ben-Gvir, for instance, refuses to back it, which does seem quite likely, that won't be enough to derail it. And I think the finance minister is hanging on there. It looks like he'll probably stay in the government with a view to what might happen under the Trump administration with regard to the West Bank, which largely meets his longer-term objectives. So even though he doesn't necessarily like this deal, he might go along with it.
Yeah, well, we heard from the Qatari PM. He gave a press conference yesterday. Qatar played a major role in getting this deal across the line, one of the key negotiators. President Biden as well gave comments. And then, of course, President-elect Donald Trump was quick to take to social media, posted a lot about the deal and how excited he was about the deal, but then also claiming credit for it as well. Do you think it matters for the longevity of this deal that the Trump team feels some ownership towards it?
Yeah, absolutely, because it's going to keep pressing. And I think you saw his, his envoy Witkoff as really one of the key players here. He by all accounts, didn't hold back in his communications with Israel, calling them on the Sabbath and all that sort of thing. So, yes, that definitely was a factor. So I think they deserve a little bit of the credit there, for sure. I don't know how you portion it out quite in a fair way. But, yes, going forward for the next 4 years, there is definitely a line in the sand here about what Trump intends to do. And again, rather like the finance minister in Israel, he has a long-term view about what he would like to do in terms of redrawing what the Middle East looks like, getting some sort of extension to the Abraham Accords. That is ultimately the prize here.
Well, a big achievement to start with in his first day in office, inauguration on Monday. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Let's continue the conversation. Ryan Ball, senior Middle East and North Africa analyst at RAIN, joins us. Good to have you with us, Ryan, on this important day. Do you see this as the first steps towards a permanent end to this war, or are we just talking about a temporary cessation of hostilities?
I think what we're looking for is a transition to a new kind of conflict, and it will resemble some of the pre-October 7th world in some ways, and it will be a new world in others. It's important to note that Hamas's traditional deterrence to Israel, its vast rocket arsenal, has been exhausted and decimated, and it will not be able to quickly rebuild that. And without that deterrence, Israel can act unilaterally in the Gaza Strip against Hamas through airstrikes, drone strikes, commando raids, to continue to try to degrade the group even past the 6-week deadline. And once Hamas and Palestinian Islamic Jihad and the others have given up their hostages, they'll no longer have any political leverage over the Israelis to prevent such operations.
What do you think happens to Hamas from this point onwards? They obviously do not have international legitimacy. Phase 3 of the ceasefire deal talks about the reconstruction efforts of Gaza, what future governance looks like. None of the international community wants Hamas to play a role in future governance. But at the same time, many of Hamas operatives still exist and they're around, and they're apparently, reportedly, still being able to recruit new people to join into their ranks. So what happens to them now?
Well, certainly Hamas must adapt. Now, how it adapts is going to be up to the agency of Hamas's own groups, its own internal factions, its remaining leadership. But they have a few broad choices. The first is to adapt to life inside of Gaza, where there's still a resistance movement. They're essentially an insurgency, and that as Israel continues to apply military pressure over time, they fight that battle in Gaza itself and hope that eventually Israel's resolve to carry out such a campaign eventually withers and breaks down and allows Hamas to resume power in the Gaza Strip. The other option they've got is, of course, to go into exile, which is what the Israelis very much want them to do.
What does it mean for the future of Gaza and the future of Arab relations in the region? All of these questions we will be posing throughout the course of the show. But as ever, let's just kick off the show with a look back at markets, because we had quite the rally yesterday. Remember, we were all anticipating the CPI print into the event. Markets were trading a little bit sideways, some nervousness. It was going to be a pivotal print, and a pivotal print it was. The core CPI numbers surprised slightly, just slightly to the downside. But what that meant is we got a massive and outsized market reaction with the S&P seeing its best day since the November elections, up 1.8% yesterday. The NASDAQ also ending the session up 2.5%, 2.45% higher on the session as well. So very strong day for Magnificent Seven as the market was quick to start pricing out, or pricing in, I should say, further interest rate cuts. Yields, huge rally, 10-year yields 4.65. We rallied about 14 basis points after that number came out. I should also say on the equity space, it wasn't all about the CPI print. We had very strong banks earnings come through as well. The financial sector really led some of the rally that we saw in the S&P. And today we get further earnings on these slates as well. Dollar yen in focus this morning. As you can see, the yen continues to gain ground versus the USD. Today about 0.5% firmer on reports coming out, local media suggesting that the Bank of Japan will indeed go ahead for that interest rate hike next week. And certainly there have been, once again, expectations building into that event, and that is providing some support to the yen here. So we're sitting at around a 155 handle, down about 200 pips over the course of this week. Let's turn to some of the local markets, though. Many of these markets are actually still closed for trading. But let me just run through some of the price action that we've had more broadly. Brent, take a look at Brent actually this morning, trading at $82. There hasn't been a lot of geopolitical premium priced in to the oil complex. You would think that a ceasefire announcement would push down the energy complex. That hasn't been the case, because what the market is focusing on here is a drawdown in stockpiles in the U.S. In addition to these possibility of further sanctions and the Biden administration sanctions that were applied to Russia a week ago. So that's been driving the energy complex. Tadawul, Saudi Arabia, you can see today are leaning towards the green. Over the course of the last couple of weeks, we have been rallying. The Tel Aviv Stock Exchange, interesting one, not open for trading yet, but up about 26% since the end of the summer on the ceasefire deal with Lebanon, and of course into anticipation of the ceasefire deal with Gaza. So we've seen a massive run-up in the Tel Aviv index into today's event. And then the shekel also trading firmly versus the USD. We are at the highs of the year versus the dollar today, about 0.6% firmer. So that's it for local markets and how they're reacting to the news. But let's do a bit of political analysis here. Israel and Hamas have agreed to a ceasefire deal in Gaza, pausing 15 months of fighting that has killed thousands of people and destroyed much of the territory. The three-phased agreement will take effect on Sunday and will initially see the release of 33 hostages held in Gaza and Israel's withdrawal from populated areas in the Strip.
The first phase of the agreement, lasting 42 days, will involve a ceasefire and the withdrawal of Israeli forces to the east, away from the densely populated areas, to positions along the borders in all areas of the Gaza Strip. It will also include the exchange of prisoners and hostages according to a specific mechanism, the exchange of the remains of the deceased, and the return of displaced persons to their homes.
During the next 6 weeks, Israel will negotiate the necessary arrangements to get phase 2, which is a permanent end of the war. Let me say it again, a permanent end of the war. There are a number of details to negotiate to move from phase 1 to phase 2, but the plan says if negotiations take longer than 6 weeks, the ceasefire will continue.
Stuart Livingston-Wallace is Bloomberg's executive editor for Middle East, North Africa, and Russia. Just listening to the comments there from President Biden, talking about the challenges, really, of moving away from phase 1, which is being dubbed the humanitarian phase, the exchange of hostages for these Palestinian prisoners, the passageway of humanitarian aid, a temporary ceasefire. But he says that there's still a lot of challenges remaining in order for us to move to a permanent ceasefire. What are some of the obstacles in the way?
I mean, it's a mountain of challenges. So starting with the most basic things is they've got to identify where all the hostages are and then agree which ones to release in what order. On the Israeli side, in that first phase, which Palestinian prisoners to release. And remember, the lesson for Israel here is Sinwar, who's the guy who masterminded the start of this whole war, was exactly one of those people. You know, he was a prisoner that was released in a hostage deal. So there's going to be awareness there. I think then domestic pressure on both sides. You know, this is a deal basically that was on the table 6 months ago, and Hamas rejected it. So there is dissension in those ranks. And on the Israeli side, as you know, there is a significant portion of the government that is adamantly opposed to any sort of deal. So going forward, those are the initial problems, and then you've got to rebuild this enclave. And, you know, I I don't think anyone's put a credible number yet on how much that will cost, how long it will take. We've seen horrific estimates that it might take a decade just to clear the rubble. So there's a long, long way to go.
Possibly even more by some estimates. Stuart, talk us through the Israeli internal politics. The government will be voting on the deal today. They still haven't officially passed it or signed off on it. Is there a chance that it doesn't go through?
I think most people are expecting it to go through, and the reason being the following, that Bibi has managed to extend his coalition over the last few weeks, and that gives him a little bit of breathing space. So even if Ben-Gvir, for instance, refuses to back it, which does seem quite likely, that won't be enough to derail it. And I think the finance minister is hanging on there. It looks like he'll probably stay in the government with a view to what might happen under the Trump administration with regard to the West Bank, which largely meets his longer-term objectives. So even though he doesn't necessarily like this deal, he might go along with it.
Yeah, well, we heard from the Qatari PM. He gave a press conference yesterday. Qatar played a major role in getting this deal across the line, one of the key negotiators. President Biden as well gave comments. And then, of course, President-elect Donald Trump was quick to take to social media, posted a lot about the deal and how excited he was about the deal, but then also claiming credit for it as well. Do you think it matters for the longevity of this deal that the Trump team feels some ownership towards it?
Yeah, absolutely, because it's going to keep pressing. And I think you saw his, his envoy Witkoff as really one of the key players here. He by all accounts, didn't hold back in his communications with Israel. Calling them on the Sabbath and all that sort of thing. So yes, that definitely was a factor. So I think they deserve a little bit of the credit there for sure. I don't know how you portion it out quite in a fair way, but yes, going forward for the next 4 years, there is definitely a line in the sand here about what Trump intends to do. And again, rather like the finance minister in Israel, he has a long-term view about what he would like to do in terms of redrawing what the Middle East looks like, getting some sort of extension to the Abraham Accords. That is ultimately the prize here.
Well, a big achievement to start with in his first day in office, the inauguration on Monday. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Let's continue the conversation. Ryan Ball, senior Middle East and North Africa analyst at RAIN, joins us. Good to have you with us, Ryan, on this important day. Do you see this as the first steps towards a permanent end to this war, or are we just talking about a temporary cessation of hostilities?
I think what we're looking for is a transition to a new kind of conflict, and it will resemble some of the pre-October 7th world in some ways, and it will be a new world in others. It's important to note that Hamas's traditional deterrence to Israel, its vast rocket arsenal, has been exhausted and decimated, and it will not be able to quickly rebuild that. And without that deterrence, Israel can act unilaterally in the Gaza Strip against Hamas through airstrikes, drone strikes, commando raids, to continue to try to degrade the group even past the 6-week deadline. And once Hamas and Palestinian Islamic Jihad and the others have given up their hostages, they'll no longer have any political leverage over the Israelis to prevent such operations.
What do you think happens to Hamas from this point onwards? They obviously do not have international legitimacy. Phase 3 of the ceasefire deal talks about the reconstruction efforts of Gaza, what future governance looks like. None of the international community wants Hamas to play a role in future governance. But at the same time, many of Hamas operatives still exist and they're around, and they're apparently, reportedly, still being able to recruit new people to join into their ranks. So what happens to them now?
Well, certainly Hamas must adapt. Now, how it adapts is going to be up to the agency of Hamas's own groups, its own internal factions, its remaining leadership. But they have a few broad choices. The first is to adapt to life inside of Gaza, where there's still a resistance movement. They're essentially an insurgency, and that as Israel continues to apply military pressure over time, they fight that battle in Gaza itself and hope that eventually Israel's resolve to carry out such a campaign eventually withers and breaks down and allows Hamas to resume power in the Gaza Strip. The other option they've got is, of course, to go into exile, which is what the Israelis very much want them to do. I don't see that as terribly likely at this moment, but it's something that could happen in the medium term if Israel's military pressure continues to be sustained. And then the final is that Hamas essentially does a factionalization of its organization. So instead of a Hamas as a united organization across many countries, You have Hamas in Gaza acting one way, Hamas in Qatar acting another way, Hamas in Lebanon acting a different way, and these factions then make it so that Hamas is more of an umbrella organization rather than a coherent, single-minded entity.
Yeah. Yeah. Ryan, I want to take you back to a conversation we had around the time of the beginning of the Israeli incursion into Lebanon. And I don't know if you remember this, but at the time you did say and suggest that it was another potential 1967 moment for Israel at the beginning of a multifaceted conflict in the region. Now you fast forward a couple of months later, and in retrospect, do you think this has been similar to 1967 in the sense that Israel has managed to weaken their so-called enemies in the region and to come out of this victoriously?
On the military front, I do tend to think that that comparison is going to remain relatively accurate. Let's look at the scene of the region. Assad is gone, and no one saw that coming 12 weeks ago, or 12 months ago, even 12 weeks ago. The Hezbollah has been decimated, Hassan Nasrallah assassinated, Iran has been attacked not once but twice, including at its sensitive nuclear site, and there's possibilities of further attacks. Israel is now operating in Yemen. So from a military standpoint, Israel has achieved significant gains against its adversaries and reduced their deterrence. Iran's ballistic missiles simply aren't as scary as they were, say, 2 years ago. Hezbollah certainly seems to have not been quite a paper tiger. They're certainly very dangerous, but they didn't carry out the large-scale destruction that the Israelis expected. But there's now this real open question as to whether or not they can win this sort of cold peace that they'll be entering. And that's where the comparison to 1967 may also still be apt, because after 67, Israel didn't win that peace. It got stuck in a war of attrition and had to fight a second war in 1973. That is a possibility, particularly in places like the West Bank, where Israel could be facing another security crisis in the near future.
Yeah. How does the return of Trump and the Trump administration now change the calculus in the Middle East? And of course, he is claiming some credits. You probably heard me speaking to Stuart about that before you came on, and that the Middle East envoy, Steve Witkoff, did actually play quite an active role in getting this deal across the line. But what does the return of Trump actually mean to the dynamics in this region?
Well, on the one hand, it does change some of the threat perceptions. There's a belief that Trump will escalate very quickly in response to provocations. That will make countries like Iran and, of course, Hezbollah reticent to go back to fighting Israel out of concern of that very fast escalation. But Trump is also not an unknown quantity. He escalates very quickly, but he de-escalates very quickly. You can remember the Iran crisis of 2020 after Qasem Soleimani was assassinated. Trump was very eager to get off that escalation ladder. He doesn't want to fight long wars. And so that calculation will also factor in how the remnants of the axis of resistance decide to behave going forward. Now, if Hamas decides to carry out an insurgency against Israel in the Gaza Strip, they will calculate that the Americans won't have an appetite for a long war.
Ryan, thank you so much for coming on our show today. We appreciate your time. Ryan Bowles, Senior Middle East and North Africa Analyst at RAIN. Thank you. Well, still ahead, U.S. and Asian stocks notching gains as a cooler U.S. CPI reading fuels bets for Fed rate cuts this year. Algorithm Research shares their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Shares in Asia follow Wall Street higher after easing U.S. core inflation keeps the prospect of Fed rate cuts this year still alive. And markets were certainly quick to start pricing in more rate cuts. Let's bring in Kataki Sharma, founder and CEO of Algorithm Research. It's great to have you with us on the show. Lots of people had been, watching out for this CPI print yesterday. And we got quite an outsized market reaction on what was a very tiny miss. Do you think this disinflationary trend is going to continue in the U.S.?
Firstly, thanks so much for having me here. I would say that this is maybe something that we would watch out for. We would call it more of a blip unless there is a clear trend. And for us to call it a trend, we'll have to have such prints for a couple of months to call it a trend. So for now, I think it's a great reading to have, but we can't really call it a disinflationary trend as yet.
Where could the upside surprises to inflation come from in coming months?
So there are many avenues. So the much promised tariff tax is definitely one of those, and the large scale deportation that has been talked about extensively could be another source of wage inflation. So there are serious upside risks to CPI inflation at the moment, and therefore I think there's a lot more to worry about.
But it's almost like the anticipation of policy. You can't, if you're the Fed, if you're sitting in the Fed right now, you can't actually change your interest rate direction of travel based on what you think the Trump administration may do. So they're in a bit of a tricky situation because there's all of these talks about extra tariffs, deportations. It will probably take a couple of months and maybe even a year in the case of tariffs to figure out the actual impact that it's going to have on inflation. How do you think all of those factors are going to impact the Fed's thinking?
I mean, that's great. I mean, exactly the point. It might take a year, but the rhetoric is so strong that it feeds into inflationary expectations. And as you know, inflationary expectations feed into future inflation. So I think there is a lot, even if it's staggered, even if it's delayed, news flow, rhetoric, those are important things
to your point on inflation expectations, yesterday on the show we showed a chart of 10-year break-evens, inflation break-evens, which suggests that the market's expectation of inflation, where it's going to average over the next 10 years, keeps going up. So you've got to think that's going to be a bit problematic for the Fed.
Absolutely.
And will keep them away from cutting too deeply.
Absolutely.
But the market is already there. What about growth? How do you see the growth outlook this year in the U.S.?
So for now, the growth is on fire. The labor market is doing great. It's robust. So, and if there's the much promised deportation, you'll see wage inflation for sure. So I would not be too worried about growth, at least in the U.S., but certainly about inflation. So that is something to really watch out for.
Yeah, lots of people have been commenting on the shape of the U.S. yield curve. The steepening that has taken place, but also the expectation that perhaps longer-term yields may continue to stay elevated because of certain structural factors and also because of concerns about the term premium derived from the fiscal outlook in the U.S.
Right.
Do you think some of those points are actually valid and that these higher yields, at least in the long end, are with us to stay?
Oh, yes. I think the higher yields and in the long end are here to stay. But I won't be too concerned about it. Like, for me, the immediate thing is to anchor inflation. And that is something that can be controlled through, to some extent, news flow and the kind of news you put out. And certainly it doesn't help. The social media chatter doesn't really help.
No, it doesn't help anyone.
No.
Social media chatter is terrible for everybody. The USD, the dollar, is trading at a 2-year high. Do you expect that to continue to be highly correlated with where interest rates are trading?
Oh, yes.
So what we've seen as yields sell off, the dollar has strengthened. Is that correlation going to continue in the foreseeable future?
For sure. Yes.
Why?
Yes. I mean, there's a strong correlation anyway. So a stronger dollar would mean also for our region, import inflation, right? It helps keep import inflation in check. So a stronger dollar is great for the region. Also,
for this region.
For this region, for sure. Yeah, because we import in dollars.
Yeah. Final question for you. Lots of people have been talking about U.S. exceptionalism and that the U.S. is going to be the relative bright spot amongst the world's major economies this year. Do you have that view as well?
Yes, I do have that view. I think the U.S. is in a great position right now with great growth, great job market. It's just inflation that needs to be tackled. So basically, the Fed has only one problem to solve. If you look at the other economies, say in Europe, in UK, they have problem of stagflation to some extent. There is stagnant growth, but high inflation. So there's a dual issue to solve.
Yeah, I remember Jean-Claude Trichet used to say, we've got one needle in our compass, and that's the needle that we're talking about, U.S. inflation problem. It's a real pleasure to chat to you. Thank you so much for coming on the show. Kataki Sharma, founder and CEO of Algorithm Research. Well, stay with us. Plenty more coming up on the show. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. President Biden has delivered his farewell address from the Oval Office, listing his achievements over the past 4 years, while also voicing concern about the future of the U.S. The president said he is worried about the consequences if wealthy Americans use their influence to win tax breaks or roll back efforts to combat climate change.
I want to warn the country of some things that give me great concern. This is a dangerous concentration, and that's a dangerous concentration of power in the hands of a very few ultra-wealthy people. And the dangerous consequences if their abuse of power is left unchecked. Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms.
Any guesses for who President Biden may be referring to there? Okay, let's take a look at how equity markets are faring up. We had the CPI print come in yesterday, slightly lower than expectations. That led to a major rally in Wall Street. S&P saw its best day since the elections. Today, not doing a whole lot, but we are going to be keeping an eye out for further U.S. bank earnings coming on later in the session. Coming up, a ceasefire deal has been reached between Israel and Hamas in Gaza. We speak to Carla Slim from Standard Chartered on how it will lower geopolitical risks. Good morning. This is Horizons Middle East and Africa. Our top stories this morning.
The state of Qatar, the Arab Republic of Egypt, and the United States of America are pleased to announce the success of joint mediation efforts, resulting in an agreement between the parties to the conflict in the Gaza Strip.
The ceasefire between Israel and Hamas will begin on Sunday and last for 6 weeks. The deal includes the release of 33 hostages, while Israel will withdraw from parts of Gaza and free hundreds of Palestinian prisoners. And risk on. Cooler CPI fires up Fed rate cut bets and sparks a global rally with Asian stocks tracking Wall Street gains. Well, it's just on 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. A big day for the region. We're going to talk more about the implications of the ceasefire and what it may mean for geopolitical risk over here in a short while. But for now, let's just take a quick look at how markets are faring, because we had a monster rally on Wall Street yesterday. The S&P seeing its best day since November, since the elections, up almost 2% on the day. NASDAQ up more than 2.5% on the day, bolstered by that lower than expected CPI print, rate cut expectations once again building back into the U.S. curve, but also very strong bank earnings coming through yesterday. JP Morgan, Citi, Wells Fargo, all posting very solid results. Today, we're going to be watching out for results from Morgan Stanley and Bank of America. So that's also on slate later today. But 10-year yields, massive rally yesterday. We rallied about 15 basis points after that CPI print, sitting at 4.65% now. And then the dollar losing a little bit of ground versus the yen. Not often that this year I've been talking about the dollar losing ground, but here we are today. This on expectations that the Bank of Japan may actually go for that interest rate hike next week. And there have been reports, the Nikkei newspaper in Japan, suggesting that a rate hike is on the table. So that's giving some strength to the yen. Flipping over, I do want to just show you some of the more local market boards as well. Many of these indices still closed for trading, but just to highlight, Brent, which is open for trading, obviously, is trading at around $82. A bit of an uptick there on a reduced stockpile in inventory in the U.S. and, again, reacting to the news of the new sanctions that the Biden administration is going to be imposing on Russia producers, tankers. So we're still seeing that being embedded into the energy complex. The Saudi Arabian Tadawul Index has been gaining the last couple of weeks. But the real story, one of the strongest local stories, has been on the Tel Aviv Index. It's up about 25% since the end of the summer, into and out of the Israel-Hezbollah ceasefire and into expectations of the Israel-Gaza ceasefire, which we're seeing this morning. So that's the Tel Aviv Index. And then the Israeli shekel trading at the highs of the year versus the USD, or the tights of the year, I should say, rather, the strongest levels versus the USD, today about 0.6% stronger versus the dollar. Now, on to the main story. Israel and Hamas have agreed to a ceasefire deal in Gaza, pausing 15 months of fighting that has killed thousands of people and destroyed much of the territory. The agreement will take effect on Sunday and promises the release of 33 hostages held in Gaza and hundreds of Palestinians detained in Israeli prisons. The halt in fighting should also allow desperately needed humanitarian aid into the Strip. Joining us now is Carla Slim, MENA economist at Standard Chartered. Carla, good to have you with us. To begin with, let me just start from an economist perspective. Was there a lot of geopolitical risk premium baked into the region, to begin with, anyway, before we talk about what happens next?
Good morning, Jomana, and great to be back on the show, especially on such an upbeat note with all of the positive developments that we've had. We've had a lot of geopolitical risk in the region for the last 15 months, not so much risk premium baked into either oil prices or into any market indicators that we've seen over the last 12 months. But still, the fact that geopolitical risk is now abating and we have these positive developments, and coupled with the fact that oil prices are higher, although we have less geopolitical risk premium, that should bode quite well and is making for a positive start for the year.
So you said there hasn't been a lot of geopolitical risk premium, but I do wonder whether sentiment has been hit. And sentiment is often a strong driver of things like FDI into the region. If these ceasefires, and here I'm not only talking about Israel-Hamas, but also Israel-Hezbollah, manage to move away from temporary ceasefires to permanent ceasefires, what does that do to investor sentiment, you think?
You're absolutely right about sentiment. And where we were also seeing sentiment being suppressed was in oil prices because of this narrative of below than envisaged China oil demand growth on oil prices. That was weighing on oil prices. So sentiment has shifted completely, whether it's on oil prices or on the geopolitical risk outlook for the region. And as you mentioned, the key concern or the key characteristic now will be whether this temporary rise in oil prices and temporary improvement in the geopolitical risk can be sustained for the rest of the year. We do believe so.
Yeah, I was going to ask you, since we are talking about oil, do you think we stay around these levels then, $80?
Yes, our oil price forecast, our in-house projection for the year is just over $85. And this is baking in the fundamentals, the fact that we do see global oil demand growth of over 1 million barrels per day in 2025. And as we've seen, supply has been constrained, whether by OPEC or now the newly imposed Russian.
I thought it was interesting that IEA yesterday actually slightly revised upwards their forecast for demand. Let's turn to Lebanon and talk about what happens there next. Now the government formation process begins. How influential is this future government going to be in terms of how it impacts where Lebanon financial assets are trading? Obviously, there's been a massive run-up in Eurobonds into this, recent nominations.
So the Eurobond rally started in Q4 last year on the rebalancing of power, taking this forward-looking view that things could move quickly. And things have moved quickly, but perhaps even faster than what the Eurobonds were implying, and that's why we're seeing the rally being sustained, which is quite remarkable. Now the risk which could slow down is the government formation process, specifically since the Prime Minister has already used his influence, and the President as well, to change the parameters for the government formation process. So the ministerial allocations will slightly break from the past process, and every 5 MPs will be able to nominate 1 minister, and it's a reduced cabinet. That reduced cabinet can be very influential in terms of a financial rescue plan and a restructuring for Eurobonds, but they only have a year because the next parliamentary elections are in 2026.
Of course, so that's something that's it's a ticking. There's a clock ticking essentially. It's interesting that there's been a bit of a divergence between what's been happening in bonds in Lebanon, the Eurobonds, and FX, where there hasn't been that much of a reaction, or at least not as much of an outsized reaction as what we've seen in Eurobonds. Why is that the case?
Correct. So there's been little to no reaction on dollar LBP, whether on the parallel market or the interbank market, which serves to reconfirm the fact that the central bank has been managing FX volatility quite closely with a view of inflation targeting and bringing down inflation, because Lebanon did have hyperinflation for 3 years. So essentially that we will likely also see monetary policy reform on the back of these positive changes in the future as well.
Sort of to bring it back to the geopolitics, we know, and we've been talking about this on the show, that Saudi Arabia, other Gulf states have been playing an increasingly active role in this new Middle East, or the developments that have happened in the last couple of months, a lot of shuttling of diplomacy. Do you think that Gulf FDI and Gulf money and Gulf tourism could be a big driver for growth going forwards?
Absolutely. And what we wrote in the note that we released just this week was that the new president hasn't been in office for a week yet, and already relations have started to improve, and FDI announcements have already started coming through. So we do think this is likely, but perhaps also the other element to watch out for is tourism revenue. So if and when the travel bans are lifted, the GCC travel bans are lifted, we could potentially see a doubling of tourism, foreign tourist arrivals into Lebanon to their historical highs, which could drive tourism revenue up by $5 billion.
That's good news. I've got to say, personally, though, it's not good news for the airport, because the queues will be terrible. Just to run things up on perhaps a more somber note, the reconstruction efforts are also huge. The World Bank losses were something north of $6 billion. You probably know the figure better than me. Is that going to be Lebanon itself that will have to go down the route of reconstruction, or do you expect international assistance, Gulf assistance, to come through with the reconstruction plan?
That's going to be a key consideration also for the bond and banking sector restructuring, because if the government does decide to go through on budget for the $8.5 billion reconstruction, then that's going to mean a very wide fiscal deficit, and then that will matter for the recovery values of the Eurobonds. So we believe that external funding will likely play a larger role than government funding in that reconstruction.
So interesting. Carla, great to have you on. Thank you for your perspectives. Carla Slim, MENA economist at Standard Chartered. Thank you. Now for a look at some of the other stories we're following. Hindenburg research founder Nate Anderson says he is shutting down his short-selling firm, famous for targeting billionaires Gautam Adani, Jack Dorsey, and Carl Icahn. In a post on the firm's website, Anderson says there's no specific threat, health, or personal issue behind the decision. He says he now views Hindenburg as a chapter in his life, not the central thing that defines him. Bloomberg has learned that Citadel, the hedge fund manager founded by Ken Griffin, has sold $1 billion of high-grade bonds to fund a payout to its owners. Citadel has sold bonds before, including in 2017 and 2019, to fund dividend payments. The Miami-based firm recorded a roughly 15% gain in its flagship strategy last year. And Bloomberg has learned that Canada has drawn up a list of $105 billion worth of American goods that it would hit with tariffs if President-elect Donald Trump imposes levies on its northerly neighbor. Our source says the list will only come into play if Trump moves first and may be expanded later, depending on what the U.S. does. So Canada firing some shots there. All right, coming up, on the cusp of a Trump-led administration, Middle East policy could see a shift to Israel-Gulf relations. We'll discuss the details next. This is Bloomberg.
Next week. Live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage all next week, only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Israel and Hamas have agreed to a ceasefire deal, which is set to start on Sunday, just one day ahead of Donald Trump's inauguration. As the new administration prepares to enter the White House, Middle East policy could shift to Israel-Gulf relations and expanding the Abraham Accords, focusing on Saudi Arabia as the next major partner. So lots of things to discuss. Let's bring in Avi Hassan, CEO of Startup Nation Central, who is in Tel Aviv. Good to have you with us on this quite monumental day. Let me just start off by asking you, yesterday we had a guest on the show who was the CEO of one of the largest VC funds in Israel. And I'm going to ask you the same question I asked her, and that is, what do you think the implementation of this ceasefire deal could mean for businesses, for sentiment, and for the macroeconomic outlook?
Good morning, Jumana. It's good to be back here. Let me just say it's a morning of hope, and it's a very optimistic morning here in the Middle East. Obviously, after 15 months of conflict, hopefully we're in a trajectory to bring back the hostages and make this ceasefire a permanent one. With regard to your question, actually we just came out with our 2024 report, and it was quite remarkable to see that even though Israel and the region had to cope with this ongoing war, the amount of investment in Israeli high-tech companies, the level of mergers and acquisition deals was quite remarkable, showing the resilience and really the strength of the sector. So that was when the war was taking place and happening, and carrying its toll, of course, from reserve duty service to the international travel disruption. I think looking in the future, if indeed we are towards a de-escalation, we can expect not just going back to those levels, but actually increasing the mutual collaboration and economic activity. So I'm quite optimistic.
Can I just ask you if whether the Abraham Accords actually did lead to a pickup in trade with the countries who signed it, between Israel and the UAE, Israel and Morocco, Israel and Bahrain? Did you actually see a pickup in trade?
Yeah, so before October 7th, obviously, we've already had almost 3 years of the Accords. And when we look into different indicators, bilateral trade is an example. The bilateral trade between the UAE and Israel, taking one example, reached over $3 billion on an annual volume, which is quite significant, by the way. That makes the UAE one of the top trade partners for Israel. And that was a reflection of ongoing activity that really went across sector. At Startup Nation Central, we mostly deal with the competitiveness and health of the innovation ecosystem and have been involved in multiple initiatives within the region. We've seen a lot of collaboration between businesses. We've seen investment coming over from the Gulf to Israeli tech companies, and we've seen Israeli companies co-locating in Dubai, in Morocco, and to some extent also in Bahrain. So I think the first 3 years taught us that the potential is huge, and also taught us that these agreements can go beyond just government.
But how much potential do you think that would unlock for the region and for businesses that operate within Israel if that were to come to fruition?
So as you say exactly, that holds the greatest potential. And it's true both on the bilateral level. We're talking about different economies, right? The Saudi economy is 40% based on natural resources, mostly oil. The Israeli economy is actually 20% of its GDP is based on tech. That's twice the share of the US, 3 times more than the EU. But as these two economies can combine forces, there's a lot of potential, from helping to implement and realize MBS Vision 2030 programs with some of the mega projects where Israel, with its innovation capabilities, can be of service, but also of working together, combining the capabilities of the two countries and really solving some of the region challenges and problems, from the reconstruction that was mentioned to looking into issues of food and water security, health-related issues, and also cybersecurity and defense. So that's a great potential. But if you go a little bit broader, I think what we have today, especially given what we're seeing in the Middle East, is the possibility to create a new Middle East, which is really combined of countries that have mind share which is similar, that looks into the future and can want to create an economic corridor, starting all the way from India to Europe. The possibilities there are great, and if we dare to imagine, we can see the power of innovation and economy really creating a region that becomes an economic powerhouse, not just for its own sake, but also in terms of the global leadership.
Yeah, and that is the hope, of course, for the region to live in peace and stability. Avi Hassan, thank you so much for coming on our show today. As Startup Nation Central CEO, thank you very much. Well, coming up, Mozambique's new president sworn in amid ongoing protests, economic woes, and disputed election results. All the latest on the inauguration next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Daniel Chapo has been sworn in as Mozambique's new president, taking over a nation shattered by months of protests that have claimed hundreds of lives and crippled the economy. Bloomberg's Matthew Hill joins us from Johannesburg. Matt, good to have you with us. Well, we know that the country has witnessed several months of protests now. Chapo is indeed quite the contentious choice. How big of a job does he face?
Hi, Jumana. Thanks very much. The task facing Daniel Chapo is immense, and you can really break it down into two main parts. The first being the political crisis. As you mentioned, the country has been racked by months of unrest. An opposition leader named Venancio Mondlane rejected the October election outcome as fraudulent and has been orchestrating protests ever since. So it'll be crucial for Daniel Chapo to establish a dialogue with Venancio Mondlane and other key political players to reach some kind of deal or compromise to end that political standoff. The other major challenge is the economy. Even before the elections, Mozambique was already one of the poorest countries in the world, and the unrest has only amplified the problems that the economy faces by cutting growth. For example, Standard Bank Group sees the economy shrinking in the last quarter of last year, and again in this current quarter, which is going to be a big hit on government finances.
Yeah. Matt, can he actually get on with the job of governing, given that the opposition rejected the election results? I mean, you talk about the challenges facing the economy, but are we in for more political instability?
Well, Venancio Mondlane, the opposition leader, has said that he does not plan to end the protests and that they should continue. So it will be very, very important for Daniel Chapo to establish a meaningful dialogue with Mondlane and others to reach some kind of compromise that will bring an end to the protests and then start getting the economy back on track. We are also going to be watching out for key ministerial positions from Daniel Chapo, especially the Minister of Finance, who's going to face an incredibly complex task in restoring investor confidence, where many businesses have seen their warehouses and factories looted and burned during the unrest. And also, Mozambique is home to some of the world's biggest natural gas reserves. And companies like Total Energies and ExxonMobil have been planning massive projects, some of Africa's biggest private investments, which have been on hold for years now. So a lot of investors will be watching if Chapo will finally be able to get those off the ground again.
Interesting. Thank you for giving us that extra perspective. I didn't know that about Mozambique and natural gas. Bloomberg's Matthew Hill, thanks so much. Now for a look at some of the other stories we're following. Nigeria's annual inflation rate climbed close to a 29-year high in December before an overhaul of the data later this month that may lower the gauge. Consumer prices rose just shy of 35% in the year to December. Transportation costs were the main drivers of the price increases, and food inflation slowed slightly to just under 40% year on year. The WHO says the deadly Marburg virus is suspected to have infected as many as 9 people, including 8 fatally in Tanzania's Kagera region. From the same family as the Ebola virus, Marburg was first recognized in 1967, but a fatal case was only identified in 2021. And Gabon's military leader has picked a new economy minister to resolve the Central African oil producers' debt woes. Mark Dumba, an entrepreneur who studied public administration at Harvard, takes over at the key ministry after a cabinet reshuffle. The shakeup comes days after the World Bank suspended disbursements to Gabon over debt arrears. And a look at equity futures as we head to the break. Markets not doing a whole lot, a bit of a hangover after yesterday's rally. We had a very strong rally for Wall Street. S&P futures ending the day, S&P 500 ending the day up 1.8%, Nasdaq up 2.5%. But coming up in our next hour, we are going to be talking more about the CPI print. Todd Elmer from InTouch Capital Markets, Deutsche Bank, Stanisław Masia, plus IHG Hotels comes up. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning.
The state of Qatar, the Arab Republic of Egypt, and the United States of America are pleased to announce the success of joint mediation efforts, resulting in an agreement between the parties to the conflict in the Gaza Strip.
The ceasefire between Israel and Hamas will begin on Sunday and last for 6 weeks. The deal includes the release of 33 hostages, while Israel will withdraw from parts of Gaza and free hundreds of Palestinian prisoners. And risk on. Cooler CPI fires up Fed rate cuts and rate cut bets and sparks a global rally with Asian stocks tracking Wall Street gains. Good morning, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone at past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. And Jumana, a number of news and also eco-related threads that we're following this morning.
Yeah, absolutely, Jennifer. The big news of the day, of course, the fact that Israel and Hamas have agreed to a ceasefire deal. We're going to be speaking to Dan Williams in Jerusalem shortly to go over the details of that deal. But yesterday was a big day for markets as well. So let's just recap some of the price action that we had. The CPI number came in slightly, marginally lower than expectations. That core number month on month came in a miss versus what the market had penciled in. And on the back of that, we had a massively outsized reaction. Wall Street very solid in the green. The S&P up more than 1.8%. Its best day since November, so since the elections, but also aided by some of the strong bank earnings that came through yesterday as well. So that gave a bit of a boost. Also, Tesla had a good day yesterday. Nasdaq also very strong day, up more than 2.5%. So really very strong price action in equities. At rates, we saw a very strong rally. So 10-year yields down 15 basis points after that CPI print came through. The market once again quick to start pricing in more rate cuts out of the Fed this year. And then the dollar in focus as well. But this morning, we're paying close attention to what's been happening to the yen because once again, rate hike expectations are building up into next week on back of some media reports suggesting that the Bank of Japan are readying themselves for a hike. So that's giving some support to the yen. As for some of the local markets, we're taking a look at them today to see how things have been faring in the run-up to the ceasefire announcement. Brent trading at $82. So as we've talked about on the show, there has not been a lot of geopolitical risk priced into oil. There's been more of a focus on some of the fundamentals and the fact that the Biden administration, one of their parting shots, has decided to apply sanctions to Russia. So ever since then, Brent has been steadily climbing higher, so up around 7% over the course of the week. Tadawul, Saudi Arabia also putting in a good run. Tel Aviv Stock Exchange up around 25% since the end of the summer last year, so into and expecting a ceasefire deal to be announced. So a lot of that positivity being reflected in some of the stocks traded on the Tel Aviv Stock Exchange. And then the Israeli shekel as well strengthening versus the USD. We are at the highest level or the strongest level versus the USD for the year. Today, 0.6% stronger. But on to the political details. Israel and Hamas have agreed to a ceasefire deal in Gaza, pausing 15 months of fighting that has killed thousands of people and destroyed much of the territory. The three-phase agreement will take effect on Sunday and will initially see the release of 33 hostages held in Gaza and Israel's withdrawal from populated areas in the Strip.
The first phase of the agreement, lasting 42 days, will involve a ceasefire and the withdrawal of Israeli forces to the east, away from the densely populated areas, to positions along the borders in all areas of the Gaza Strip. It will also include the exchange of prisoners and hostages according to a specific mechanism, the exchange of the remains of the deceased, and the return of displaced persons to their homes.
During the next 6 weeks, Israel will negotiate the necessary arrangements to get phase 2, which is a permanent end of the war. Let me say it again, a permanent end of the war. There are a number of details to negotiate to move from phase 1 to phase 2, but the plan says if negotiations take longer than 6 weeks, the ceasefire will continue.
Let's get out to Jerusalem now and speak to Bloomberg's Dan Williams. So putting together all of the details that we've heard about the ceasefire deal, it seems pretty evident, Dan, that the first phase of the deal involves the humanitarian phase, so to speak, the exchange of hostages for prisoners, the release of extra humanitarian assistance into the Gaza Strip. But the big question is how we transition from phase 1 to phase 2, which would imply a more long-term ceasefire and cessation of hostilities.
That's an excellent observation, Jumana. The only deal in place right now is that phase 1 deal. When we discuss phase 2 and phase 3, those are on paper, those are aspirational, but as President Biden said, those still need to be negotiated over. So really those aren't in hand. And in a sense, we may see that this phase 1 proves open-ended, with only 1/3 of the hostages having been released, with a fraction of the Palestinian prisoners that Hamas wants to be released being released, and an ongoing presence of the Israeli military in the Gaza Strip, with all the friction that will arise from that. The big problem here, the rub in moving from phase 1 to phase 2 and 3, is not just what happens with the remaining 2/3 of the hostages for Israel. It's whether Israel will formally relent on its binding, government-approved war goal of seeing Hamas completely destroyed, or at least dismantled, as a governing and military force in the Gaza Strip. I'm not sure Hamas will allow that, will submit to that, unless in the course of that, for future negotiation, Hamas agrees to some sort of power share, voluntarily relinquishing power in the Gaza Strip.
And talk us through how this is being met with back home. Clearly, a lot of elation, many people very happy to see the return of hostages. But there were some within the Israeli government who were against Netanyahu agreeing to this ceasefire deal. Is there any way that the deal could be scuppered when they vote on it later today?
Well, I think reactions will crescendo today when we're expecting Netanyahu to assemble the inner security cabinet and the wider cabinet to vote on this deal. And then traditionally, Israel gives a grace period before implementation to allow the relatives of people killed or wounded by Palestinian prisoners slated for relief, to allow those relatives to submit court motions. So tensions will run high. There will be expressions of opposition, especially, as you noted, from right-wing camps in Israel. This was a very destructive war for Israel. It was certainly destructive in Gaza, but it's worth keeping in mind that the number of Israeli soldiers lost in this war per capita is about 4 times that lost by the United States in Afghanistan and in Iraq over a much longer period. So many Israelis will be wondering if it was worth it if they don't get all the hostages back and if the war goals aren't achieved. There will be relief at the return of hostages. Some of them are expected to come back as soon as Sunday. There will also be some grief because we know, we anticipate that some of those hostages will prove to have died in captivity. Their families will not know that for sure until they see their loved ones coming back in coffins. So that will be definitely a mixed reaction publicly in Israel, which will affect the tenor of the discussion down the line.
The number of Israeli soldiers lost, that ratio that you highlighted, is very noteworthy, Dan. Is there a perception that Israel has come out of this victorious? Has the 15-month war been a success from the Israeli perspective?
I think it depends what lens you put on it. If you swivel the lens and zoom in very close to Gaza alone, if Hamas remains in power, and we will certainly be seeing Hamas victory parades, we already saw one, a small popular show of elation you showed in the video insert. But certainly Israelis will not see that as a victory, given that they were promised the end of Hamas in the Gaza Strip. If you zoom out a bit, this was a regional war in which Israel really shifted the balance entirely all the way to Iran. Hezbollah has been really gutted in Lebanon. That contributed to the fall of the Assad regime. This is a 50-year enemy of Israel. In Syria, Iraqi militias have pretty much stopped firing. Really, the only active firing on Israel has been from the Houthis in Yemen. And while they've done this with technical virtuosity, the distance and the capabilities of Israeli air defenses have really prevented that from causing great damage within Israel. And then there's a big question of Iran.
Yeah.
Israel has yet to have a showdown with Iran, but it did manage, I think, to humiliate Iran with 2 rounds of fighting in which Israel says it destroyed, for now, the missile-making capabilities of the Iranians and their air defenses, basically leaving them very vulnerable should the question of the Iranian nuclear program come to a head under the Trump administration.
Yeah. Bloomberg's Dan Williams in Jerusalem. Thank you so much for the reporting today.
Now let's turn to what's happening in the markets. Shares in Asia follow Wall Street higher after easing U.S. core inflation keeps alive the prospect of Fed rate cuts this year. Joining us is Todd Elmer, head of FX and macro analysis for Asia at InTouch Capital Markets. Todd, great to get you on the show, especially on such a busy day. So, one of the descriptions that we're hearing about the markets and the reaction to CPI is exuberance. Has this print all but mitigated any of the concerns that inflation was picking up for you?
Honestly, it hasn't really changed my view. I think what we've seen in the market over the past several days is a bit of overshooting in both directions, where the market probably went too far in terms of taking out rate cut expectations in the wake of the stronger payrolls. And now the CPI has provided a bit of relief and we've swung back the other direction. But where that ultimately leaves us is with a Fed that's going to be patient for the foreseeable future, particularly as there is a great deal of uncertainty looming over the actual policies that we will see under the new Trump administration and as to how that is going to play out over time for the economy. So what we're hearing from the Fed is that they're in a good spot. They have scope to be patient. And I think that's probably what the data ultimately reinforces today. There is some stickiness in inflation, but we just aren't seeing a great deal of demand-driven inflation at this point.
What does that mean, Todd, then, for your outlook for cuts this year? Is your assessment still that we will potentially only see one?
I think that it's been a difficult period to be an investor, and certainly I don't envy the forecasters in having to shift views recently. But I think where we've settled is probably, not unreasonable expectation that the first further move that we're going to see from the Fed is probably going to happen sometime midsummer, and then the market has priced in most of the likelihood that we see an additional cut. That's what the Fed has been saying, and I see no reason to, have a major shift in that outlook at this point.
Todd, how does that impact the USD? The dollar is trading at a 2-year high, and I just wonder whether it's going to lose some steam because the market once again has started to price in more rate cuts out of the Fed this year. There's about 38 basis points priced in now. A few days ago, it was less than 25. In addition to what could be the beginning of a further disinflationary trend, both of those things could be negative for the USD.
I think you're absolutely right to point out that the rise in yields has been a critical factor in terms of driving the dollar higher. But I think we have to kind of decompose some of the reasons as to why yields have been moving higher. Part of that does come down to this expectation that the inflationary backdrop was less favorable and it was going to give the Fed less scope to ease. But that's not the only factor that has been pushing yields higher. We've seen rises in term premium. We've seen the expectation that Trump policies may add to inflationary pressures. And we've seen increased focus on U.S. fiscal stance. And I think that a lot of those other factors that have supported yields broadly, in addition to these inflationary concerns, those aren't going to go away even if we did see a faster decline in the outright pace of inflation. direction. And I think that probably limits scope for a pullback, particularly at the back end when we look at the moves in yields. And I think that probably is going to lend a degree of support for the dollar. I admit that isn't necessarily as positive for the dollar as expectation for stronger growth and continued U.S. exceptionalism would be. But when we look at the alternatives to the dollar, there just aren't many that look more attractive at this point.
Yeah. Thoughts on dollar yen? Yen has been rallying the last couple of days. Expectations that the Bank of Japan will hike next week. What do you see happening with the currency?
It's another one where I don't envy traders, the back and forth that we've seen over the last several weeks as expectations have kind of swung both ways on the Bank of Japan. And I think that we are starting to see the types of indications in the media that we might expect if the BOJ were on the cusp of moving. And so the market has firmed up those expectations. But I think ultimately the question there is down to global factors. How will Trump policies impact broad moves in terms of the dollar and therefore pass through to the yen, even if Japan isn't necessarily the focus at this point of Trump's trade policy or what we expect to be the main focal point. But then also ultimately, will we see the dynamism in the domestic economy that is likely to contribute to more tightening over the entire course of the year, over the entire course of the cycle than investors are now anticipating. I think that latter, I think both of those questions are kind of unanswered at this point. And I think that leaves the yen in a bit of a holding pattern, even as the BOJ starts to take further tentative steps.
We have to leave it there. Todd Elmer, head of FX and macro analysis for Asia at InTouch Capital Markets. Staying up late for us, Todd. Appreciate your insights and for joining us this morning. Now, still ahead, a closer look at earnings for the big U.S. banks as they close out the Biden era with a surge in profits. The details on that next. This is Bloomberg. Four of the biggest banks in the U.S. have ended the Biden era on a high note, notching their second most profitable year on record. Bloomberg finance correspondent Harry Brumpton is joining us now. So, Harry, get us up to speed on what we did see from these initial earnings. What are some of the common themes that you're picking out?
Yeah, surprising and very solid set of results across the street from the big four that we've seen so far. I think Goldman Sachs had the record trading revenues. JP Morgan notched the record profit for any US bank in history. Citibank was 3 out of its 5 divisions made record revenues, and Wells Fargo saw its investment banking revenues jump a whole 62%. So some pretty positive stuff across the board, and that really does meet the expectations that analysts had going into this. There was a lot of bullishness around not only these results and the lack of seasonality that's really been helped and pushed by the tailwind of the election, which means a lot of volatility, people hedging, that helps those kind of trading businesses that a lot of the firms have, as well as a strong economy that's kind of, we've seen a pretty solid run of deal making, including M&A on the advisory side as well. So solid stuff that met and exceeded expectations across the board. The next question, I guess, is going to be how long does it last? How long does it go for? As I say, this was a seasonal element. We saw the same thing happen in the first year of the Biden administration. But then there are idiosyncratic elements to a renewed Trump administration that people are kind of baking in, particularly around financial services and banks as it relates to stress tests, the levels that they have to hold capital, deregulation agenda, and all sorts of other things that people are kind of expecting going forward in terms of capital allocation from the banks as well.
Certainly, and we heard a bit of that from Jamie Dimon speaking after these earnings were released. What does that mean then for the rest of the year? Can you explain a little bit more about what he told us?
Yeah, so I think there's been some interesting lines about them, dancing in the streets about the results and also the potential economic agenda of a second Trump administration that would, last time we saw and there's expectations around tax cuts, around bank deregulation, as well as just what he might do for the economy and keep GDP growth going quite strongly with a business first agenda that would obviously help banks. I think there's some some caveats to that as well. We'll see how long that lasts. I mean, a big part of the big investment banks and Wall Street banks' revenues still depend on advisory fees like IPOs in equity capital markets, which are wholly dependent on confidence, as well as mergers and acquisitions as well, which is very much dependent on corporate confidence. And if we see any sort of international ructions, geopolitical brinksmanship that we've seen in prior Trump comments and the prior administration dating to 2016, then those things could present a problem down the track as well. But as it stands, the banks have been promising revenue growth, possible capital buybacks as well to goose the share price, as well as an increase in trading and investment banking activities.
Yeah, and positive closes for some of the big banks on Wednesday. Bloomberg's finance correspondent Harry Brompton joining us. Harry, thanks so much for your insights. Now, coming up, Mozambique's new president sworn in amid protests, economic woes, and disputed election results. We take a look at the challenges ahead. That's next. This is Bloomberg.
Daniel Chapo has been sworn in as Mozambique's new president, taking over a nation shattered by months of protests that have claimed hundreds of lives and crippled the economy. Bloomberg's Matthew Hill joins us from Cape Town. Matt, so talk to us about how big a job Daniel Chapo is going to be facing, a clearly very contentious last couple of months.
The new president's job is immense, and you can really break it down into two parts. The first being the political crisis, where an opposition leader, Venancio Mondlane, has been orchestrating months of protests since the October elections that he rejected as fraudulent, and he's indicated that there are no plans to stop those. So it'll be crucial for Daniel Chapo to reach out to the opposition, including Venancio Mondlane, and reach some kind of political understanding or compromise that can bring an end to the unrest and get the economy back on track. And that's the second big challenge that he faces, the economy. Mozambique was already one of the poorest countries even before the elections, with many young people who face limited opportunities and are growing increasingly frustrated about that. So it will be crucial for him to reestablish growth in the economy too.
So what should we be watching out for next? Is it political developments or developments in the economy?
Yeah, I guess both are going to be crucial and are very much interrelated. I mean, firstly, investors are very eager to see Chapo reaching some kind of political settlement that can allow everyone to get on with their jobs and rebuilding the economy. And also, people are going to be watching out for key appointments. Chapo has said that he plans on actually cutting down the size of government, which will generate annual savings of about $266 million. But also crucial to Mozambique is natural gas projects that Total Energies and ExxonMobil have up in the north of the country. Those have been on hold for years and promise to transform the economy. So everyone will be watching very closely whether Chapo will finally be able to get those off the ground.
Yeah. Bloomberg's Matthew Hill, thank you so much for giving us an overview of the latest from Mozambique. Well, coming up, Nigeria's annual inflation nears a 29-year high in December. We will be unpacking the data next with analysis on Nigeria and other countries around Africa as well. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning.
The state of Qatar, the Arab Republic of Egypt, and the United States of America are pleased to announce the success of joint mediation efforts, resulting in an agreement between the parties to the conflict in the Gaza Strip.
The ceasefire between Israel and Hamas will begin on Sunday and last for 6 weeks. The deal includes the release of 33 hostages, while Israel will withdraw from parts of Gaza and free hundreds of Palestinian prisoners. And risk on, cooler CPI fires up Fed rate cut bets and sparks a global rally with Asian stocks tracking Wall Street gains. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Bersachi in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa. Really big news day over here in the region, Jennifer, with the news of the ceasefire agreement finally being reached between Israel and Hamas. So a moment that many over here in the region had been waiting for, the conflict going on for more than 14 months.
Yeah, I heard somebody saying over 400 days. So certainly welcome news for many people. And listen, also a big news for markets in terms of eco data that we were getting. We mentioned that U.S. CPI print. So let's just take a look at where markets are positioned just now, digesting a lot of these threads. We mentioned that U.S. CPI showing that potentially disinflation is more entrenched than expected. If we take a look at U.S. futures, though, little change right now, but that comes after a sharp reaction to that CPI print on Wednesday. We did see all of the major indices in the U.S. closing in the green. We saw the S&P seeing its best close since November, erasing its year-to-date losses, as well as the NASDAQ jumping over 2% and wiping year-to-date losses. Right now, the U.S. 10-year yield unchanged, but again, reaction to that print, seeing drops across the board for yields right now. The 10-year hovering at 4.65% after 8 straight days of yield increases. The yen is also in focus. We got some news from the BOJ potentially hinting at a possible rate hike in January, provided not too many negative surprises from the incoming Trump administration in just a few days. But right now, we're seeing 156.03, and Brent crude still in focus as a number of news lines are paying attention to what is happening with oil. Nonetheless, obviously the ceasefire, but Brent crude right now just above $82 a barrel. And the CPI print leading to swaps traders back to fully pricing in a Fed rate cut by July, as this terminal chart is showing, now weighing potentially 1 to 2 cuts this year. And potentially we continue to see more risk appetite being tested. But again, a lot is contingent on what we do see from the Trump administration in just a few days. Jumana?
Well, Jennifer, we've got some breaking news coming through. Earnings results for TSMC, the world's largest fab. So it is a beat. Fourth quarter